It was a story of two halves.
You could argue, yeah.
Yeah, because you had a few heavyweights that were holding back the benchmark, whereas the breadth was amazing, and it was quite good to see that much green on the screen.
And the recovery that did come in the heavyweights also was pretty interesting in that last hour, though they ended in the negative, but good recovery to come in and support the markets.
Yeah, but let's start with the global setup. There's quite a bit that happens that affects our market as well. In fact, you can argue that what happened in trade yesterday was an account of the taco trade, which is alive and kicking. And no, I'm not talking about a dish, in case you haven't heard. This is what happens. Hiral seems to not have had breakfast. I hope that you are at this moment having breakfast and sharing the start of trade with us. But having said that, this is when Trump pulls back on a threat that he has made, and that essentially is what has taken place. Global equities gained on Thursday after the Trump backtrack, and he agreed a framework of a deal on Greenland and withdrew that tariff threat. So overnight, you had the Dow that gained about 0.6%, the Nasdaq Composite was close to 1% higher, and the S&P 500 up about 0.6%. The Magnificent Seven actually led from the front, and you had Meta that gained nearly 6%, while Tesla gained over 4%. And the breadth was good there as well, because the Russell 2000 also hit a new high. 7 sectors in the S&P 500 gained, but 4 fell. And now, US economic data has been supportive. You had consumer spending, which was strong in both November and October. It gained about 0.5% in November. The fly in the ointment, if you will, is that savings are reducing. So people are essentially using their savings to spend. But then it bodes well for the economy that consumer spending is continuing to do well, because it accounts for over 2/3 of economic activity in the US. It was supported by healthcare, financial services, and insurance. What is more is that jobless claims rose 1,000 to 200,000 in the week ending January 17th, and those claims for unemployment benefits essentially rising less than anticipated, which is also a positive. The final thing is geopolitics, and this is really what is at the center of activity this week, and this has to do with Greenland. It continues to be something of an uncertainty, because Greenland Prime Minister welcomed Trump's statement on a new framework, but he told reporters in the capital city of Greenland that he knows no details about the agreement or the deal. Nielsen is his name, and he said that Greenland is willing to negotiate, and he stressed that sovereignty of Greenland was a red line that he did not wish to cross or would not cross. In the context of all of that, gold is marching towards that $5,000 per troy ounce mark. Keep an eye on both gold as well as silver. Silver as well trading very close to all-time highs. Gold, in fact, hitting an all-time high of $4,965 per troy ounce, trading very close to that mark. And silver, by the way, is trading very close to that $100 per ounce mark as well. Meanwhile, Trump has issued a stark warning to Iran, saying that a massive fleet from the US was heading towards the Islamic Republic, renewing possibility of a US strike. Listen in.
We have a big force going toward Iran. I'd rather not see anything happen, but we're watching them very closely.
So that's strong comment coming in when it comes to Iran as well. But, you know, Davos also is gearing up for the day 3 of the World Economic Forum, with speeches lined up from global leaders and business heavyweights, including US President Donald Trump. Let's go across to my colleague Tamanna for a preview of today's key events.
Hi, Friday in Davos is let's wrap things up and leave quickly kind of a day. You do have some closing ceremonies, but mostly the who's who have packed up and left these Alps on to maybe further meetings or a relaxed weekend. But just looking back at what a wonderful week it has been. And one line stands out for me, folks. Something that Dr. Anish Shah told me in my interview. He said that the World Economic Forum and Davos has managed to reset and regain its importance on the global platform. And perhaps at a time when no one really is listening to what the United Nations is saying, the World Trade Organization is not getting anyone to do anything, perhaps this small snowy town in Switzerland managed to find itself as the location for some kind of reconciliation. At the end of it, Donald Trump came here, he spoke, maybe rubbed a lot of people the wrong way, but did withdraw his tariffs on European nations for Greenland. He did say he's not going to use force. And that has left people with a sigh of relief, at least for now, till the next statement or the next crisis blows up. So I would say Davos this year has been more important than the last several years, perhaps, at the World Economic Forum, because it became the center stage of what's going on in the world. What remains to be seen is whether next year's World Economic Forum is actually at Davos. A LinkedIn post by Larry Fink, the co-chair, hinted that perhaps he would look at other locations for following Davos, for following World Economic Forum meetings. So we'll have to wait and see if these snowy hills behind me are once again host to the who's who of the global elite.
All right, so Davos Day 5 promises to be exciting, as do all the others. I mean, in some sense, this year's WEF has been unprecedented in terms of the commentary, simply because of the tiff on the tariff between US and EU.
You're rapping this morning.
Yeah, well, I'm trying to. Well, let's get in a very special guest. You've seen him on camera. Of course, you'll see him today also on camera, but we've seen him on camera so many days when he talks to us. But Seth Freeman, Senior Managing Director of GlassRatner, with us in the studios to talk about his thoughts on the globe. Seth, great having you. Thank you so much for joining in.
Thank
welcome
you.
to India.
Thank you very much. It's great to be here in person.
Yeah, it's great to have you here, and it's great to have you in India because, frankly, the tariff issues notwithstanding in terms of growth, I think India is looking gangbusters. But before we get there, let's just first talk about what you make of all that's happening. I mean, if people thought that there would be some reconciliation, and yes, there has been an outward reconciliation, but the commentary from both sides at the WEF, for example, US versus European leaders, has been nothing short of stark. I mean, is this a recipe for some issues in the risk assets, or do you believe that they are behind us now?
Oh, no, I think there's a lot more to come out about this supposed Greenland deal, and because we don't know any details. It's not particularly clear that the U.S. has won anything that we already had under some long-standing treaties. The pressure that Trump put on EU leaders was very high and may have really kind of rocked the world order a little bit.
Yeah. And but that's the question really then. 2025, the markets have grappled with a lot of these tariff uncertainties, and yet you've largely seen global equities, select pockets, etc., follow the AI trade and not necessarily just where the tariffs went. What does 2026 has in store, therefore?
Well, there's some concern in the AI sector about the circular transactions with the AI companies buying big interests, investing in the hardware companies and so forth, so that the AI companies are raising a lot of capital and not directly using that capital in the AI company, but investing it. And that creates a little bit of a pyramid scheme in one sense.
It's interesting that you say that because there has been a little bit of a dithering at some points over the course of the last 7 months, but eventually everybody piles back into the AI trade. That's been happening so far, and we haven't seen an unwinding of that take place yet in a big fashion. And one would assume that you would have to wait for something like that to give for capital flows to once again go to the non-AI plays. Is that what has to happen?
Well, I don't think everything's going to AI, but there's a lot of excitement. It's rolling out. And it's expected to have just tremendous long-term impacts. So I think that's what investors are thinking about. But I'm old enough, I remember Web 1.0, and there was a pretty substantial crash at that point. And maybe there's some risk there. Although, portfolio managers are certainly watching their numbers, I think, much more closely.
Okay. You've now, I don't know how long you've been in India. I'm wondering whether you've interacted with a few of the businesses here, whether you're looking very closely at the businesses here. So from the outside in, now that you're on the ground here, what are you seeing that you might take back to the folks back in the US to talk about potential opportunities here?
Well, every time I come to India, I'm amazed at the wealth creation that's gone on and the number of millionaires. I think there's 920,000 millionaires and 200 billionaires. And I've been involved with India since 2003. And things have changed dramatically here. And there's obviously still a lot of room. I'm in India to attend a major insolvency and restructuring related event in Hyderabad, the Insolvency Law Academy. And there's a lot of interest in being able to accelerate taking distressed companies and kind of recycling those and having growth come out of distressed companies, not just pure liquidations. And so I think that's a very exciting source of capital. And I'm always excited to see the growth in sort of international global orientation of Indian managers.
Okay. Seth, my question coming to you is, with what's happening in India, I mean, Alex just touched upon the point that FIs are probably still not coming back. DII is extremely strong when it comes to the growth story for the Indian markets. If you have to look at India from an investment perspective from here on, where valuations stand, where the third quarter numbers have panned out, everyone's of the opinion that the third quarter has been better than what the street was estimating. Do you think the structure now will make FIs come back to India and taking even the way the Indian rupee is panning out?
I'm glad you mentioned the rupee because the rupee has obviously depreciated a lot.
Yeah.
The dollar's depreciating this week. One of the risks for foreign investors is this continuing rupee depreciation. I remember, I think it was 34 to the dollar when I first came to India. And so that really impairs returns when you're looking at dollar, converting it back to dollars. So there is that doesn't change though the Indian growth story. So I think it really we're in though a more risk-on mode, I think, compared to global securities in terms of emerging markets. So India is going to get its share. There's still tremendous need for infrastructure investment, and that's long term compared to moving money in and out of securities. And so I do think that investors, the smart long-term investors, are looking at infra opportunities.
Okay, so maybe FDI, maybe specific asset-based backing, equity markets. I think it remains to be seen. I think that seems to be the word from Seth Freeman. But lovely talking to you today. Thank you so much for being with us in our studios.
Thank you.
And we wish you have a great trip in India. We hope you enjoy a lot that this country has to offer relative to whenever you would have come last.
Great. Thank you very much. It's a pleasure to be here.
Always a pleasure. In fact, you are hoping you're going with a lot of investment ideas as well from India. So let's see how it pans out.
Okay. Thank you.
Thank you so much. So that was Seth Freeman at the NDTV studio. But overall, with regards to markets that we started off, we ended in the green, but below the 25,300 mark. A 3-day losing streak is what we've been able to snap as well. Broader markets clearly outperformed the benchmark indices, names like DRL, Bharat Electronics. These are the ones which gained the most in Nifty 50. Nifty Midcap 150 also ended with gains for 1.5% in trade. Overall, if we talk about stocks like Minda Corp, Welspun Living, etc., they gained the most in the Nifty Small Cap 250. All sectors ended in the green, barring Nifty Realty. You have the PSU Bank Index, which gained the most as well. So a pretty mixed trade is what we've seen in terms of individual sectors. I mean, not too many Nifty 50 earnings that report numbers today. So it seems it could potentially be a range-bound trade today as well, Neeraj.
Yeah, potentially a range-bound trade day today as well. But guys, just before I speak about the trade setup, there's something that Elon Musk said, which I really want to bring out, simply because I'm accused of being an optimist on the markets for such a long time. But I think what he said yesterday was quite stunning in Davos. So here's his quote, and maybe people in equity markets need to kind of imbibe it within themselves as well. He didn't say it for the equity markets, of course, but Elon Musk was quoted as saying that I would encourage everyone to be optimistic and excited about the future. For quality of life, it is better to err on the side of being an optimist and wrong rather than being a pessimist and right. I think such a powerful quote, but kind of put it in the market parlance as well.
This coming from the man who says that in 20, 30 years, you won't have to worry about retirement, that you should not bother about retirement savings. I think, and I completely take that. Just the other perspective is that it's easier to be optimistic when you're a billionaire and you have that much money.
Yeah, no, but okay, your point is fair, but if you're not an optimist, then how do you go ahead and face
how do you
the
become
next
a
day?
billionaire? That's the question, right?
But also from an equity markets perspective, right? You invest with a hypothesis that the future is going to be brighter than today. So
but on the very quickly on the flip side, the view is that if you think that you need a certain amount of money, the assumption should be that you need to do a little extra to get there.
Yeah.
And so therefore, when you reach there, if you have more money, you're good.
Yeah, so be optimistic about being able to do the extra. Okay, now that's the broad parlance about what you could do. So I mean, this is a great time to be optimistic in India as well, right? I mean, here's Sunil Bharti Mittal's address yesterday at the World Economic Forum, and you will probably get that sense too. But the trade setup, I think the sentiment is still bearish as yesterday's fall from the high shows, and volatility or VIX is elevated, which may bring in some bit of volatility, yes, and you have to brace yourself for that. But firmly believe that the uptrend is likely to continue. I think if you look at it over the next few days, the uptrend is very, very likely to continue. So keep that at the back of your mind. Sure, I mean, one could go completely wrong, but for now, it does look like the uptrend will continue. I do think that the India-EU deal announcement, whatever the deal is, I mean, you know, the EU chair was quoted as saying that it could be the mother of all deals. Now, if something like that were to happen, you probably presume that it is going to be a sentiment positive. And we've spoken about enough sectors. Yesterday I spoke about cement. I'm just quoting that again simply because the more conversations that I've had with people, the more people are saying that the South-based cement companies are companies that a lot of people are accumulating at lower levels. So that's a bucket or a cohort of stocks that you want to keep an eye out for.
Okay, so to add to this, a couple of other things that I want to mention is the positive start that was expected. Now, though your implied open is indicating something pretty flattish, the overall trend remains cautious to weak, and the ability to hold above its 200 DMA is the key, because the primary focus is for bulls today from here on to hold above that 200-day DMA. Now, Nifty 50 has actually snapped its 3-day losing streak, and experts are warning that the primary trend remains bearish unless the index decisively clears that 25,500 to 25,600 zone in trade. There is a relief rally that has played out exactly as expected after the sharp fall that we saw. But this is not a confirmed trend reversal yet. If you talk about the bears, they still have the upper hand due to the VIX, which has been elevated. If you see the kind of levels that we are at, 12, 13 is what you're looking at in terms of where the VIX goes. Nifty has been trading below most key moving averages, and the momentum indicators are still indicating some bit of weakness. 25,450 to 25,500 is the resistance. Hurdle is 25,600 that it needs to cross. And on the support side, you have 25,150 to 25,200. In terms of Bank Nifty, again, outperformed on Thursday, gaining nearly 500 points to close at 59,200. And now it must sustain about 59,500 to lead a market recovery. You can see the resistance and support levels, but the clear range that we're staring at is 58,700 on the downside to almost 60,025, which is an immediate or a major resistance level that you should be watching out for as well in terms of Bank Nifty.
Let's talk about the derivative trade this morning and go across to Puneet for that. Puneet, yesterday, of course, was Sensex expiry. I think it might have played a little bit of a part in the volatility that you saw. What's the setup today?
Well, most certainly, and across indexes, actually, you've seen a lot of volatility in yesterday's trading session, while just closing a tad below 25,300 on the Nifty 50. We've seen, in the last hour of the trading session, again, a 100-point run-up, which boosted that. So we were almost at the day's low yet again, somewhere around 1 o'clock, and then that buying. Of course, there is a massive dip in open interest for the Nifty 50. That's also visible in the Bank Nifty as well at this point of time. So roughly around a 17-point downtick in open interest. Back again in conversation is the 59,300 mark as well. We did slip below those levels, 59,000 in the last week. So this is a positive territory back here to talk about. but needs a trigger from the mid-tier banks, to say the least. When you talk about the foreign investors, they've consistently sold out yet again of almost 2,500 crores. DIIs continue to hold the fort at this point of time. There's also been almost a 1,500 crore build-up of shorts in the system for foreign investors, and the index long, which has been quite depressed between 7 to 8%, has started to inch up just a bit as we go into the next expiry. So 12.5% is where we are at. Hopefully continue to maintain that, but largely been a month where the longs have quite been depressed, almost 92% shorts in the system. The put call ratio also very, very neutral, not telling you too much over the last few days, where puts and calls have been very neck and neck, but that seems to be where the trajectory of the market is. Very, very bottom up stock specific ideas that seem to be on investors' mind, and traders seem to have that similar thought process as well.
All right. Thanks so much, Puneet, for getting us those details, and those are the key levels that you should watch out for. And we'll get you more strategies before the start of trade as well. For now, let's talk about stocks that you should keep on your radar. I will start with Interglobe Aviation. I won't go into too many details because we are going to flesh this out for you in just a bit. But it was a broadly positive set of numbers in the context that Indigo find itself in. It was the slowest Q3 revenue growth since FY21, which is the COVID impact, but the revenue was still better than expected, which led to an overall beat. The Q3 profit was impacted by one-offs to the extent of 1,547 crore rupees. One, of course, there was the impact of the new labor code, but also an exceptional loss on account of those flight disruptions, which quite a few of you would have experienced as well. That was measured at around 577 crore rupees. The PAT would have been about 3,130 crore rupees, excluding those one-offs, including the forex loss that the company saw. So there are a couple of brokerages that have weighed in. Morgan Stanley has said that it maintains its overweight with a hike in the target price to 6,498. Adversity gives opportunities, what they say, and the profit before tax was 18% ahead of estimates. The company has lowered its Q4 capacity guidance and raised its CSK outlook. The valuation at FY27 EV to EBITDA of 8.5x versus the 10-year medium ex-COVID of 9x makes it look attractive. At this point, City on Indigo has also maintained its buy, but it's cut its target price to 5,700 from 5,800. It says it's a strong result in the backdrop of a slew of unpredictables. The operations normalized post temporary disruptions. They've cut the yield estimates and account for higher costs going forward as well. Go Digit, it's a thumbs up on the back of numbers. The total income is up by as much as 5.3%. The net profit up about 18% or thereabouts. There's an improvement in the loss ratio. It's important from the perspective of the company, but the combined ratio has actually increased to 110.7 versus 108.1. Remember, a combined ratio above 100 indicates an underwriting loss, so the target is to bring it below that mark. Morgan Stanley on Go Digit has maintained an equal weight rating with a target price of 335. It says that it's a beat on an adjusted profit basis. The combined ratio was higher on account of the higher share of two-wheeler business. The combined ratio has actually improved on a year-on-year basis if you look at the IFRS figure. The loss ratio has also improved. They've maintained an equal weight on full valuation. And finally, there's a brokerage note on Aditya Birla AMC from Citi. They've upgraded to buy from sell, so it's a double upgrade, and they've hiked the target price to 900. They're seeing turning tides, and essentially they're saying that this is a risk-reward play for them. The market share has started to stabilize, and this is in regards to the net equity flows and SIP over the course of the past few quarters. And overall, they're saying that this is an interesting play based on the valuation. They expect the gross flows to pick up gradually as sustained performance in the first year, in a one-year bucket rather, translate to further revival in performance of higher order buckets. So all told, looks good for this AMC.
So interesting stocks that Alex has picked. What I have on my list is Bluestone. Now, they've reported a significant turnaround when it comes to profitability in the third quarter and clocking a net number of almost around 69 to 70 odd crores is what you're looking at versus a loss. And this is performance. Actually, this performance has mainly been driven by strong revenue growth, improving operating leverage during the festive season as well. In fact, this marks Bluestone's first ever profitable quarter since its listing, which is attributed to faster revenue growth than expense increase as well. Because if you talk about the operating leverage, expenses have grown by a modest 9% over a year-on-year basis, while revenues have increased over 27%. And the strong performance also aligns with the robust Indian jewellery sector, which has been driven by the festive season demand as well. Moving on, the management is also expecting the positive growth momentum to continue into the fourth quarter. Lastly, the next stock which I have on my list is Bandhan Bank, an 84% sequential increase in net profit, indicating a steady operational turnaround, though the profit was 52% lower on a year-on-year basis due to a one-time gain that they had in the previous quarter. And there has been a compression when you talk about the net interest margins as well. The bank has also seen a significant improvement in the asset quality with a sharp decline in its gross non-performing assets, which is positive for a Bandhan Bank. And the third one that I have is Premier Energies. They've reported a strong financial performance with net profit surging 53% and the revenues have seen a good growth as well. The results were mainly driven, if you see, by robust demand for solar products and a strong order book that they have, though they've missed some of the analyst expectations this time around as well. So this is going to be an interesting one to watch out for, Neeraj.
Most certainly. Okay, just very quickly, we'll get in a very special guest, but the three stocks on my list, DLF, the numbers were okay. Morgan Stanley maintains an overweight, so keep an eye out for DLF today. Keep an eye out for Syngene today. That was, they get a bit of a stick because EBITDA margins were down at 22.8% versus 30%. So Syngene had a troubled quarter, if you will, ongoing inventory correction for drug Librela. So keep an eye out for that. And Zensar Technologies, mixed set of numbers. Revenues were flattish, but margins did really well. Keep an eye out, maybe, just maybe, this might correct too because it has turned out to be a soft quarter. But I tell you, the stock in focus or one of the newsmakers today is, the last 24 hours is IIFL. Special tax audit as well. Rishabh Johnson with a very quick update on this one. Rishabh, 30 or 45 seconds, fill us in.
Yeah, so IIFL has been ordered to undertake a special audit. This is for a particular past block period. In this case, it is April 1st of 2018 to February 2025. Now, what happens with special audits is the sort of silver lining here for IIFL is that the normal time bar limits don't apply. So essentially, whatever deadline they have currently is for March 31st of 2026. That effectively gets shifted to another 6 months in the wait for this particular special audit report to come out. And in this particular case, the auditor is also not appointed by the company. The cost is also borne by the government, and the auditor is, of course, a government empaneled auditor. So, and this came into after there was certain collusion that was reported in earlier instances. So that's what we're picking up on IIFL Finance.
Okay, Nirmal Jain, founder of IIFL Group, with us. Mr. Jain, thanks so much for taking the time out. This is Neeraj here. Good morning. Tell us, because I think the statements that have come in from you, or rather attributed to you, are that this IT review is routine, it is not an accusation or an allegation, and it happens regularly. Is that the case, or is there some separate kind of an inquiry right now?
No, I actually, there's a case, very procedural. So there was a search actually, which was done last year. And based on the search, the file basically goes to the assessment. And when they see that the operations are complex and vast, they have their own limited resources, there's a time they take help of audit, a chartered accountant firm. So this is not an audit of accounts, first of all, which I have been on record yesterday also in some other channel. This is neither investigation. This is not something which is any adjudication or any determination of penalty, or there's any case of collusion or whatever. So all these reports are completely false. The fact of the matter is that whenever there's a search, this is by law. So every search operations, you'll have a block assessment of 6 years, because whenever there's a search, it covers 6 years. That is what searches under Section 129 of Income Tax Acts are supposed to be. And therefore, everything that is done in this case is for a period of 6 years. And then the audit, although the name audit is very generic and it can encompass many things, but this coverage is only for the finding that they had during their search operations. So where they collected documents, data, and took statements of several of our officials, they need to be verified. The auditor here basically have to reconcile the accounts, the numbers, and then report it back to income tax. They are not supposed to, that is an input in the assessment. That is not supposed to be an assessment by itself.
So,
And
yeah, please continue. Please continue.
for a moment, this may be good because many things are put beyond doubt, and in fact, we have all our operations are digital and through banks, so we don't have anything to fear, anything to worry about it. So when there's an audit, then there's a third-party expert validation, which makes the process faster.
Mr. Jain, good morning. Just the perspective I think that a lot of people are seeking is how long does this normally take? Because there are some people that are calling it an overhang. So, and you've said that it's a good thing because a lot of questions get put to rest. But at what point will it be put to rest?
So, the auditors basically get about 60 days time, and so the entire thing gets over within 60 days.
Okay, and so therefore, if it started yesterday, we're talking about early in the new financial year that we get a resolution. What is required from your end, Mr. Jain, in terms of cooperation?
Yeah, okay. From our end, we are cooperating fully. So they require certain data documents from our end. And so after that, after 60 days, they submit the report to income tax. So the income tax authorities or the assessment department. So we already got notices from them for the block assessment to file revised returns that we have done. And this will go to the income tax. And
Mr. Jain, allow me to come in. I know you have a hard stop, but there is a bit of an audio glitch. We are just going to try and correct that so that we can get your some views as well. I request you to stay on for 5 more minutes. I know you have a hard stop, but because of this audio glitch, we'll have to take 5 more minutes of your time. So just allow us to fix that. But guys, it's interesting that what Nirmal Jain is saying, that this is procedural in nature, one, presumably gets resolved in 60 days. And therefore, I think the proof of the pudding is you take the comment that has come in from the IIFL group at face value right now, because they have a reputation that precedes them. And then in 60 days, let's see how it goes about. I mean, yesterday, I know there were some bit of movements.
Movements was there, and okay, so from NDTV Profit's reporting team, we were trying to get clarity from the IT department as well. And what emerged from there is that unless and until the tax authorities being some concerns, they do not really actually ask for an audit like this. Because they're anticipating something, and this is not a regular routine for every company. It's not a thumb rule. Happens for some, yes, these are complex transactions, the business is complex. They are probably seeing something which they want to make sure is not happening, right? So that's the reason why they are doing something like this. Now, whether IIFL has been already intimated about any wrongdoing which the tax department was thinking is the question that we need to ask Nirmal Jain as well. And is the audit coming in thereafter?
Yeah.
Because that's the angle that we need to explore with Nirmal Jain right now.
Yeah, I think we'll get him in a moment from Nirmal. You may be wanting to ask that as well. The other point is just purely thinking it from a market's perspective. That people got to think of whether they are satisfied with the management explanation, a yes or a no. Because if there is one cohort of stocks which is looking very attractive right now, per se, it's the NBFC space, right? That space has gotten in the whole of the last 12 months, regulations which have eased in order to lend. They are present in the gold loan segment as well, which helps them tremendously. And if all of that is going to be accompanied by good growth, then, and if these regulations are unfounded or the concerns are unfounded, then dips like these is what you look out for.
Jefferies has weighed in, by the way. So there was one brokerage note that we saw. If we have the graphics, we should pull that up. Jefferies on IIFL has maintained a hold, but it's cut its target price to 600 rupees. If you pull up the chart, you'll see what the difference is. It's currently at 538 or thereabouts. It says that, and it's weighed in on the numbers as well. So it says that a Q3 profit beat was driven by lower provisions. It talks about the fact that tax authorities have directed a special audit on accounts. The management terms the audit procedural, but it could be a near-term overhang. That's the word that they're using. The loan growth in the quarter gone by has been led by gold loans, and ex-gold AUM has consolidated, but they've also pointed out that the NIMs have improved on a sequential basis and credit costs are slightly better than estimates. So On the earnings side, it has been positive, just like a lot of other gold loan companies.
Absolutely. Earnings, it's absolutely positive. Mr. Jain, this is Hiral on this side. Always a pleasure to speak to you as well. You know, the conversation, and the reason I asked this question is so that investors get a clarification on the overhang part. We were talking to a couple of reporters who have been in touch with the IT department, and the way everyone's understanding is that the reason for such an audit is tax evasion, and that's the reason why you're looking at this kind of an audit. The tax assessment will then indicate in the next 6 months if there is a potential tax evasion. Is that something that you would agree with, or is that something which has not been communicated to you at all? This is mainly for the clarification that investors are watching out for.
No, I think this is completely false. So maybe instead of reporters, you should try and speak to some of the tax experts or the tax firm that basically handle these kind of investigations and assessment process. So because they would have gone through this, so they can tell you better about what it is supposed to be. So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious. But obviously they have done the process, they collected the data and documents, which they need to verify. So the way the process works is that from the search department, the file goes to assessment. Because this, just for independence, for making sure that there's one body or one set of people who collect the data and documents, the other set of people who process it. So this audit actually by no means means tax evasion or any suspicion or anything of that sort, because I'm on record, we can check this with tax experts, actually, people who understand Income Tax Act.
Got it. Mr. Jain, this is, a good clarification for the investors as well. We know you have a hard stop, so we will leave it at that and connect with you once again to talk about all the budget expectations, being a veteran in the markets as well. Thank you so much for joining in at NDTV Profit. But we'll quickly slip into a short break. On the other side, we'll get you top trading strategies for today as well.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है।
Welcome back. You're watching India Market Open. It's time to look at what is on the watch list today. We've already spoken about 9 stocks, but let's pull up the list. Ashoka Buildcon should be on your radar on account of a pretty large order, 300 plus crore rupees. Bellrise has acquired equipment in France. Intellect Design, there's onboarding of new partners. Hoodco is mulling raising of funds or borrowing in a board meeting. Sequent Scientific has expanded its portfolio of animal products or animal treatment products. NTPC Green, there's an MOU with the government of Uttar Pradesh, Tata Com, and we're speaking with the management probably later today. There's a nod for the ARMS demerger. ONGC has acquired 50% in 2 joint ventures. Sterlite Tech has gotten into a partner with an overseas firm. This is Colt Technology. HG Infra is being investigated by CBI as well as ACB. ACB, of course, is the Anti-Corruption Bureau. And finally, you have... yeah, there you go. So this is more or less what is on the list, on the watch list, but there are more stocks that you should watch out for on account of earnings, etc. And I'm going to toss it back to Hiral to give you a sense of that and also to talk to both Kush Bora as well as Parag Thakkar about the stocks that they're looking at.
Thank you so much, Alex, for that. So that's with regards to where your stocks in focus will be. We've spoken about Indigo already, Codigit, Bandhan Bank, Bluestone Jewelry, Ixigo, Emphasis. These are a few of the numbers that you should be watching out for as well in terms of stock reactions as we speak. But let's get in. Kush Bora and Parag Thakkar, as always, welcome to the show. Kush, my question to you is, a sustainable number that we saw in terms of markets yesterday, it seems, it was, I mean, the recovery that did come in over the after the fall that we saw, one, is that something which will continue today? And 2, the heavyweights also saw some mild recovery, the ones who were putting pressure on Nifty in the first part of the trading session. Will they be actually supportive?
First up, a very good morning. And I'll try and remember all that, by the end of the conversation that I'm supposed to have. I recall your conversation about Elon Musk's tweet, right? Quick question. From a technology perspective for the next 10-20 years, right? Where do you stand? Terminator level robot takeover or Star Trek exploration level technology enhancement? Where do you stand?
Somewhere in the middle.
Yeah.
That is such a safe ground. Take a side. Take a side.
Neeraj?
No, I don't think it's going to be that bad.
Bad nahi.
Which means...
Not that advanced. I'm saying we are not even in the middle ground. We will not even go reach the middle ground.
Bhai, okay, if you read about the size of the universe and the distance between the sun and the nearest star, you would realize that we're light years away from space travel.
So Alex has turned a scientific question into a very philosophical one.
No, it's the truth.
I know it is the truth, but even with a hint of philosophy. Parag bhai, ये लोग थोड़ा सा balance stand ले रहे हैं. आप बताओ, Terminator level or Star Trek level?
India-US trade deal होगा
I love it.
We'll have to live for 10 years to see that. Right now, what is important is India-US trade deal.
I absolutely love this.
And I just read Anish Shah saying that he's optimistic. I am also optimistic.
Fantastic.
That India-US trade deal will happen. Day before yesterday, Trump himself has said. And I feel yesterday, if you see the movement of stocks which are related to tariff, like Welspun leaving, Gokaldas exports, the price movement is also suggesting that we are close to the trade deal. And no, I don't know timing. Of course, I wish I would have known, but I think it will come.
The only time that I differ with Parag Thakkar is this, wherein in my humble opinion, I think the India-EU deal that probably gets happen in the next 5 days, 6 days, and the sound bites around it become so much more important. And some of it could have to do with that, because if the duties at EU become at par with Pakistan or Bangladesh,
India-Europe is also good only. I'm
so
not
important.
Saying, but I think, let's see, some of the, for example, towels, then this home textiles. The US is the biggest consumer, and 70% of this guy's revenue comes from US. The people like Welspun and all.
Yeah, because they haven't diversified, right?
But then to move that 70% of the revenue to Europe looks difficult, at least from time perspective.
Okay, fine. Fair
That's
point.
what I'm saying.
So just on that point, I remain optimistic. I actually remain excited to see where technology takes us. So I'm more on the Star Trek side. Of course, we will not get there. But yeah, also on that deal point, I agree with you. I was having an off-air discussion with Parag Bhai, and this was my point as well, that maybe the excitement in the textile stocks was perhaps because they could be looking at better days because of the EU deal. So that's just my view. Now, as far as everything that Hiral asked, my bad. You know what's exciting? Ant bhala to sab bhala. We ended on a good note. Let's first figure out why did we perhaps even see that dive, which came very close to perhaps even going into the red territory on the indices. I wouldn't say blame, but I think a very, very key factor for that was Sensex expiry, and we've seen volatility on expiry days, right? But now look at what Reliance Industries, HDFC Bank and ICICI Bank have done. If you can bring all of them together or maybe one by one, markets ended higher. The three heavyweights ended in red. अगर ये पॉजिटिव में भी क्लोज हो जाते ना तो हम यहाँ से 25-500 तो ऐसे ही देख रहे थे. That's my view, and that's where the optimism also springs from, that the rally has not really seen a participation from 40% of the index heavyweights. That applies more so for Bank Nifty as well, by the way. From a technical standpoint, the good thing is that the 200-day moving average was respected. We broke the lower high, lower low formation, so we had a higher high, higher low formation. This could well continue going into the long weekend. I usually don't suggest taking positions, but if we are flat to positive for the better part of the day, it's not a bad idea to be a little optimistic and take a slight call position or maybe a small futures position with a hedge, going into the long weekend as well. Usually I don't recommend that, but if you're a professional trader and if you can manage your risk well, it's not a bad idea. 25,500, 25,700 targets on the Nifty. Bank Nifty, yesterday we spoke of 15,500, we pretty much got there. So you could still continue holding on to long positions, or in case of any kind of declines, add further positions for targets of 59,800 and 60,200. So I remain very constructive on Nifty and Bank Nifty both. PCR still close to 0.8, 0.84 on both of these. Point is, on the downside, there will be support that will come in.
Okay, so with that, Kush, your top picks then for today.
So going with a mix of sectors this time, banking and FMCG have to be a part of those. So Federal Bank, despite the kind of run that it's had, it did see some correction, some dip. But yesterday, again on the back of good volumes, Federal Bank moved higher. I think 300 is very likely, in the near term for Federal Bank. But for targets of 289 and 296, you could consider a long trade with a stop loss at 275. A less discussed stock these days from the FMCG pack, which is starting to show signs of revival, is Colgate-Palmolive. For the last 10 sessions odd, it's been seeing that recovery. Yesterday, a close above the 20 and the 50-day moving average on healthy volumes, encouraging signs there. 22.40, 21, 23.30, these are your targets. 21.15 is where you keep that stop loss. And Torrent Pharma, this is more of a continuation of a trade where we discussed this last week for targets of 4020. That's been hit. So as a continuation, you can go long for 4120, 4200 and bump up your stop loss if you have an existing position to 3940.
Okay, all right. So those are the stocks that you should watch out for from Kush's perspective. But let's talk about more stocks, and let's talk about what's the buzz in the dealing rooms. So Amit Sarkar joining in to tell you about the chatter from the dealing rooms in Heard on the Street. So Amit, morning, what are the stocks that you're looking at?
Well, first stock that dealers have highlighted today is on Asian Paints. Now, there are some sell flows that are coming in on the large Chennai desk is what dealers have highlighted, and because they're expecting the Q3 revenue growth to be lower than what the street has already been compared to what the analyst estimates are. Now, do remember, post the second quarter, the company had reported a very strong sales growth and the stock had jumped nearly 10%, but Q3, which should be one of the stronger quarter, analysts are expecting the revenue growth to be on the lower side. Apart from that, Kotak Mahindra Bank is one counter where there are buy flows on the DII desk. Delivery volumes are also on the higher side. And when it comes to L&T, multiple dealing rooms have recommended buy calls to their clients based on technical charts. So that is one stock that we need to watch out for. And DLF was part of our segment yesterday where we did indicate that the pre-sales are expected to be on the weaker side. And if you look at the pre-sales number for DLF, that has come in at close to 420 crore rupees in the third quarter as against Morgan Stanley estimates of close to 2,500 crore. So sharp miss when it comes to the pre-sales number.
Okay, all right. So several stocks that we've talked about from that list, and Asian Paints is an interesting one. Sell flows on. I wonder what Parag Bhai thinks about this. Parag Bhai, it used to be a favorite, gone through a little bit of a turbulent time. What do you think about it?
So we have booked out the profits. And so basically, I prefer Godrej Consumer, whose result is today. Marico, Tata Consumer, Pidilite. These are 4 FMCG stocks which we have in the portfolio now. HUL, of course, we have used this as a technical cash point, and so we booked out in that also to buy something like HDFC, ICICI and Axis, as I always keep saying. And today, for example, as we are discussing, HDFC Bank, if you see on FY28, this is below 2 times. This is for the first time I am seeing this. And now when actually CD ratio is not a problem from regulator perspective. So I think they can grow at 13-14% easily. Which will be established in the March quarter CD ratio, in my view. In my view, they have to gather around 1,70,000 crore deposits in March quarter to get back to the CD ratio level of 96%. Once that is achieved, then market will get confidence that next year they can outgrow the system, and which is 14-15%, with margin expansion coming from lower cost of funding. And most importantly, I would say that the operating leverage will also come, because now they are going to stop opening so many branches. And the previously opened branches will try to will become more productive. So operating leverage will also kick in. So I think that and Axis we discussed yesterday, right? That already business update was strong. If the asset quality, if the slippage number is below 6,000 crore, I think the stock is. ICICI, I don't want to discuss again. We keep.
We've talked. No, so I want to discuss something which you don't talk about often, right? So I think the viewers by now know that ICICI Bank, HDFC Bank, and Axis.
This bank are top 3 buys. Yeah.
Bandhan Bank. After a long time, I thought the numbers looked interesting.
Yeah, it is interesting, but as I said, in that space, which is a slightly risky lending, microfinance, that space I have always said that Equitas is my. And by the way, Equitas was.
But Equitas was doing, but you didn't like Bandhan at all.
No, I like it. No, the numbers were good. I have seen upgrades, many upgrades also coming. The stock might give you a good bounce, but from structural point of view, I don't like MFI heavy lending companies.
What about gold loan companies?
Sorry, can I just ask for the chart check on Bandhan Bank?
No, not a great look.
Okay.
Yes, yesterday you had a good candle. You might get some follow through today, but the medium term trend has been negative, so there could be an opportunity of exit at sell on rise kind of a setup.
Okay. What about gold loan companies? I'm asking, of course, in the context of gold at close to $5,000 per troy ounce, and at what 60-65% loan to value ratio, you're able as a gold loan company to lend a lot more than you did.
Absolutely.
70% more than you did last year, right? So what is the view then? Do you like any companies there?
No, basically I don't like, because I don't feel that gold is going to sustain so high. Every day there is Iran or Greenland, so that happens, and that takes gold and silver up. But I am not interested in that last leg of big euphoric move. So same goes with gold financiers also. They had a wonderful time, right? Wonderful time. This times won't last ever. In fact, I would always try to, from long-term perspective, I would like to buy good companies which are going through bad times, rather than with the companies which are going through extraordinarily good times.
Speaking of not the best times, Interglobe Aviation reported a strong Q3 in the context that it found itself in with those disruptions and the impact of those disruptions. But let's take a look at the key numbers before we find out what the management had to say, and we also ask Parag Bhai what he thinks about this company. Somit, what stood out?
Well, if you look at the Indigo numbers on a consolidated basis in the third quarter, they were quite strong compared to what the street was anticipating. Now, the beat was largely that had come in on the revenue front, which also translated to a beat on the EBITDA front as well. The net profit number, however, that was impacted because of a couple of one-offs worth close to 1,547 crore rupees. Now, of this 1,547, 969 crore was related to labor code and 577 crore was related to the flight disruption. Now, if you exclude this, then the PAT number would have been close to 3,130. Again, this would have been ahead of what the street was anticipating. If you look at the company's fleet count, that also increased significantly by around 23 aircraft to close to 440. The guidance given by the management, however, that is not that great because they're expecting Q4 capacity growth of at around 10%. They're expecting their unit passenger revenue to decline by around early to mid single digit, and they're expecting their unit cost that to increase by around a mid-single digit for FY26 as compared to FY25. Now, what are we implying out of this guidance that the management has given? And that is a key negative that is coming in for Indigo. And that is the overall revenue guidance implies that overall revenue growth would be just around 4.5 to 6.7%. Again, this is the slowest Q4 revenue growth that we will see since FY21, that is since COVID times. The cost guidance, now that implies that in the fourth quarter, the unit cost could significantly increase, excluding the fuel cost if you see. Apart from that, the Q4 profits could also come down significantly given the fact that there is a high base effect. Now, if you remember, fourth quarter of FY25 was extraordinarily strong for Indigo given the fact that there was Kumbh Mela and hence there were more flights that flew and higher yields were also one of the reason. Apart from that, the management did not comment on whether their growth plans will slow down in the near term because of the new pilot norm. So that is also one of the concerns. And lastly, the management to NDTV's question did say that Q4 could continue to see one-off cost owing to flight cancellation. So these are broadly the negatives that are coming in from the Indigo results. However, the third quarter numbers were ahead of what the street had anticipated. Now do listen into what the management had to say when it comes to the decline in revenue and increase in unit cost.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
So that's the word coming in when it comes to Indigo as well. Kush, what are charts indicating when it comes to Indigo? Because we'll take a fundamental view from Parag Bhai as well, but right now, any trading bets?
So I find this interesting. As long as it remains in that 4,700 to about 4950 band, this will be a good opportunity to accumulate. Risk reward ratio very favorable. The only thing is it should hold the recent low that it made, in the whole debacle. So, but if 4,700 is held, I think it's a fairly positive trade. You could consider accumulation on Indigo from a medium-term perspective. Give it to 3 to 6 months kind of a time frame. But a good idea to accumulate in Indigo at these levels.
Okay, Parag Bhai, any view with the commentary that we've heard from the management? Because we have a certain number now that we are looking at in terms of the loss that could be coming in, and the losses and the current impact is on the labor codes, right? It's not even on the disruption. Disruption impact is yet to be seen. What would you advise investors then?
So this is again a good company which went through a turbulent times. So definitely keeping under my radar, but still not bought into it. But definitely, as you say, see that whatever problems happens, that is going to be a one-off thing. So if that problem shows up and if the stock price reacts to it negatively, definitely it is worth accumulating.
Okay.
Is Coforge one of those companies?
Yeah, is Coforge one of those companies? The company posted its results. Net profit is down as much as 33%. On a sequential basis, some impact of what you've seen for a large number of companies, also something to bear in mind. But the revenue uptick of 5% on a sequential basis, the EBIT is just about flat at 559 crore rupees, and the margin has seen a bit of a downtick. 13.4% is where it's coming at, and 14%. And I know for a fact that Parag Bhai tracks this very closely. The impact, by the way, on account of the labor codes coming in at 118 crore rupees, which probably had a bearing on the PAT number. What do you think of the numbers?
No, excellent numbers. 4.4% constant currency growth quarter on quarter. The highest expectation on the street was 3.5. So they have beaten down that, led by healthcare vertical, which did very well. I think QOQ growth was around 8%, and reasonably good valuations for a very high growth company. And as I have always maintained, that acquisition was not very bad. It might be dilutive for 1 year. From second year onwards, it will be EPS, if not accretive, it will be neutral. And in my view, FY27 EPS stands at around 50-52 rupees. So a very high growth IT company which has grown organically. CC growth of 19% in this year, which is highest organically, is available at 30 times FY27. So I would maintain my So I have it in the portfolio as a disclaimer, and it is one of the largest weights in the IT stocks, amongst IT stocks in my portfolio, and I'll keep it.
Did you have emphasis to? Did you look at the
numbers?
Yeah,
emphasis numbers were steady. They're steady.
And the
because
commentary, okay.
Good. Even Coforge deal wins were very good. $593 million, which was very good. It was so both emphasis also basically if BFSI continues to do well, emphasis is a big beneficiary of that.
It's interesting. We saw that with emphasis. We saw that with Persistent, wherein BFSI came up and did really well for them. I think Hiral pointed it out, and that was not true for a Mindtree, for some of the other larger players as well. So it's interesting the chalk and cheese behavior between these companies too.
Also, I'm pretty sure that a lot of people caught this when we spoke about it at the start today. But Neeraj, the consumer spends in the US and the trends being pushed by the financial services actually in that basket, it bodes well for these IT companies. If they focus there, ultimately, if consumer spending is taking place in that pocket, it's good.
Yep. Well. So, interesting thoughts, all of that. Now, Ashok Leyland, seeing strong mining activity across coal and iron ore, which is helping the demand as well. The company is, of course, expecting commercial vehicle cycle to stay strong for the 4th consecutive year. In some sense, some people will believe this is the start of a new CV cycle as well, and not necessarily the 4th year, but Ashok Leyland believes the new launches will bring in fresh energy out there. Kushbura, quick 20-second view on Ashok Leyland.
Very constructive. There's been profit taking. Volume action in the last 2-3 days very interesting. There
exactly. I'm saying we were talking at 181 and now at 190.
We did. Absolutely that point. So there's been a brief consolidation. The stock is now on the way up. 200 could be mild resistance.
Okay. Hear out the management.
Today you have launched 2 new trucks and you basically revived the old brands. First of all, sir, what is the rationale behind that, and which will be the industries in which we will see the application?
So, hi, thanks for having me here. I mean, let me first talk about Hippo. Hippo, in late 90s was seen as something which was known for its reliability. And if you recall, liberalization just started and India was going through first phase of growth. And that is where our Hippos were really doing the work for the industry. I mean, a lot of expansion was happening across India, and Hippos were seen as a tractor which could carry any load, any over-dimensional loads, and it would never fail. The reliability factor of our Hippos were great, and that is where it could create a sense of connect with a lot of customers. And of course, post that we kind of stopped this product around 2000. And again, idea was that we see India going through next phase of growth, and huge activities are happening across industries. Be it mining, be it road infra, coal, iron ore. So we see huge action happening in mining industry, and that is where we feel this truck is going to create similar connect and would answer all those requirements. And we have created this truck in 2 formats. One is 320 horsepower truck, which could address on-road applications like steel, cement, etc. And 360 horsepower truck, which is basically to address over-dimensional cargoes, like transformers or boilers or some machines which cannot be carried on a normal truck. So again, idea is this truck kind of conveys the word reliability very well with our customer and creates that connect. And idea is to once again introduce this to address those needs.
So what sort of export potential do you see with the launch of these 2 new trucks? Which could be the regions and the countries which you would be targeting to export these trucks?
Right now, I think our idea is to focus on domestic market. We would like to test these trucks at least for a year or 2 in different geographies. Of course, we have done almost 2 years of testing with these trucks, but ultimately it has to go into with customers, and then customer needs to give us feedback. Post that, we are going to have a look at which markets we can look at for export of these trucks.
Having tracked this space, it's quite interesting. There's a lot more attention when you launch passenger vehicles, but I like the fact that the colors of those trucks were popping, weren't they? At least you're trying to create some attraction or interest in the commercial vehicle space. But that's not required for Parag Bhai, because Parag Bhai very clearly likes the commercial vehicle space at this point more than passenger vehicle space. Isn't that true?
Yeah. So Tata Motors CV. So yesterday we spoke, right? So I think good domestic traction coupled with that Iveco thing, which I think they have got it for very, very attractive price and at the bottom of the cycle.
And Ashok Leyland, by the way, is the second largest player in the commercial vehicle space here in India, with the presence across all of those offerings, including your MNHCV, which has just been launched, ICV and LCV. But let's go across now to our next guest. Okay, we'll go to them in just a bit, but you've given us Ashok Leyland. Why don't you tell us, you don't have enough on Tata Motors CV, right? So PV actually rebounded just a bit after the doing away of those tariffs. Is this a good opportunity to get in at this moment?
As an independent trade, maybe, from a positional standpoint. But to be very honest, in the pecking order, it doesn't fall very high. It's something like a Wipro in the, heavyweight when it comes to the IT names. So when you've got opportunities in some of the other big players, doesn't really fall under that radar. Even now, this is more of a pop from oversold territories rather than a sustained rebound. So I would keep it on my radar, but I wouldn't go out and put my money in this.
Okay. What else? And a clutch of names are going to be in focus, but it's that time of the show when we get you the top brokerage call for the day. And Citi, by the way, Citi has a lot of calls today, I must say, on gas companies and a few others, so keep an eye out for those. But Citi, more importantly, at 9:05, Citi's I think the stock that we're talking about, the brokerage note that we're talking about, is the Citi note on Fortis. Now, why is this important? Varsha joins in. Varsha, good morning.
Good morning. Well, yes, Citi has resumed a coverage on Fortis Healthcare, has maintained buy with target price of rupees 1,120. Now, let's see why Citi is positive, on this hospital company. One is strong operational turnaround, which Citi is expecting after change in management and ownership, which improves execution, visibility and return metric underpin the buy thesis. Now, talking about the earning visibility when it comes to the hospital business, Citi is expecting EBITDA CAGR of around 23% over FY26 to 28. Why? I mean, this will be driven by ramp up in the new bed capacity, margin expansion in existing hospital, and the revenue CAGR is expected at 18% over the same period. Talking about the growth drivers, the scale, occupancy and pricing, if I were to speak about, 35 to 40% of increase in operational beds is expected from FY25 to FY28, which will improve occupancies in existing hospital, and steady RPOP, that is average revenue per occupied bed, is expected, which will be supported by better case mix and pricing environment, including higher CHGS rates. Now, talking about the existing network, which is expected to deliver 9% of CAGR revenue and 15% of EBITDA CAGR, and out of this, the new beds will contribute almost 15% by FY28 according to Citi. Talking about the expansion plans, well, all the hospital companies, if you see, are expanding aggressively, and for Fortis, they are going to add 1,500 of operation beds during FY25 to 28 with 65% of brownfield expansion. Now, over here, this is very important because once you go for the brownfield expansion, your return ratios improve, your EBITDA improve versus greenfield expansion, and of course faster ramp up is also expected. And onto the diagnostic business, Citi is expecting a recovery ahead with Agilis Diagnosis is poised for recovery over the next 2 to 3 years. So overall, for the brownfield expansion, for the diagnostic business, all this will augur growth for Fortis, and hence Citi is bullish on this hospital company.
Okay. Varsha, a bullish note on Fortis. A quick view when it comes to Sun Pharma as well, because they've got the DDCI approval for the generic version of semaglutide and manufacturing the same in India. How big a positive is that one going to be?
Well, yes, this is again positive considering the volume growth in the GLP-1 products, not a margin one, I would say. Well, this product will be launched under the brand name Novel Treat, which will of course be launched after the expiry of semaglutide, which is in mid of 2026, and this approval has been granted based on phase 3 clinical conducted which was in India. Also, the related approval which Sun Pharma has got for type 2 diabetes, the name of that product is Semaglutide, which also be launched post semaglutide expiry. So overall, for these two products, yes, this is a bullish one for Sun Pharma considering the growth prospects in the GLP-1 products.
Okay, all right. So thanks so much, Varsha, for those two quick views in the healthcare space, one hospital and one frontline pharmaceutical company. We saw DRL earlier in the week and it reacted very strongly yesterday,
yeah.
right? And we spoke about in the morning the possibility that it could move higher. Now, Sun Pharma, it's a positive, right? The way that GLP-1 has been going and the street is looking at that positively as well. Do you like Sun Pharma? You said you did yesterday.
We have it in the portfolio. So, and we know that this acquisition thing, which is a big acquisition, has weighed down on the stock. But I think with Sun Pharma's cash flow generation capabilities and as we discussed yesterday, they already have $3 billion in cash, plus they are generating $2 billion of EBITDA every year. And that company which they are going to acquire is also generating $2 billion of EBITDA. So I would say that if that acquisition happens, whatever has to happen has happened in the stock.
Okay, whatever negative has to happen has happened in the stock. I wonder if there is a trading angle to this one, because it can the negatives may have been over. Is there a positive immediately in the offing? Do the charts suggest that, Kush, very quickly?
Sun Pharma in particular?
Sun Pharma in particular.
You know what? Even Dr. Reddy's and Sun Pharma, they've both rebounded from oversold territory. So I would wait and watch. Not very constructive from a very near-term trade perspective.
You know the beauty about these conversations with Parag Thakkar and Kush Bora. Sometimes they agree as if they are twins, and sometimes they disagree as I don't know what. But that's the beauty. Bichhede hue bhai. No, but this is good. This is good. It's good to have both the views because people have different opinions.
So
right?
NDTV Profit is Manmohan Desai. बिछड़े हुए भाई को मिला दिया
Thankfully you didn't call us Rakhi. मेरे Karan Arjun आएंगे. That would have been something else. Okay, stocks. I thought Hiral picked out the stock of the day. I wonder if the stock is reacting. Bluestone, because it had a blockbuster quarter. Pull up Bluestone pre-open session rates, and I wonder if that stock is reacting. No, 1.47. But Tanla is the one which is duly reacting. Consolidated numbers quarter on quarter, net profit up 5% at 131 versus 125. Revenues about 4% margins. Look at that, quarter on quarter. I mean, I don't know how companies can report 103% margin. There has to be some accounting gigs around it. But do you track Tanla platforms, Parag bhai?
No, I don't track.
You don't. Okay. Pull up the 1 month chart for Tanla, and then let's ask Kush Bora if there is a trade here after it started off 5%. So came off completely, trying to bounce back, wait for some more before initiating a trade, if at all?
I would
that
suggest,
says it all.
Yeah, I mean, I would suggest wait for a long time, not just a while. Again, heavily oversold. Primary trend is negative. So every bounce that you get will perhaps be an exit opportunity. You will see supply pressure come in every now and then. I wouldn't really be too constructive on it. Honestly, if it weren't for this pop or this result, I wouldn't even keep it on my radar. That's the kind of negative trend that it's in right now. So yeah, a very clear avoid for me.
Okay, there's another stock that Parag bhai tracks very closely, which is DLF, and you spoke about it, didn't you today?
No, I did.
No, Neeraj did.
Neeraj,
right.
yeah.
So, what do you think of the numbers, Parag
See,
bhai?
there were no numbers expected. Very clean, because there was no pre-launch, no launch only.
Right.
So basically, I don't understand this market's logic that every quarter you have to do pre-sales to, So that's okay. So stock has fallen. And it is 15-20% down below my cost also. I must accept it. But I believe in the intrinsic value of the company, and the company has become net debt free, net cash now. Their rental business where they have a stake.
And that's what you're paying attention to, right?
Yeah. So and that rental business, and whenever they launch, we'll see the traction. Right now, this quarter there was no launch only.
So
same is the case with our relative, which I don't have, by the way. But I would say that same is the case. There was no launches only. Once the launches start, then market will ultimately realize and the stock will go up. But I don't agree with this on market with this logic that on a real estate company which is earning a rental revenue stream, you are judging them by every quarter's pre-sales. It's absolutely a wrong notion, in my view.
Interesting way of looking at it.
But of course, market is market, so we have to accept it.
Yes. One stock that's coming to my radar is Laurus Laboratories as well. In pre-market, if you see the rates that are coming in, I mean, it's showing you 1.5%, but there is some momentum there. Any view on Laurus Labs, Parag bhai?
No, the company is doing very well. But I would, in this space, I love Divi's, which of course I have also not bought very much significantly because the valuations are expensive, and I'm waiting for them to disappoint for 1 or 2 quarters for me to make it attractive. But I would say there's a great opportunity, great business, high margin, very good stickiness with customers. There are 10-year contracts. So I would love to own this kind of business, but I think my favorite remains Divi's Laboratory on a dip. Not today, on a dip.
Yeah, so just viewers keep in mind, Parag Thakkar is not talking about Laurus Labs as being the favorite. It was Divi's Lab that he likes. And I think while he's waiting for a dip, I think there was a brokerage note which said that 2026 could be an inflection year for Divi's Lab. Keep in mind that. Keep in mind Laurus Labs, if you're trading Laurus Labs, it's the results day to day. So be very careful. It tends to be fairly volatile on results. So just bear that in mind as well. So watch out for some of these pharmaceutical names. What's kind of gotten lost but could become important is defense. If indeed the talk of town is that this India-EU trade deal could be the mother of all trade deals and could be around defense and strategic defense partnerships, then clearly Indian defense companies also come into focus. Yes, Europe is technologically far advanced in a lot of areas, but Indian firms have come to the fore, right? So I wonder within the defense pack push, it's very difficult. So I'm not gonna put Parag Thakkar in a spot by telling him, "Acha batao kya, what will benefit?" But do the charts indicate momentum in any defense name?
The stock that I'm going to talk about, Parag Bhai will 100% agree to that. It's happened in the past. I'm assuming the view is still the same, right? BEL. Yeah. And the reason I say that is because the stock is at a weekly high. Even during close yesterday, ended at the high point of the day. Mild, positive uptick on this one. Except for that, and a little surprisingly, just ahead of the budget, there isn't any positive traction on a lot of these names. So if you have to dabble with something, dabble with BEL.
Dabble in a BEL. And by the way, there are a lot of expectations that the government will double down on its defense spend in FY27. Looking at the strategic nature of the defense capabilities that the government is trying to build, and a lot of these companies will come into focus. And remember, there have been announcements on the naval defense side as well, all of these shipbuilders in focus. But today, of course, the focus is going to be more nearer term. Let's talk about how the markets are going to open. And in the past, Neeraj has tried to push the markets up with the sound of his voice. I wonder if I'm going to be able to do that today. Let's take a look. And there you go. It is actually a positive start to trade. We were expecting that there would be a mild downtick. Oh, I spoke too soon, guys. I spoke too soon. Let's take a look at the broader markets as well, because yesterday in trade, you saw quite a considerable amount of strength in the broader markets. I wonder if that's the case today as well. Not necessarily. Just about 0.25% for the small cap index, about 0.1% for the mid cap index. IT is, we'll pull that up in just a bit, but 0.2% for the Nifty Bank. Okay, there's reasonable strength in the IT counter. Let's pull up the heat map and see what the picture is. There's more green on the screen than red, and it is not the case like that today. All right, Dr. Reddy's Laboratories up and about, PCS, Hindalco. So a mishmash of stocks, no real key trend moving up, but you see a smattering of these IT companies in the top line that seems to be doing reasonably well. So HCL Tech about 0.75% higher, TCS about that same amount. And Wipro's as well in the top line. HDFC Bank, this is a stock that was proving to be a drag in yesterday's session. It is one of the top gainers today, which is why you may be not seeing too much of a drop for the benchmark, despite the fact that you have so much red on the screen. What's at the bottom of the list? And by the way, Reliance Industries is also trading just about flat, so you're not seeing too much pressure on that side. Interglobe Aviation reacting to numbers. And this was, to a certain extent, expected, though the numbers were better than anticipated, a 3% downtick. Also from the perspective of the outlook of capacity addition going forward and the fact that they're not out of the woods just yet with regard to the disruptions that they've faced. SBI Life, Adani Enterprises, HDFC Life, so the two life insurance companies losing a little bit of ground. And then everything else is less than 1% or so heading into ICICI Bank. So the three heavyweights that were proving to be a big drag in trade yesterday have not done so today. The question is, what are the broader markets doing and what are the individual counters doing? Are they reacting to stock-specific news? Hiral?
Thank you, Alex, for that. If you see in terms of broader markets, yesterday we did see there was some bit of a disconnect coming in between both. Mid-cap 150 down 0.3%, and you have the small cap 250 as well, which is seeing a similar kind of performance as to the mid cap index as well. Overall, in terms of sectors, let's just pull up the sectoral heat map to understand what that is looking like, because overall the trend was somewhere positive in yesterday's session in terms of the individual sectors that we were tracking, but real estate is the one which is seeing some bit of pressure today, 0.7 to 0.8% lower. If you can just have the sectoral heat map on the screens, metals is the one which is gaining steam. IT, mild positivity there, private banks, pharma and healthcare. What's losing out is real estate, the top losing sector, followed by media. In terms of individual counters, earnings reaction on a Syngene, a weak set of numbers that was reported. That stock is in focus as well. You have DLF that is in focus. Syngene down 3%, DLF. Signity was another one that reported numbers as well. If you can pull up that one on the screens, along with a Premier Energies and Zensar. These are a few of the names which actually had a slightly weak set of numbers, along with the Idea Forge as well. Look at a go digit in trade. Bandhan Bank has already been reacting to the numbers. Idea Forge is also under pressure. Bluestone, Ixigo and Emphasis. These were a few of the other names which are in focus on the back of earnings as we speak. HG Infra, CBI and Anti-Corruption Bureau has conducted raid, so a 3.5% downtick coming in on a HG Infra. Sterlite Technologies is in focus as well on the back of the partnership that they've had with a London-based company. Watch out for that one. Viyash Scientific is another one as well, and this is actually renamed. This is Sequence Scientific, which has been named to Viyash Scientific, and this is on the back of the agreement with one of the companies. You have NTPC, Green, Bellrise and Intellect Design also, which are in focus, along with the Ashoka Buildcon on the back of an order win. So that's what we're staring at so far in terms of individual names as we speak. But overall, if you have to look at the heavyweights in trade today, Dr. ID continues the uptrend after a good set of numbers that was reported yesterday. And on the losing side, Indigo, SBI Life. SBI Life, in fact, I think has reported numbers or will be reporting numbers now. Parag bhai, anything when it comes to life insurance companies?
Yeah, so I continue. So I don't own them, but I like SBI Life, HDFC Life. Of course, iPro Life also, yeah. So I'm just waiting for good price levels to enter.
Okay, so that's with regards to life insurance companies. In fact, let's also get in Shrikant Chauhan from Kotak Securities. Shrikant, welcome to the show. Always a pleasure to speak to you. Overall, if you see in terms of where markets go, 25,273 is what you're staring at in terms of opening. We've opened below that 22,300 mark. What are the levels that you're tracking and your top trading strategies?
Good morning, everyone. So for market, it is like under a lot of pressure. It is finding difficulties to sustain at higher levels. It has broken the important level of 25,500, and since then we are witnessing good amount of selling pressure in the market. At the same time, yesterday we saw some buying interest at 25,150. So with a very short-term view, with a view of, let's say, intraday, in case market breaks the level of 25,150, then we can expect furthermore weakness. In that case, the market may even retest the levels of 24,900, which was its previous immediate lowest level. But till then, we can expect range-bound activity, and we need to be stock-specific in this market. It is better to focus more on stock instead of focusing on index, because overall activity is completely in a range, and the range is getting narrow. If we go through with stock-specific activity, then we saw buying interest in mid-sized bank, especially banks like Ujjivan Small Finance Bank, DCB, IDFC First. There we are seeing good amount of buying interest. We like DCB at current levels, which is around 188, 187. There we have a target of close to 193, 195. We can keep a stop loss at 184 for buying DCB at current levels, and I'm of the view that the stock should do well over the period. Also, if we consider the a few metal companies, then there we are again seeing renewed buying interest. In that, we like Vedanta, which is around 677, 678. Okay, fine. Today it is up already at 690. So there we have a target of 700, as well as we have a target of 720. So we are revising targets from 690, 700 to 700 and 720. We can keep a stop loss at 674 for buying at current levels.
Okay, so that's with regards to where the topics of Shrikant go. Shrikant, any view when it comes to Aditya Birla Sun Life AMC? That stock is up nearly 6% in trade as we speak. What are charts indicating?
So there also we are of the view that this AMC stock should do well. in the second half of the year. Most of these stocks are forming some rounding bottom sort of formation, consolidation, and they have stopped falling the way they were falling since last almost 3 months. So now they are forming higher top, higher bottom series, rounding bottom sort of formations. So broadly, I am of the view that this particular stock should also participate in the overall performance of the sector. Currently, it is around 820, 829, but eventually we are expecting stock to move towards 900 or 920. So it's a buy with a positional point of view. With a very short term, we may see some range bound sort of activity between 850 and 810 on the downside. But eventually, I am bullish on the stock with a target of 920.
Okay, so that's with regards to where AB Sun Life is concerned. Shrikant, stay with us. Parag, I want to come back to you with regards to real estate. You know, we were just discussing the disconnect when you talk about the fundamentals, the way analysts are looking at it and the way markets are looking at it. Again, there is pressure today in terms of real estate, the top losing sector today as we speak. Then, according to you, would this be an opportunity to look at real estate? And if yes, which stocks are you liking?
So I like DLF and Oberoi. Of course, the Bangalore-based real estate companies like Prestige and all have reported good numbers, and they have reported good pre-sales numbers also, which is lacking in DLF and Oberoi. But I would like to say that DLF and Oberoi are, I'm not saying these are my table thumping buys. I have a very small weight in DLF, nothing much in real estate. But these are very good levels to buy when they report zero kind of pre-sales number, because the intrinsic value of the business does not change with 1 quarter pre-sales number going to the very low levels.
And to add to that, you know, a lot of your real estate companies are pivoting to data center business as well. Anantraj, one of the first movers, Loda has made commitments as well in terms of data center business. So would you look at that angle as well to explore a real estate company?
Anybody who has got a legacy cost of land, right, like DLF or Anantraj, you know, they will have an advantage. Definitely they will have advantage in everything they do, whether DLF gives it on lease to GCCs or whether Anantraj monetizes through data center. And it's an annuity income, right? What Anantraj is getting is also annuity income, and what DLF is getting as a rent is also annuity income. So I think the intrinsic value of the business just keeps increasing.
Interesting. Shrikant, any picks when it comes to where the real estate pack goes, taking the pressure into consideration? Because Parag Bhai is quite positive when it comes to fundamentals.
See, most of these stocks have fallen vertically, and it was completely unexpected that the stocks can fall like this. But most of these stocks have now fallen to their previous immediate supports, especially DLF, which was around 600 levels in the month of May 2025. From there, all the way it went to 840, 850, but now again is back to the same level. So at this level, downside looks limited. Risk reward ratio is quite favorable for those who would like to take some positional view on the sector and the stock. We also like Prestige. There also we have a bullish view. Currently it is showing weakness, but it is very close to its retracement support of 1400, 1375. So if there is a medium to long term view, then only one should look for adding these stocks, because till now no one has reversed the trend. So all these stocks are still falling. They are still forming lower top, lower bottom series. But most of these stocks have available at important support. So if there is a medium to long term view, then certainly one should look for adding them at current levels.
Okay, so that's with regards to real estate. You know, I'm just looking at a couple of companies which have a good turnover volume today. Dr. Reddy's, CAMS, Chola Finance, Hinzinc and Indigo. If you pull up all of these on the screens, the volumes have been pretty strong in today's session. Kush, coming to you, I mean, we've spoken about a Dr. Reddy's already, CAMS, Chola Finance and a Hinzinc.
You know, I believe that there could be some more upside that could come in Hinzinc, but I think the risk reward ratio from here on might not be really favorable. So, you know, very strictly speaking, this is more of a hold rather than a fresh buy. If you have positions, you know, you could continue to hold. Interestingly, the stock did see a revival yesterday also from those low levels of 650 that we spoke of. So definitely there is traction, you can't deny that, and there is definitely momentum in the entire metals pack, and these are also you know, beneficiaries of that. But you know, do you go out and make a big allocation right now at these levels? I'm afraid not. So maybe on declines like you got yesterday, you could consider a buy, or you could hold whatever existing position you have with trailing stop losses. The other three names that you mentioned, I think Dr. Reddy's with a follow through, a move today becomes a little interesting. But don't forget, there is the congestion of the 20, 200-day and the 50-day moving average at the 1250 zone. This is also a long-term support zone, which will now start acting as resistance, because the stock's on the way up. So maybe I'd hold up my position. Once the 1250, 1255 zone is taken out, do you consider a fresh buy? But up until then, you can continue to hold the position rather than, add on current levels.
Just wanted to ask you on Voltas. That stock is up nearly 5%. Any breakouts that you're seeing, Voltas?
Not really. This is a range play. By the way, this is very well identified. The reason I say that is because 1285, 1290, that's been the long-term support zone for the stock, and yet again it's rebounded from those levels. 200-day moving average being taken out today. Volumes at open very healthy. So from a range play perspective, I would say this is very healthy. The only thing is that it's now somewhere in the middle of the range. So the risk-reward ratio will not be as favorable. So if you bought it yesterday or maybe early in the trade today, you could continue to hold. I would suggest a trailing stop loss at the 1325 mark. Don't go and buy a fresh because the primary trend for this one right now is still consolidative to sideways.
Okay, so consolidated to sideways in terms of Voltas, that's what you're focusing on as we speak. But thank you, Parag Bhai, thank you, Kushan, thank you, Shrikant, so much for joining us on the show. It's always a pleasure to speak to you, get your strategies for the viewers as well, and the money that they make on the back of those trades. But shifting gears to macros now, we're now joined by Shantanu Sen-Gupta, Chief India Economist at Goldman Sachs. Shantanu, welcome to the show and always a pleasure to speak to you at NDTV Profit as well. This is Hiral on this side. My question coming to you right now is there is lots that's happening right now when it comes to global markets as well in the form of tariffs. You're talking about geopolitical concerns as well. Sometimes you feel that they're easing, sometimes you feel they're probably exploring further. And thirdly, you recently have the IMF, which has come out and upgraded your stance when it comes to India's growth story for FY26, but expecting some bit of moderation when you talk about 27 and 28. With the way the schematics of things are panning out, how are you looking at the entire setup for 2026 as a year first up?
Yeah, thanks for having me on the show. Look, we think that India's growth is going to be resilient going into 2026 or FY27. You've seen a pivot happening in fiscal policy towards the consumer from public capex over the previous 3 or 4 years through the income tax cut and the GST cuts. Overall, the external balances story also remains quite resilient. The reason why you have had a higher growth this year and compared to that, including the IMF and us and most of consensus is lower growth next year, is because you had a front loading of fiscal expenditure and some front loading of exports to the US. That will dissipate away. But the domestic demand story for us remains resilient. The base consumption, which is the mass consumption, is in a nascent recovery stage. So we think the setup looks okay, and as you pointed out, unprecedented uncertainty really. So you need to reserve some policy ammunition in case you need to react.
So Shantanu, when you're talking about, ammunition that you need in the form of policies in the domestic market right now, let's first divide it between the urban and the rural space. A lot of commentary that we're getting from corporates as well right now is that your rural markets are seeing good growth. Urban, it's been quite some time that we're expecting that revival to come in and sustain, but I think that's still on a back burner somewhere. How are you reading the divide between the two when you look at the economic indicators right now?
So that's very consistent with our macro view as well. The part of consumption where we are bullish on is the mass consumer, which is the bottom end, not just rural, but also the lesser income urban, and multiple tailwinds there, right? I mean, you've had a good crop cycle. You're having a lot of transfer payments at the state level going towards women in lower income households. And the GST cuts also at the very bottom end is beneficial for that segment. The upper end, we would divide it into two parts, the middle and the top, which our consumer analysts have been calling affluent India. That has grown at a very rapid pace post the pandemic, and it's slowing down a little bit. So, you're still growing, but it's not as fast as what you're growing post pandemic. The middle is where some concerns are, if you especially look at the job creation, the advent of AI, and what that could mean for that segment of the population.
which is where some bit of monetary easing helps. Some amount of fiscal easing through the income tax cuts has helped in deleveraging those balance sheets. It hasn't yet amounted to any consumption because the balance sheet was quite levered at the aggregate level. So we think that some deleveraging is going on there. So the part again that we are confident of, or we think is we are quite bullish on, is the bottom end consumer rather than the middle or the top.
Shantanu, just wanted to understand, I was reading your report and I could see here that you're assuming that the India-US trade deal will happen by the first quarter of calendar year 2026. What if it doesn't happen? How does your GDP estimate change? Because we are already late by around 6 odd months. 6 months back also we were expecting this deal to go through, but it is yet to go through.
Yeah, great question. I mean, look, our assumption is that it's been a long time. You've had a lot of back and forth on the deal. We still think that it gets done by the end of Q1. If it does not, there's some downside risk clearly to our numbers. We are looking at 6.7 for calendar year 26, 6.8% YOY growth for fiscal year 27. I would say there's some downside to those numbers, not just from the trade account, which means that the current account will be slightly worse because you will not be able to export segments like textile or gems and jewelry to the US, and it's difficult to pivot in those sectors very quickly towards other export destinations. But our view also is that that is the case where you will be using some of the reserved policy ammunition, which I was alluding to earlier, which means that in our base case, we think that the RBI is done with the monetary policy easing. We think that 5 quarters is where they hold for the rest of the cycle. But if the trade deal doesn't come through and there are further headwinds to growth that emerges, that is when we think that the RBI can ease further, and the fiscal space can also be used in terms of supporting these sectors like textiles, gems and jewelry, and so on.
Okay. As you were mentioning that if the trade deal doesn't go through, there could be headwinds to growth. But if you look at the recent export data, obviously the export data is somewhat suggested by, supported by the rupee depreciation as well. But at least the export data is not showing much of a big impact coming in post the 50% tariff that has been imposed by the United States. So is it even a game changer now for India? What are your channel checks telling you?
Well, I'll be careful about that. The export data in the first half of the fiscal year is showing very robust growth because you have had a front loading of exports to the US. So if you look at things like machinery imports and capital goods IIP production, that has been on a rise up to about October of this year, and then in decline in the last couple of months. That's because the front loading is already over. So some of this impact of the 50% tariff, the effective rate I would call more like 35% because there are a number of exemptions of these tariffs is showing up in the data now, and it will continue to show up. It is another thing that the overall current account balances and the external balances remain quite healthy, and that is mainly supported by the services exports, which continue to remain quite strong, and remittances until now. So we are looking at about 1% of GDP current account deficit. If you don't have the deal, probably you have a downside of around 20 basis points or a bit more. So continued rupee depreciation would be the path in that kind of a scenario. And our expectation would be that the RBI and the government come out with both monetary and fiscal ammunition.
Okay. So Shantanu, here we're talking about the impact when you're seeing in terms of the trade deal happening, not happening, how estimates change, etc. Let's look at the next big event, which is Budget 2026 in the next couple of days. What is it that you're expecting in terms of policy shifts that we spoke about earlier as well, that the government should focus on or will probably focus on as well, gearing up for FY27?
Right. So I think the big change that is going to come around in this budget from what you've seen in the past few years is that the amount of fiscal consolidation will be lower. So you've had 1.6% of GDP fiscal consolidation, 80 basis points each in the previous 2 years. You're going for 40 basis points consolidation in this year. Our sense is that it's going to be less than 40 going into fiscal year 27, which means that the fiscal deficit in our mind is around 4.2 plus minus 10 basis points. And that clearly is a lower drag on growth. We think that the government's pivot that has happened towards the consumer continues, but there's not too much else that the government can really do in terms of taxes, because you've already given the GST cut, you've given the income tax cut. We don't think there's more changes happening there. But this extra room can now be used twofold. A, your capex drag will be lower, and within that capex, you can shift towards defense and railways. And B, if indeed, the scenario we were discussing earlier, indeed the trade deal gets delayed beyond Q1 and goes into the first half of the fiscal year, and there's still uncertainty, you're reserving some of that ammunition to plow into the sectors which are primarily impacted. So right now you can have credit guarantees for these sectors like textiles, gems and jewelry, and so on. Eventually, you might need a bit more of direct fiscal support for those sectors. So that's how we would think about the budget, that broadly you consolidate lesser, you have a bit more room to either do capex within that, surely defense, given the geopolitical landscape, and have some ammunition for the sectors impacted by textile, by the US if the need arises.
Running short of time, but your view when it comes to the Indian rupee with the kind of movement that is happening in the last couple of trading days, where do you see it stabilizing?
Yeah, look, I mean, the uncertainty is quite unprecedented, right? And if you're facing an external shock, not just through the current account, which we discussed earlier, but also flows. I mean, I think all of us know that flows have been quite tepid in India. The right macro response is for the currency to weaken. So we would expect the path for the rupee is higher from here, and the RBI comes in to intervene and stabilize the volatility only. But coming in for very heavy intervention and not allowing it to depreciate when you're facing these external headwinds and you're unsure about flows or the tariff deal, etc., will not be the appropriate policy response in our view. So in our view, it's the right macro response that the RBI is having with the dollar rupee.
Okay, so that's with regards to the rupee. But thank you, Shantanu, so much for joining us on the show. Always a pleasure to speak to you. But now let's listen in to what the management of Cyient has to say when it comes to a mixed third quarter that has been reported. Sukamal Banerjee, Executive Director and CEO at Cyient, joins in.
Let me first start off with the standalone IT business, and largely what people and as well as analysts on the street are seeing in terms of growth path finally coming back in this particular quarter. Now we've seen some signs that you sowed in the last quarter, and that's starting to see some effect as well. If you can talk us through what's worked in that sense for Cyient in this particular quarter, specifically for the IT business.
Sure. Good morning, and thank you for having me. I think it has been a holistic turnaround work that we have been working on, and I would definitely say this is still work in progress, but we are very happy with the progress we have made so far. To answer your questions, I think we went back to some of the basics of how we ensure that we execute very well. We went on to make some critical decisions with respect to how we drive our go-to-market, how we ensure that the technology investment, which is around digital and AI, plays out in the market, make it more simpler, make it easier for us to take it to the market, make it easier for the customers to comprehend and buy on board. And of course, we have been working on some of the organizational changes regarding performance management, performance culture, which is obviously going to be something that we'll continue to work on. And I think what you see as results is a reflection of the foundational strengths of Cyient. We are just making sure that we execute a little more sharply to ensure that we get the results that you see today. We'll continue on that path, and obviously we have more transformation work that's ongoing, which will also start showing up in the future quarters.
Mr. Banerjee, in regards of the conversations on the ground, of course AI has been a key talking point. If you can give us some perspective of what AI is for you right now, because we started to see that a lot of the PR IT companies have started to report Some of them have started to report revenue contribution in terms of AI, as well as if it's meaningful in terms of starting to show in the numbers for what the effort has gone over the last few quarters. So if you can give us that perspective as well.
Sure, absolutely. I think if you think of pure play engineering services companies like ours, and we consider ourselves more as a product lifecycle company beyond engineering services, AI is still in its early innings. And there is definitely going to be an adoption curve which we'll go through, like we have seen in BPO and some of the IT operations aspects, which has led to significant expectations around productivity and even price compression. From our perspective, and I think we have published this in November in a point of view that we articulated for what it means for critical industries that we operate in, what AI means for it. And I think it's a far more involved aspect in terms of when it comes to AI. We call this embracing intelligence. We believe that domain knowledge and the human knowledge, which has been accumulated over a period of time, plays as significant a role as the power of AI. And the two have to be brought together for us to drive meaningful value for the customers, whether it is with respect to their products, in terms of the features in their products, or with respect to the development cycle, the engineering life cycle, as well as the aftermarket and the long duration these products are out there in the market, sometimes for decades. So I think it's a far more involved journey, which we are calling embracing intelligence, which is human plus artificial. And I think that's resonating very well in the marketplace. And that's the journey we'll continue driving. We are not considering reporting AI revenues separately at this point in time. And the reason is we believe AI touches almost everything that we are going to do in the near future. So almost every part of our business will be touched by AI, whether it is delivering to our customers or it is adoption of AI within our own organization. So I think we are taking a more holistic view, and we will, as definitions emerge a little better and sharper, we might consider. But the way we think about, as I said, is about embracing intelligence. It is also being very validated by some of the industry publications. Just recently, Anthropic published research which shows that the domain experience, and a minimum domain experience they're talking about is 14 years, is critical for meaningful outcome using AI. And that's what we are building our offerings around.
Got that, Mr. Banerjee. But, and fair point, it is touching a lot of areas you rightly highlighted. But I want to quickly just talk about, one interesting aspect that you've been maintaining is that your target of EBIT margins, quarter for FY27 of 15%. Now, in this quarter itself, you've done 9.5%. So is that the consolidated margins that you gave a perspective on, or is that standalone firstly?
No, it is on the standalone. Okay. So if you see the numbers for this quarter, obviously we had a one-time hit because of the labor code changes, and we took a provision to accommodate for the labor code changes. Our real operating normalized margin, as we also talked about in an investor call, was 12.4%, which was a 25 BPS increase. And we have been working on both doing some restructuring in the first 3 quarters, as well as not slowing down on our investments. Those are things that, while investments will continue, I think the restructuring is pretty much behind us. And you probably will start seeing that showing up in our EBIT and, of course, in our net profit as we go along in the future quarters. So we remain confident, and we remain focused on that 15% by Q4 of FY27.
Got that, Mr. Banerjee. Also, one question on your segments as well, because transportation networks is, of course, the top 2, but strategic units is also almost 40-45% of your revenue. Now, that segment last quarter got impacted. This time as well, it's in the red. Any view that you can offer investors of where do you see a turnaround in that segment?
Sure. It is actually 27% of our revenues on a quarterly basis, as reported as part of the last, and still significant, which is the point you are making. From our perspective, we see regular growth in these segments, or industries which make up this segment, but it is not consistent. And I think the reason why you see the numbers the way they have played out this quarter, we were more or less flat. Obviously, it was down, but marginally so. it is because one or the other segment does not perform on a consistent basis. I think the potential in these segments is significant. The reason we called it out as strategic units is because we know it is going to be at least a midterm fix. Midterm, in my definition, is a 3 to 6 quarter horizon. We came up with this in the Q2 of this fiscal year. So we are talking about another couple of quarters at least that we start making sure that we can consistently show positive growth in these areas. The potential clearly exists. As you know, this is essentially constituting of healthcare, energy, and mining and minerals. So I'm sure in next few quarters we should be there.
As we wrap up, Mr. Banerjee, just a quick question, because it's a consolidated entity as well. On the new semiconductor verticals, now you had a 36% YOY growth in terms of order intake, and it's understandable that it is currently a loss-making unit. Do you expect that the target for you being a bit neutral by FY27? What are some of the goalposts, maybe in the near term, maybe for Q4 26 and Q1 FY27 that investors can watch for in terms of assessing that growth going forward?
Sure. I think, firstly, we have to think about our semiconductor business as more a product business than a services business. And I understand the complexity when somebody looks from outside of a product business sitting inside a services business. If you think of any product business, it has to go through a period of investment. We have taken a very sharp focus on the market that we operate in, which is largely around power management for our products. And we have announced an acquisition in that space, Kinetic, in the month of December, which we expect to close by April. That will be accretive to the business in terms of margins. But from an organic perspective as well, I think the question you asked is what to look for. We should look for the growth in the business. And as you have seen in both the last 2 quarters, we have had healthy quarter-over-quarter growth in double digits, of course, on a smaller base. But we intend to continue that, and that should be the indicator.
Well, shifting focus from IT to renewable energy. Now, India's renewable energy push remains on track with solar and wind at the core of its transition. As cost falls and manufacturing scales up, the big question now is how this momentum sustains across the power industry and the export market. Our colleague Rishabh spoke with Santosh Kumar Sarangi, the Secretary at Ministry of New and Renewable Energy, to understand why policymakers remain confident and what lies ahead. Let's listen into that bite.
There's a lot of interesting commentary that is going on, sir. Currently at the World Economic Forum, you have President Trump, who has come out and talking a lot about wind energy. He's criticizing the sort of unit economics wind energy is offering. He has a lot of opinions on renewable energy being losers and traditional sources of energy sort of continuing. Talk to us what you feel as a part of the MNRE in the Indian government. What is the sort of stance that India will take when it comes to such commentary that is coming in from major economies like the US?
Well, from a MNRE perspective, I would like to reiterate that renewable energy, especially in the domain of solar and wind, will continue to drive India's green energy transition. And in this, the transformation that India has seen from a mere 2 gigawatt of deployment in 2014 to about 137 gigawatt of solar today, and overall about 267 gigawatt of non-fossil fuel based energy, is something which has paid dividends in terms of lowering prices for consumers. It has overall driven down prices of solar energy to about 2 rupees 40 paise per unit. And with declining battery energy storage cost, we are now discovering prices of anything between 2 rupees 90 paise to about 3 rupees 12 paise for solar with about up to 6 hours of battery storage. So in terms of its ability to provide reliable energy, in terms of its ability to provide low cost energy, I think green energy, both solar, wind, along with battery energy storage, will continue to support India's emerging power demand and will support India's economic growth.
So following up on that, you have President Trump who's walked out of the International Solar Alliance. That is something that India and France were co-leading. What does this say about India's strategy going ahead when it comes to renewable energy, right? Will India continue to align with global coalitions like the ISA, or will India pursue its own independent energy policy that is not governed or partaken by major economies like the US?
Well, both are not mutually exclusive. India's ability and motivation to design its own energy transition strategy is something which has been going on since 2014 onwards, and in this journey there has not been any stoppage. But when it comes to international alliances, India remains a firm believer in International Solar Alliance's objective to take decentralized solar energy to different parts of the world and to realize and fulfill the ability of nature to supply energy to population at low cost. So from that perspective, we already have about 125 member countries of ISA who still believe in ISA and continue to support ISA's objectives. So from that perspective, ISA's initiative in South Asia, in small island countries, in Middle East and in Africa will continue to prosper and will continue with the same vigor, with the same momentum.
Right. So since we're talking about solar energy, that has easily proven to be the backbone of India's renewable energy sector, right? That forms a very large part of the certain 267 gigawatt capacity that India has built. Talk to us, you spoke to us about the sort of cost that has come down per unit of solar energy. Talk to us about the sort of rural impact that it has also had. There's so many schemes that the government is running for more and more solar energy adoption. But what are we seeing when it comes to urban versus rural? There's some sort of a cost price difference that has come in urban markets. What about rural markets? Or is it still a viable option for people to set up at their homes? And how has that penetrated when it comes to rural India?
So we have seen two things. One is through government schemes like PM Surya Ghar and PM Kusum. There has been a massive boost to decentralized renewable energy deployment. And we have seen that states like Maharashtra, which were giving a subsidy of nearly 15,000 crore for agricultural feeder level subsidy, are now deploying PM Kusum in a very large scale. They have done a tender for 16 gigawatt, and that will lower their subsidy by a huge margin. And similar initiatives, be it in Rajasthan, be it in Gujarat, be it in Madhya Pradesh, is also ensuring that farmers get the benefit of getting free electricity using solar facilities, and at the same time the states reducing their subsidy outgo, which was going towards either agricultural feeders or to domestic consumers. You pointed out about the difference between urban and rural consumers in deploying solar energy and the cost differential. So for houses which used to have an electricity bill of 2,000 rupees and above in a month, for them it makes ample sense to immediately apply under PM Surya Ghar and deploy it quickly so that they can reduce their electricity bills to a substantial extent and at many times make it free. But as far as rural households are concerned, generally the consumption is less and many rural households are subsidized by the state governments and don't pay much of an electricity bill. So in those cases, we have also initiated utility-led aggregation model where 1 kilowatt, 2 kilowatt demand could be met and the initial upfront cost will not have to be borne by the consumer, and that should allow a large number of rural consumers also to avail of PM Surya Ghar facility, and that will also enable the state governments to reduce their subsidy burden for domestic consumers over a period of time.
So would you be able to share some numbers in terms of rural adoption and urban adoption when it comes to solar energy? How many households would there be that would solely be reliant on renewable energy as their primary means of energy?
So currently, between the government-led schemes like PM Surya Ghar and as well as private deployment, we expect that about 7 to 8 gigawatt of energy, distributed energy deployment is happening in rural areas, whereas through PM Surya Ghar, about another 8 gigawatt is happening in the urban areas. But in course of time, we expect that with utility-led aggregation models coming into force, the rural deployment is also going to increase.
Gotcha.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार।
Welcome back to India Market Open on NDTV Profit, and now we have Samit Sarkar also who's joining in for this interesting conversation. But let's just quickly pull up markets, Nifty 50 as well as Bank Nifty, and see what's happening. We were thinking that probably there will be some resilient moves there, but absolutely where we started off, that's where we are hanging in on Nifty 50 as well. Bank Nifty also a pretty similar trade, though we're trying to inch lower, seeing some bit of further profit booking that's coming in with cuts of around 0.3% coming in there. But let's get in. Vinay Jaising, CIO and Head Equity Advisory at ASK Private Wealth as well. Vinay, welcome to the show and always a pleasure to speak to you on NDTV Profit. Vinay, my question coming to you is specifically on the report, a very interesting headline when you're talking about the global uncertainties in 2026, which are at their peak, but the world is getting domesticated. That's what the focus is when you talk about India's growth story as well, where everyone's focus is on the domestic growth story. People are probably somewhere discounting, the global market impact that could be coming in as well. From here on, what is your key expectation if you have to look at 2026?
So as far as the world is concerned, the trade policy of US with the rest of the world, not just India, should come through in the next 6 to 9 months. Remember, there are mid-year elections coming in November for US, and the Supreme Court decision is also awaited, which should come somewhere between Feb and June. So that should give us some respite for markets globally, though the global markets are not doing as bad as India is. You've seen also the Japanese bond yield having moved up and the US bond yield having moved down as far as interest rates are concerned, which kind of tells you the Japan carry trade is also behind you. There are question marks on what's happening on AI world over as well. The earnings growth trajectory of the Magnificent Seven are great, but if investors start looking at, yes, that's a trade which is done, we need to look somewhere else. India is a great non-AI market for them to look at. Emerging market, China, Korea, they're up between 38% and Korea is up more than 100%. You've seen a lot of flows move out of India into them. And the question is, when does India get flows coming in? So I think the year 2026 for India should be a lot more positive. A couple of reasons. First, valuations have been corrected. Second, you're seeing in quarterly results which are coming up, some pivot of earnings momentum being higher. Third, you're seeing a much positive loan book growth. Fourth, the budget is around the corner. Having said that, the government does a lot of changes during the year as compared to what they did in the budget. We saw the GST changes come through. We saw the excise duty in tobacco increase. So the government is doing actions every month. But yes, there is an event of the budget coming up in Feb, which should help the country as well. And liquidity is a great point for the banking system in India. The key risk here is the dollar versus the rupee, which has appreciated as much as 9%. So if you were a US investor, you're 9% minus from last year to this year, and the markets are virtually flat. So that is the question you're having. Has the US rupee trade been overdone as shown in a couple of RER charts, or are we seeing the currency become a little more softer?
Interesting take there. If you have to look at India, Vinay, and let's peg it with what's happening in the AI trade globally. We have been seeing that rally that did come in terms of AI play in the global markets. It seems India will follow. Do you think that is a possibility where the non-AI market, which is India, could be one of the beneficiaries if there is some bit of trade unwinding happening there?
Well, I think so. So two questions of yours out here. First, India will follow suit for sure in increasing investments in AI. You have under 1 gigawatt of AI in the country, and that number will more than triple in the next couple of years. So you're seeing a lot of investments both by the domestic big companies as well as global companies like Amazon or Google coming into the country and investing into the space. So you will see a lot of investments in AI. That's step one. Second, you know for fact that, India, the top 10 market cap companies of India, very little of them, there is one telecom company, there are two IT companies, and very small amount of their overall revenues come from AI today. So clearly, you compare that with US, the top 5 companies of US are all AI enabled. So once people think that, the AI trade has just been too strong, it takes a pause, you should see these flows come into the country.
Vinay, as you were mentioning, that valuations have now become relatively cheaper. Earnings growth is expected to kick in given the fact that government has announced various measures. So which are those sectors where you're finding, or which are those pockets where you're finding this lucrative opportunity of cheap valuations and earnings growth?
Sure. So I would break this up into 3 baskets. The first is the financial and consumption basket. The second is the Make in India basket. And the third is the one which runs with the budget, which is the CapEx basket. In the financial basket, you've seen liquidity being gallowed in the country. You've seen interest rates move down. And in a way, you've seen prices go down because of GST. So the loan book growth of the banks, are appealing. They were down to about 9%. They're inching up to 11. You've seen retail loan book growth go even higher at 12. You've seen some positive signs coming in the corporate world as well. That's increasing. So I would say the financial sector, more so the banking sector, where valuations look a lot more positive. That's a space which should do a lot better. Valuations there are appealing. In the consumption front, especially if I look at telecoms or auto, I put both telecom and auto in consumption because at one place the ARPUs go up as we talk a lot, and the other space, because of GST, you're being able to afford more 4-wheelers and 2-wheelers. You're seeing the volume growth story grow faster than the other spaces of consumption. So that's 2 spots I would look at, financials and consumption. Also, what has happened is with the currency moving from 82 to 91 in a year and change, there are companies which gain from a dollar trade, be it the IT companies themselves, where we've seen the rate of change of earnings cut now move up to the rate of change of inching up, I would say, not moving up substantially, but inching up to lesser uncertainties. And most of the companies are declaring better F2027 estimates than 26. So you're seeing a positive ray there. Pharmaceutical and healthcare looks very attractive, especially the domestic angle of those companies, which have a tie-up with US. Please remember, pharmaceutical has been exempted from imports for US for tariffs. That's something we sometimes forget. And finally, the CapEx story. The Indian government has, invested between 8 to 9 trillion rupees in the capex, which we can see out of the 11 odd trillion rupees, be it in rail, be it in road, be it in defense. And that number, I think, is set to increase. And that's a play which we do even for the budget as far as we are concerned. So all these 3 parts, I think, have some lot of steam for valuations, and they look appealing to us.
Right. Picking up on the capex point that you just mentioned, yes, the number is expected to increase, but the growth rate will come down from the government side. And secondly, for a very long time, we have not seen a significant pickup when it comes to the private capital capex. So firstly, why do you think that private capex is still lagging? And in capex cycle, other than defense, which are those key sectors or segments that you're focusing on?
Thanks. So, first on the private capex front, if you look at the overall capacity utilization of the country, we are still at about 74, 75%. We need to inch up to 80% for overall capex to increase. Having said that, yes, lots of capex companies, be it for AI or other purposes, have increased their capex number. Our analysts tell us about $45 billion would be spent by Indian companies in the next couple of years in the AI segment. So you are seeing a bit of capex rush come from the private, but what's happening more so in the private space is they're acquiring other companies which are not doing so well, which doesn't get captured as capex. So though they are growing, you're not seeing the overall capex number of the country increasing. Having said that, apart from defense, I would say you have cement or infrastructure because of what's happening in roads and highways, ports, as well as pipes, where we would be excited as far as capex is concerned.
You know, I mean, that's the story that everyone's betting big on as well. But thank you, Vinay, so much for joining us on the show. Always a pleasure to speak to you as well. And I think what's going to be interesting from here on is the conversations that we're going to have with Vinay Jaising on the budget as well. But moving on, big reactions coming in from Davos after Trump's Europe shakeup. Let's listen in as Bharti Enterprises Sunil Bharti Mittal says that Europe must unite and speak with one voice.
There's too much noise, and as Secretary Bessent said, don't react to noise. Keep your calm, things will get better. I believe that. In the end, US is an important part of the world, one of the most economically powerful, militarily powerful nation. But it is still a democratic nation where if things go completely out of hand, things will start to come back. What is important is for the world to know the old world order has certainly shifted. Now, where will it land up? What new institutions will come through it? But something has to give now. Europe will have to come together as a voice. No more fragmented Europe and together through Brussels. It doesn't work. Have one voice. You can't have a situation where two leading heads of state have a strong reaction and two say, no, we must compromise. It doesn't work. Europe in the next 10 years would have made their own arrangements on defense, on security, on intelligence sharing, on satellites, GPS, but it will take 10 years. They have been, if I may say, Europe has been on a vacation. And when you come back from a vacation, you can either be very charged up to do things, or you could be in a lazy mode, not do much. What Trump has done is, I think, shake them up.
Right, so Bandhan Bank, let's turn our attention to the bank that's actually making some waves on the exchanges. It's reported a weak Q3 NII, pre-provisioning operating profit as well as profit after tax all have declined year on year, even as the bank's asset quality has actually come out quite strong. And this asset quality strength, just guys, for our reference here, this is coming in because the bank has gone out and sold a large chunk of its NPAs to ARCs, and that's why the gross NPA number has come down very, very sharply. But on the operational side, you're seeing the performance not looking that great. Actually, we have with us Partha Pratim Sengupta, the MD and CEO of Bandhan Bank, to take this conversation forward and to understand what exactly has happened at Bandhan Bank in Q3. Mr. Sengupta, welcome to the conversation. Let me start with the profit number, because that's a big number, 52% dip year on year. How do you justify this? What actually happened during the quarter?
Yeah, so if you look at the year-on-year profit, so last year what the profit has been posted has come because of one-time payment of the CGFMU funds, and also some payment has come from Assam government. So if you aggregate those two, it was almost 595 crores which has gone to the other income. There were some one-time expenses that we also need to offset, and giving effect to that, the actual profit last time was 129 crores. Why I'm saying so? Because this year there has been no such income, one-time income that has come or accrued to us. So if you take out that Assam and government funds and the CGFMU funds of 595 crores, and also if we offset the expenses, one-time expenses mainly due to some taxes and ESOPs related, the profit actually last year was 129 crores, which has now purely through operations, we have made it 206 crores. This is the yearly impact. Quarterly impact, we have seen that it was almost a very low profit last quarter. We just posted 112 crores because of the effect of the repo rate and other factors. That also we have improved by 89%, and Q on Q, the profit has gone up to 206 crores.
Right. So those were, of course, the key elements that actually moved the profit. But even on the operational side, sir, your net interest income, that's also dipped about 5%. Is this because of the factors that you've mentioned already, or is there more to do with the way the quarter has panned out for you?
This NII has been largely impacted because of two reasons. The first one is that definitely the impact on the repo rate. So you know that almost 75 basis point was upfronted. That is the first reason. Number two, we have been making a transition. We were more in the unsecured segment. We are more in the micro banking segment. So that guidance we have given it earlier also, that we now need to become more of a universal bank. looking at our portfolio and should not put all our eggs in one basket. So we're moving from a unsecured dependent book to a more secure dependent book, and that we have achieved. Today, my secured percentage is 57.3%, and a year earlier it was only 52%, and for even less than that, 48% a year earlier. And today we have achieved almost 57%. So there has been a drastic improvement in our secured quality, which has improved the overall quality of our assets. But as you know, that secured books is very competitive. We don't get that much of interest in the secured book. So definitely the impact of the repo and the secured books as we have moved upon for the day, this has have an effect on the net interest income. But if you look in the current quarter, sequentially our net interest income has improved.
So just take us through what exactly the next quarter looks like, this March quarter, because the rate cut that happened in December will also have an impact on your overall book. So how long do you think this impact will last?
So there is one, the effect will be there from January onwards, the 25 basis point, but it was okay for 25 basis point. I think all banks are ready to absorb it. It will not make much impact, but when it happened almost 75 basis point upfront, that really makes an impact. And especially for our bank, when we were making a transition from the unsecured book to the secured book.
Okay, let me take the attention to the secured book now. What exactly is your goal on the secured side? Are you looking at higher yielding secured assets, or are you happy with the way this mid-margin sort of book is panning out right now?
So let me tell you, we are targeting both. One is definitely where we are able to take a high interest income assets for that year. We are targeting like in the affordable housing group is definitely one thing. We are also in the personal loan book also we are targeting, but more or less we are more concerned about the quality of the secured books. So let me like in the wholesale banking, in my corporate book for the day, almost 95% of my accounts are A+, A and above for that day. Almost 25% are AA and above. So we are focusing on the quality on the one side, that is in the secured book. And also we are focusing secular growth in across all segments. So it is not that we are concentrating on a particular segment only. So we are going almost secular in the retail, in the housing, in the wholesale, everywhere we are doing it.
Tell us a little bit about the asset quality scenario, because that's seen a sharp improvement. Of course, the ARC sale did help. But overall, what is behind this improvement other than the sale?
So asset quality, definitely it has improved. One thing is that we have taken I would say a very important step this time. We have sold almost close to 3,200 crores of assets to one of the ARCs. And this has definitely given a one-time reasons. Of course, we have got a hit in the profit and loss because of making higher provisions, because you know that our PCR on account of this almost is at the same level at 83% if we include the write-offs. And we wanted to maintain that provision coverage ratio. So we have taken a hit in the balance sheet, but we decided that we should cleanse also our balance sheets, which were piling up with the NPA, especially in the EEB segment, that is the microfinance segment, right from the days of Corona. So we have got rid of those assets. We have been able to sell it to our ARC company, where we have also invested in the SRs.
This sale has also happened at a steep discount. How do you see that panning out for Bandhan Bank going ahead?
Yeah. So we got around a valuation of 18% in respect of the NPA pool and almost 9% in the write-off pool. But the good thing is that in the NPA pool, their share is much more. So they have invested 53% and we have invested 47%.
Understood. Tell us a little bit about the microfinance portfolio, because that's the other element that everybody talks about a lot. Do you think that the stress has now ended as far as the microfinance portfolio is concerned, or do you think there's more to look out for?
So let me tell you that we are really seeing green shoots in the microfinance segment. The first indicator is that my slippages have come down by 200 crores. It's a great indication during the quarter. The second indication is that my disbursements are also growing up. So almost Last quarter, we have done disbursement more than 14,500 crores. And if we just negate the effect of these ARC sale in the microfinance book, because 3,200 crores of assets they have sold, there is actually a growth in the books by 1,100 crores. So definitely I can say that these are the two very positive factors. And when we look at the bureau data, we are finding that things and the parameters are improving in all fronts, whether it is the delinquencies, whether it is the repayment, so whether it is the collection efficiency. So there has been quite a good front, and our collection efficiency of regular accounts is still at 99%, so which is a very good indication, I can say.
Let's take our attention to the advances growth side, because there again 10% credit growth is a little slow for you all. How do you see this? Why has this happened?
These assets, 3,200 crores, means what? My books were 3,200 crores more. So these assets, I have sold it at one go. So if I had not sold these assets and with this 10% growth, my figure would be much more. And so it would indicate 12% growth. Simple thing is that today my book is 1,45,000 crores. If we had not sold these assets, it would be 1,48,000 crores. So from 1,31,000, I grow to 1,48,000 crores, which is a 12% growth.
So what would the like-to-like growth look like for Bandhan Bank in Q3?
So that is what I'm saying. The like-to-like comparison, if you have taken these assets for the day, it will be 12%.
Okay. Understood, sir. In terms of your trajectory, your outlook for the growth, 10% is still low. Do you expect to end the financial year higher than that number, though?
Yeah, definitely. We are, as I have told you, that this is not. There are other things also we have been doing. So the first thing is that you have to look that we were making a transition, because we were mainly microfinance oriented banks. So there we are transiting to making a transition towards a more universal bank. So definitely we have been a little bit cautious also in the building of the assets, as I've told you, that in the wholesale banking group also we are looking at the quality of assets also. So definitely my target will be to grow faster than the industry, and that's what my aim is. But current year, at least current quarter, I can say that since the EV is taking a positive turn, and I am expecting a good growth in this segment also. So maybe that we will be achieving a better growth this quarter. But of course, it is our expectation.
Right, Mr. Sen Gupta, thank you so much for joining us and taking us through the bank's result. That was Bandhan Bank's CEO talking about the quarter that went by. Of course, looks like the stock market's rewarding the stock at 4.5% higher. With that, that's a wrap on India Markets Open. Up next is Ask Profit. Stay tuned to NDTV Profit.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर, ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
shady footage, guys. Apologies for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices. It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you.
Hello and welcome. You're watching Ask Profit right here on NDTV Profit. My name is Puneet Zaveri. With me is Mahima Vashrajani, and over the next hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that is flashing on the top of your screen. There is a WhatsApp number. You can also call us, speak to us directly, and give us your stock-related queries on the number that's also flashing. So that's the landline number. But it's going to be a very interesting session today because we've seen for the markets yesterday that the last hour bought some buying back territory. If that story is continued, let's quickly take a quick check of the markets before we take all your stock related queries. The Nifty 50 yesterday was hovering around the 25,300 mark and crossed that because of the last bit. But we're back at that level now, up almost 15 points. So very neck and neck as we start Ask Profit, and we'll keep monitoring that over the next hour or so, what happens with the index. When you look at the heat map for the Nifty 50, that's the other key one. Overall, at the start of the trading session, not too many wild moves for the Nifty 50. We saw, this is of course the sectoral index, but let's quickly first look at the Nifty 50 heat map for the stocks. The 50 stocks for the Nifty. DRL is up almost 2.6%, so is Hindalco, Asian Paints as well as Tata Steel. That's the top 4 to 5 gainers for the Nifty 50. On the downside though, Eternal, yesterday was when the stock was in focus because of its results as well as resignation of Dipinder Goyal. post the initial 6% uptick, we've seen selling, and that has continued today as well. Indigo, SBI Life, Power Grid are some of the other counters that are down as well. The sectoral heat map now for the Nifty will give you that perspective across sector, what's happening. We've seen largely that the metal index has continued to be an area of strength for the markets, and today as well it's continuing to do so. I'm sure we're going to get some queries on Hindustan Zinc, Hindustan Copper as well. Barring that, the healthcare, the MNC, the Nifty Auto also giving some gains, while the realty is continuing its downward momentum as well. But Mahima, overall in the broader markets, is it similar to the benchmarks where it's just a very lateral moves of about 15-20 points today?
Absolutely. I think the mid-cap 150 is still holding in the green as we speak, just up about 0.1 odd %. But the small cap 250 again in red. After 2 days of seeing those gaining streaks, it's back in the red today. And not doing much, just 20 points down from where it started. But with regards to where some of these specific names are concerned, let's try to pull up the BSE 500 before we start taking in your queries. You have counters like Tanla Platforms, which is up 11.7% on the back of its earnings. Home First Finance again on the back of its earnings, up 6% as well. Something like a DCM Shriram up 5.9%. Hindustan Zinc on the back of approving raising of funds, up almost 6%. Followed by something like a Bandhan Bank, Nalco, as well as Ashok Leyland seeing gains of 4% each. But on the flip side, you have counters like Minda Corp, Poonawalla FinCorp, as well as Suntech Realty, Kena Construction, Kajaria Ceramics, and Mastech all seeing downtake of about 2 to 4% each. So that's with regards to where the broader end of spectrum is concerned. Quickly, if we can try to pull up the advanced decline ratio as well, because that will give us a picture as to how the overall market sentiment is looking like. It's been wavering throughout the trading session so far. Right now, you have around 1,000 odd advances versus around 1,300 odd declines on the broader end of spectrum. But with that, let's also welcome in our guest for the day, Sameer Dalal of Natralal & Sons Stockbrokers, and Ajit Mishra, SVP Research at Religare Broking, joining us now. Welcome to both of you, gentlemen, and a very good morning to the both of you. I'll take up the first question, which is from Prabhu, who's writing us from Bengaluru. He's got Tata Power, 433 shares at an average buying price of 412. He's already sitting on a loss of 28,000 is what he's saying. He wants to know if he can hold or accumulate more, or maybe book his loss at the current levels. Sameer, what would you recommend?
Yeah, so I continue to believe that this is a stock to accumulate. We believe that the power sector is going to grow. Tata Power is there in the thermal power, plus they've got a good foray into the renewable energy. That's the solar panels. They set up the solar rooftops. They're doing a lot of work in that space, and we believe the generating capacity for them will continue to increase. Their solar business will continue to grow. So there is upside. Right now, the markets are going through a bit of consolidation, and this stock has been no different. But if you look at it, it's fallen far less than a lot of the other stocks. And even given the fall that you've had right now, I think this is a good time to keep adding on. So my advice would be add on to this a little bit more.
Got the view, Sameer, but let's go across and answer our first caller for today. It's coming in from Hyderabad, and Dhiraj has a stock query for us. Dhiraj, very good morning. Welcome to Ask Profit. What's your query? Hi Dhiraj, am I audible to you? Well, we seem to have lost him, but let me take his stock query because it's on Electra Green Tech. He's bought it at 1,026, holding 50 shares. He's not mentioned his time frame, but Ajit, good morning and welcome to the show. Anything on Electra Green Tech? It's been a volatile counter, an expensive one as well on the price to earning multiple. On the charts, Electra Green Tech, what would you recommend?
Yeah, good morning, Puneet. Good morning, Mahima. So what we are seeing that after this attempt of recovery from roughly around 1,000 to 1,600 mark, we have almost surrendered the entire gain in the recent month. And again, we are back to this major support area. Since you bought it at closer to the current levels, my recommendation is to reduce the position and wait and see whether the stock manages to hold this 980 area decisively or form some base for any sign of reversal. So as of now, indications are in the favor of further decline. The prudent approach is to exit at current levels and wait for sign of reversal.
Okay, all right. So that's the view coming in on Electra Green Tech. But moving on to the next question, which is from Lalita, who's writing us from Bengaluru, asking whether this is the right time to enter into something like a Kalyan Jewelers. If we can try to quickly pull up the charts, in the past 2 days, we've seen a free fall in this particular counter. Today, some gains are being seen, just up by about 1%. But Ajit, with regards to where the technical stand, do you think buying on the dips should be the right strategy right now?
In fact, it's a very sharp decline, Mahima. This week we have lost roughly around 20%. We are retesting, in fact, and we have breached the long-term averages on the weekly chart. So it's definitely not a good sign. Volumes are high, on the higher side. It's been almost like, kind of 1 year long consolidation, which has ended with a breakdown. So I doubt that it's going to stop, around the current levels. So maybe we can see the stock drifting towards 325, 330 area in the coming weeks. So my recommendation is to avoid any fresh position. In case if you have any existing position also, 370 should be the stop, and use any recovery to reduce your position.
Got the view, Ajit. And Ajit, you're definitely loving the yellow color as well. It's popping on the screen today. But let me go across and take the next query as well. Ajit, I hope you're continuing to maintain that trend, because then we'll get some more color, more pizzazz on Ask Profit. I know we already have Mahima, but we'll continue to do that as we speak. But the next query that we're getting is on Aarti Industries, and this one is a long-term question. Is what Dinesh from Coimbatore is asking this question. He's holding at 486. Currently holding almost 1,000 odd shares, and is sitting on a loss of almost 1.3 lakh rupees. So the question, Samir, to you now, any view that you can offer Dinesh on Aarti Industries? Should he continue to hold? And if not, what would you recommend?
Yeah, again, continue to hold. I wouldn't suggest an add yet at the moment, even for averaging, for the simple reason that the chemicals sector entirely is going through a lot of pain globally. Yes, we believe that, eventually the chemical prices will start moving up. The dumping that's been happening from China will start reducing. But we're still not seeing early signs of that. What we've been reading and what we've been hearing from various places is that pricing power still does not remain with these chemical companies. Yes, they're increasing the capacity, so that capacity increase will definitely help them from the fact that the volume drive will get some operating leverage through. But I think it's a wait for a time being, till the sector starts seeing a turnaround, and still we think that prices now could sustain and sustainably move up. This sector is not doing too well, across the board. But if you're a contra investor and are willing to wait for a 3-year period, one can add on. But for the short term, for the next 1 year, our expectations are very muted on the chemical sector and Aarti Industries as well.
Right, okay, so that's the view coming in on Aarti Industries. We've got our next question from Satyan, who's a regular viewer and is asking about HG Infra. He's been holding this since the past 2 years and sitting on a loss of around 30% odd. He wants to know if he can hold on this particular counter or should switch to something like an ITD cementation. And he's saying that this also he had bought at about 100 odd levels. Samir, I'll stick with you for this one. What should be his strategy right now with regards to HG Infra? Should he shift to ITD cementation? Should he hold? Or would you recommend a third counter that he should go to completely?
Okay, so HG Infra, we don't have coverage on. So for me to comment on that is difficult. But I can tell you that, the infra space is something that should be held on to, for the simple reason that the government spends that are going to come through the budget are going to be quite good, because at the end of the day, government needs to ensure that the economy keeps ticking along at a faster pace. All of these companies will get orders and will grow, but I don't have a view on HG Infra. The ones that we like in the infra space are L&T, NCC at this point of time.
Got the view, Samir. And the next question actually that we're getting is on Swiggy. Now, our viewer, Srikanth from Hyderabad actually is sending us this question, and holding shares at 328. So seems to be that he's bought in this particular downtick, asking if he can continue to hold this particular counter. Ajit, this fairish recent listing, but this has broken through some levels in this week, right? We've been talking about it at 390, 395, which is the IPO price. What would you recommend on the charts for this one?
So Puneet, in fact, few months, in the past, we were seeing that the stock was attempting recovery. We were thinking about, and there were talks around it will close the gap that we are seeing the valuation gap between Eternal and Swiggy. But it failed, to hold to those levels. And again, we are back to the record low zone. So since he bought it at very closer to the current price, and the stock is underperforming, if we compare it with the internal also, my suggestion is to exit at current levels and wait for any sign of decisive reversal again. Because in case if it fails to hold the previous swing lows, the record low zone, maybe we are heading for much lower levels, maybe around 270 to 50 zone also.
Okay, so that's the view coming in on Swiggy. And Puneet and I were just discussing, Samir, that if you are on the show and if we don't get a question on Solar and Wilson, then I think the Friday will not be fruitful enough. So if you've got one, we're getting one question from Velvan, who's writing us from Oman. He's got 50 shares of Sterling and Wilson at an average price of 488. He wants to know if he can go ahead and hold this for the next 5 odd years. Should he average out at the current levels is his question. Samir, what would you recommend?
Yes, I think, you're right. Every week we get the same question and my view doesn't change. Yes, one should average on. I have a very strong buy recommendation on the stock. We believe that over the next 2 to 3 years, I wouldn't be surprised to see, I'm sticking my neck out and saying this, I wouldn't be surprised to see this stock in 3 years in a 4-digit number. So you can imagine the kind of bullishness I have on the stock.
Samir, I think this is the first time you're telling us that you could see 4 digits on Sterling and Wilson, and it's definitely a counter that's not well tracked as well in terms of analyst coverage. So your confidence coming in on this one, is it largely on execution or the pedigree of its promoter? Where is it coming from?
The fact remains that India is going to see a huge amount of capex in renewable energy. Sterling and Wilson is it's owned by Reliance Industries, and Reliance has a huge outlay for setting up green power. Now, Reliance, the beauty of it is that they make their solar panels in-house. So they will tell Solar and Wilson, which is their in-house company, on an arm's length basis, there will be some sort of structure which will be put in place to set up these huge plants for them. So we're talking of 5 to 10 gigawatts capacity over the next 5 years, for 5 years continually. So we're talking of 5 to 10 per year for the next 5 years. If even they are able to do 50 to 60% of that, you're looking at the turnover doubling from where it is. Right now, they're doing an 8,000 crore turnover. Next year's target would be about 12,000 crores. And if we look at it, and if the Reliance orders, what we plan, I think are going to come through, we could see them doing a 20,000 crore turnover with very limited increase in operating costs, because theirs is a model where they use outsourced labor. They don't need too many people in-house. So the operating leverage is so strong that suddenly the profitability will increase. The ROEs will look fantastic. Growth numbers will look fantastic. And then people will be wondering why the stock is trading at such a cheap valuation. So, I'm happy to share my report and stuff with you guys, but these are the basic factors we think that will drive the stock price over the next 3 years. It will take time because the Reliance order will come through maybe in the next quarter. But once it does, then you will see the traction and the turnaround in the company. So you have to just wait for it. Adani's already placed an order. Adani has an open order with them in the sense that more projects will also come their way. So for them, order is not a problem. It's just a question of getting the operating leverage to play out, which I think will start in FY27.
Okay, so that's comprehensive answer coming in with regards to where all of these names are concerned. But moving on to the next question, Ganpati from Chennai is asking this. He needs a view on Crompton Greaves Consumer. He's got around 2,000 odd shares at the levels of 300 rupees, and he's sitting on a loss of over 1.4 lakhs. Ajit, do you think the charts will recover anytime soon? Past 6 months, it's fallen over 32%.
That's true, Mahima. In fact, still there is no sign of recovery. In fact, in this week, we are seeing a fresh decline below the previous and very critical support zone around this 245, 247 area. So this indicates more pain ahead, maybe closer to around 220, 210. We might find support, but the overall tone looks bearish to me. So no point, sticking with the counter, which is underperforming otherwise also, while the market, and in fact, we have multiple themes like, PSU banks, metal, which are still holding strong. So you can consider exiting at current levels and switching to the PSU's name like SBI, Bank of Baroda, or from the metal counters like Tata Steel and Industry.
Got that view, Ajit. But the next caller coming in from Telangana, and Kalyani has a stock query for us. Kalyani, thank you for patiently waiting by. Very good morning. What's your query?
Good morning to you all. I'm a regular follower of this program. I need the opinion of Mr. Samir Dalal on Dixon Technologies.
Okay.
I brought 10 shares 2 days back.
Okay.
At 10,600. Can I buy some more of these shares for long term?
Okay. Got it, Kalyani. And Kalyani, do you have, firstly, thank you so much for being a regular viewer. Appreciate your questions and you calling in as well. Do you have any other EMS players in your portfolio, or is it just Dixon Tech right now?
No, I didn't catch you.
No, my question largely is, do you have any other EMS company like Keynes Tech or Amber or Sirma, or is it just Dixon Tech? Okay, no other. Got it.
I have the regular tech.
Only Dixon Tech. Got it.
Wipro, Infosys. This is the first one I'm purchasing.
Okay, got it. Samir, on Dixon Tech, and we have been speaking about the EMS players quite a bit. We put out, a coverage on Dixon Tech that there are some expectations of guidance cut for FY26 because of the smartphone mobile volume bumps as well. Are you also of that opinion that there could be some cuts in guidance and that could have a further impact on stock, or the correction seems to be much more severe because it's gone from 60 times price to earnings to 40 now? Any view?
Yeah, so you rightfully put it that the stock has seen a very, very large correction, and a lot of this negativity that was priced around the Motorola order is put in the price, if you ask me. I'm not denying the fact that yes, if growth slows down, why should a company trade at 40 times and 60 times or whatever it is trading at back in the day? But what you got to look at is it a one-off? Is sales going to come back eventually? Yes, I believe it will. Is the EMS division, the Make in India, Atmanirbhar Bharat theme going to play out? Is more manufacturing of washing machines, fridges, TVs, laptops, mobile phones, which Dixon Technology caters to across the board, right? So they are one that does everything across the board. Plus, they are backward integrating. So they are going to be making the screens now slowly in India. So that will help them ensure that they get the product, plus they get better pricing and the profitability will increase. So we believe over the next 2 years, margins will improve. So after this correction now we are starting to see positivity from an investor point of view. If I buy today, I could make money. So yes, I say continue to keep holding. You've just bought it at this price. So if it corrects a little more, yes, please do add on. But just given the fact that it's 50 rupees below your price doesn't mean you need to add on right away. Look, the stock is going to go through a period of consolidation after such a large fall. It's not going to be a V-shaped recovery, especially because there is no immediate trigger to pull the stock up. But there are two kinds of investing, and I wanted to bring this point out. There are two kinds of investing you can do. One is momentum investing, meaning buy when the stocks are rising, which is what the technical analysts do. When you see momentum, you play along. But that is a trader's column. The investor actually plays a contra bet. So you buy when everyone else is worried and selling. And if the fundamentals of a company are good, if the cash flows are good, and if the growth prospects are very good, you will make serious money only being a contra investor and buying when the stocks are down. So I believe this is a good time to start accumulating Dixon Technologies.
All right, okay. Good time to accumulate Dixon Technologies, the view coming in from Samir. So that's with regards to where Dixon stands, but we have our next caller. Manav is calling us from Gurugram. Manav, hi, a very good morning to you. I believe you have a question on DLF.
Yeah, hi, good morning to everyone. So today I have a query on DLF. So I have been holding on to 50 odd shares for the past 14-15 months at an average price of 720. And I have intention to, hold it for a little longer, like maybe more than 3 years or so. So just the results were out yesterday, but didn't got a chance to, look into in detail. So my request would be for Mr. Samir would be like if he can give us a point of view on DLF considering the yesterday's results.
Sure.
And would it be a good idea to accumulate more, and at what price would be the right price to add on?
Okay, sure. Manav, got your question and, it's valid. Samir, I mean, just a first look of DLF gave us the view that overall pre-sales guidance was missed by, a large margin by the company, and probably that's why the street is not very happy. But just to understand, and I'll just combine this query with Aniket, who's also a regular viewer. He's asking whether this is the right time to enter into something like a DLF, or would you prefer Lodha developers over DLF? So I want you to give a combined view on both of these.
Okay, so first of all, let's talk about DLF since the question is directly linked to that. So yes, pre-sales were bad. Even I, Manav, unfortunately haven't gone through the results in great detail, but let's talk about the longer term story of DLF, right? Look at the land bank that they have in Gurgaon. Look at the development opportunity that they have in Gurgaon. I think that is phenomenal. Plus, their entire rental book continues to do well, which adds a lot of might to the like of DLF. So for me, the correction is a very strong one and a good buying opportunity. It's actually the correction in the real estate space has happened across the board. And the reason is people are expecting that there will be a slowdown in sales going forward. But at the moment, we're not seeing it. So DLF has given a clarification that I did read that they did stop some of the sales at one particular project or two particular projects because of certain changes in technical aspects of the development, which they say we will make back in the current Q4. So if they make that back, then I think the stock will rebound. So hold on. Now coming to whether you should look at Lodha. So Lodha is doing a lot of projects in Bombay. Doing extremely well. All of that stock is corrected nicely, looking interesting. But for me, if I want to make a play of a real estate play at the moment, I would do it in Equinox, which is Embassy Developers. It used to be Equinox. Embassy Developers now, it's called EMBDL. The stock price is about 60. The stock has taken a massive hit because there was one outstanding of the erstwhile India Bulls, where they had to pay 300 crores as a backstop for a particular power project, which of course is in court, but the claim has come on Embassy. Now, Embassy basically is a 10,000 crore book value company. So even if they have to pay this 300 crores, it's not going to change the dynamics for this company that much. But the projects that they're doing, which is in Bangalore, which are in Bombay, will lead to huge amount of growth in profitability. Going forward, the pre-sales are happening very nicely. And for me, this is a stock that could double, go back to its 120 odd levels in the next year once the clarity comes. So that would be my top pick in the real estate space.
Got it. Well, fair point, Samir, and has seen a massive correction on Embassy as well. But Samir, as well as Ajit and our viewers, it's time for a first round of the rapid fire in this edition of Ask Profit. Request you both to keep your answers on buy, sell and hold. Take as many queries in the next 2 minutes. The first one is coming in on Titan. Our viewers bought at 4,220. Should he continue to hold, Ajit?
Hold.
Okay, Bank of India is the next one. The quantity that the viewers bought is 650 and 111 is the buying price. Ajit, hold, sell or buy?
Book partial profit.
Thangamayal is the other one. Our viewer actually, Muralidharan, has bought at 3803. Ajit, should he continue to hold or buy more at this rate?
Hold.
JSW Infra is the next one. Sai Karthik from Dallas wants to know if this is a good time to add more, considering a short-term perspective. Ajit, your view?
Wait for a dip towards 245.
Crompton is the other one. A short-term view is what Siva is asking. He's bought at 254 though, Ajit. Should he continue to hold?
Reduce.
Okay, Engineers India is the next one. Murli from Bengaluru wants to know if he can add more, reduce. Next 1 year targets is what he's looking at. Samir, your view?
Sorry, which was the stock?
Engineers India.
I would say sell.
Tata Motors commercial vehicle. Samir, our viewer Sanjay has actually bought it at 228, possibly because of the demerger. Should he continue to hold?
Yeah, I continue to hold. If you can, buy some Tata Motor PV also.
Okay, Transrail Lighting is the next question. Rajiv from Delhi wants to know if he can continue to hold this for the next 6 odd months or maybe buy more at the current levels. Ajit, your view?
Hold.
The next one that's coming in is on Gland Pharma. It's a stock we haven't discussed too much, Ajit. Our viewer has bought it at 1688, holding 32 shares. He's asking a 6-month target.
Hold with stop at 1640 and 1840, 1850 target zone.
Okay, the next is on BLS International. Jaya from Bengaluru wants to know if she can continue to hold this counter from a long-term perspective. She's bought at an average price of 324. Samir, your view?
Hold on, buy some more.
Got it. Well, viewers, that's the end of the first edition of Rapid Fire with this edition of Ask Profit. Stay tuned, a lot more stock queries on the other side.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV
Welcome back to Ask Profit right here on NDTV Profit. The next question, and let's keep calling us viewers. We'll take all your stock related queries today. This one's coming in on Sammaan Capital. Now Shankar actually is writing us from Dubai. He's holding 350 shares at 165. Asking what he could do, if he could, it's a good idea to buy more right now. Counters trading at 141. We have Sameer, but let me also welcome in Rajesh Bhosle, the equity technical and derivative analyst at Angel One. Rajesh, very good morning. Welcome to the show. Your view on Sammaan Capital, is it a good time to buy more for Shankar?
So if he gets a dip around 133 to 130 levels, So that is a very strong support zone. During the September month, we saw sharp rally from this level. So as of now, the stock is on a strong support. But if he gets around 133, 130, that would be perfect.
Okay, all right. So that's we coming in on Samman Capital. The next question that we have is from Ernie Agnihotri, who's writing us from Pune, asking about IGI. She's bought 1,500 odd shares at the levels of 319. Wants to know as to what the short-term charts are looking like. Rajesh, a very good morning to you. I'll stick with you for this one as well. IGI, what are the charts indicating?
So I'm not tracking this counter much, but overall, the trend seems to be negative, continuously moving in a lower top, lower bottom formation. The next support would be around 280 levels. So if we can hold with a stop loss of 280, but on any bounce towards 330 to 340 levels, that should be taken as an exit opportunity, because we are seeing that any bounce towards 89 EMA is getting sold into. So as of now, long-term support is around 285 to 290 zone, and on a bounce exit around 330 levels.
All right, so that's we coming in on IGI. We've got our next caller. Kiran is calling us from Hyderabad. Kiran, hi. A very good morning to you. I believe you have a question on JSW Energy.
Yes, ma'am. Good morning, ma'am. My query is regarding JSW Energy. I'm holding 250 shares at 505 rupees, ma'am. I would like to know the short-term view. Today they are posting their results, so what sort of target could I expect in the next 2 to 3 months, ma'am?
Okay, Kiran, got your question. Rajesh, yesterday a caller or I think a viewer did ask a question around the fact that, should you be buying before earnings? Is that the right strategy to do when you're trading? That is my first question to you. And secondly, with regards to the setup, with regards to where JSW Energy is concerned.
Before result, we need to see how the kind of price movement is. If prices are in a positive momentum, one can expect some positive news to happen. Similarly, if we see for the JSW Energy, yesterday there was a bullish formation of morning star around the previous swing lows. So as of now, if he is holding, can hold on, but keep a stop loss. There can be volatility amidst the result. 465, 460 seems to be the strong support, but on a bounce back, 510 to 520 seems to be stiff resistance, where the last week's low is there. So as of now, hold, but somewhere around 510, 520, we need to recheck the charts.
Good of you, Rajesh. But the next query that we're getting is an interesting one from Somik from Kolkata. And his question is that he's already holding 3 companies in the automobile space, M&M, Tata Motors, both PV and CV. So he's asking if it's a good time to add a two-wheeler name. And he's asking Samir if it's a good time to add Hero MotoCorp specifically. If not, any other alternate in the two-wheeler space that you would recommend is his question. So he wants to make his own personal automobile fund in that sense. What would you recommend?
Yeah, so Hero MotoCorp is a good option. I mean, if you look at it across the board, look, there are 5 companies which are large in size, which are trading. Bajaj Auto, TVS, Eicher, Hero Moto, and then now the recent sized one is Ather. Of course, Ola is also there, but Ola is going through its fair share of problems. So, you can maybe make a small investment in Ola just as a contra kind of thing, if which we believe will play out, which the turnaround happens. I think Ola is something that will do well. But Hero Moto is on valuation basis the most attractive from all of the other two-wheeler companies. Plus, they have a large stake of investment in Ather. So if you count that in as well, then the valuation becomes even a little better. So ideally, I would say 4,800 to 5,000 would be the right price to buy Hero Moto from a longer term perspective. But one can start accumulating given the fact it's come off from 6,000 odd levels to about 5,400.
Okay, all right. So that's the view coming in on Hero MotoCorp. The next question that we have is on Canara Bank. Surya Prakash from Visakhapatnam is holding 528 odd shares at the levels of 1110. He wants to know if he can continue to hold this for the next 2 odd years or not. Samir, would you recommend that?
There's no problem. Hold on Canara Bank. It's doing very well in the PSU basket. It's probably after SBI has had the best performance. So hold on. I think the stock still has more upside to it, maybe closer to 180, 200 over the next 2 years.
All right. So just a correction. His buying price is 110, not 1110. Would you still recommend that, right?
Oh, absolutely. I mean, it's 110. Couldn't have been 1,110 because I don't think the prices ever reached that.
Exactly, yeah. Okay, all right. So that's the view coming in on Canara Bank. The next question that we have is from Umesh, who's writing us from Thane, asking about Orion Pro Solutions. He's bought at the levels of 1,449. Wants to know if he can hold or book loss at the current levels. Rajesh, what would you recommend on the charts?
So I would suggest him to exit on bounce because overall the chart structure remains negative, continuously moving in a lower top, lower bottom, and markets are a bit in weak sentiments. So as of now, exit on any bounce somewhere around 1100 levels.
Got the view, Rajesh. But another caller coming in from Mumbai itself, and Ramesh has a stock query for us. Ramesh, very good morning. Welcome to Ask Profit. What's your query?
Yeah, I'm holding 5,000 shares of Segility at 52.50. I purchased it. I want view for 1 year.
For 1 year, okay. And any other related IT name, Ramesh, in your portfolio, or is it largely Sagility right now?
No, I'm holding Mazgaon Dock also.
Okay, Mazgaon Dock, so non-IT, got it. Samir, for the next 1 year, Sagility, should you continue to hold?
I don't have coverage on this, so I request you to ask Rajesh.
Rajesh, on the charts, because it's done very well for its investors since the IPO price. Any forward momentum that continuing from here?
Yeah, so can hold on to it. Immediate resistance is at around 54 levels. That has acted as a stiff supply zone for the last couple of time. But once 54 is crossed, we can expect next traction towards 60 levels. For now, he can hold with a stop loss below 48 levels.
Okay, all right. So that's we coming on Sagility India. The next question that we have is from Umesh Gupta, who's writing us from Vadodara, asking about Azad Engineering. He's got around 300 odd shares at an average price of 1720. He says that he's suffering a huge loss, that is around 96,000 rupees, and wants to know if he can book loss, exit. What should be the move that this stock is expected in the next 6 months? Rajesh, what are the charts indicating?
So if we see prices have broken below its July swing low of around 1500, and with that there is a bearish breakdown. So possibly the stock can slip further towards 1300 levels where there was a bullish gap left. So as of now, in the near term, we expect the stock to slip toward 1300. So better he needs to exit.
Got the view. Rajesh, but another question that's coming in on Bank of Baroda now. Our viewer actually, Anil Bhalla, actually holds at 307 rupees per share. He's also a regular viewer, so thanks so much for sending in your query, Anil. He's asking, a short-term view till the budget, largely, Rajesh. So it's a very short-term view on BOB. What would you recommend? He's holding 10,000 shares at 307.
So very short-term view, but technically, if we see since last 2-3 weeks, the prices are in a consolidation mode. Overall, we have a positive approach on the PSU bank, so hold on to it. 297 is the key support, and once prices break above 310, which has been resistance recently, once that is crossed, possibly 320 can be expected. So very short-term view, consider this level in the near term.
Okay, viewers, time to slip into a very, very short break, but we'll be right back answering all your questions on the other side, so do stay tuned.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बनके खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल, हर इंजन का सोल्जर, celebrating the release of Border 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions
news that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर।
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either give us a call on the number that's flashing on your screen up there, or you can also write your queries to us on WhatsApp. But we've got our next caller. Sheshadri is calling us from Hyderabad. Sheshadri, hi, a very good morning to you. I believe you have a question on Laurus Labs.
Yes. Hi, good morning. Currently, I'm holding 60 shares on Laurus Labs, 1,044.
Okay.
Is it good time to add more or shift to Glad Pharma?
Okay.
Renewable Pharma side?
Okay. And this is from a short-term perspective or a long-term perspective?
Yeah. At least 3 to 6 months I can hold 1 year also.
1 year. Okay. All right. Got your question. I'll take this up with Samir. Then Samir, Laurus Labs, would you prefer, or would you prefer something like a Gladmark Pharma, especially when Laurus Lab is expected to post its earnings today?
Well, so 3 to 6 months is a short term from a fundamental point of view. But what I can say is, look, the valuations for Laurus have moved up quite a bit. The company is being able to turn around and grow its profitability, but it's trading, if I'm not mistaken, at close to about 75 times trailing. And on projected basis, I think it's closer to about 66 or 65, which is quite expensive. So if you're expecting any major run up in the very short term, I highly doubt it. Longer term, yes, growth prospects are there, but you're going to get meager returns given the fact that you're paying such high valuations. So for me, at this point, it would, for a short term, 6 months would be a sell. From a longer term, I would like to look at it at closer to 800.
Got that view, Samir. But the next one is also a very interesting question, and this is from S Strategy actually, from Kolkata. He's holding 500 shares of Northern Arc at 220. And he's bought it a year back. Samir, do you have any coverage on the stock firstly?
No, we don't, unfortunately.
Okay, no worries. Rajesh, on the charts though, last 1 year has actually been quite strong, 37% uptake. But since IPO price 263, it's hovering around that level still. He's asking for a longish view. So if you can, on the charts, recommend something for Northern Arc?
Yeah, so if you see overall the chart structure, last 6 months has been in a consolidation phase, But in the past 1 month, there is some traction from the lower levels, and in fact, in the last 3 session, prices have seen good traction, confirming a inverse head and shoulder pattern. So bias remains positive. On the lower side, if we see 260 seems to be a strong support base, and we expect the stock to move towards its recent highs of 290. Once 290 is crossed, we can expect a positional target of somewhere around 320. So as of now, hold on to it. 260 seems to be a strong support base.
Okay, the next question that we have is from Sunil, who's writing us from Mumbai, asking about Shakti pumps and wants to know the best level to buy that, and then short-term target and stop loss that you can expect from this counter. Rajesh, your view?
Yeah, so we did see strong traction during the December month where prices rallied from the levels of 550 to 790. Now prices are retracing, and the retracement level somewhere around 600 seems to be a strong buying zone. So 600 levels would be the levels to watch, and on the high side, 780 to 800 would be immediate resistance level.
Got the view. But the next one is coming in on Grow. Now, our viewer actually, Parth Jadhav, was actually holding 300 shares at 184. So he's currently sitting at a small loss. He's asking if he should, hold on or sell out currently. Now, Samir, I'm not sure if you have coverage, but in the capital market brokerage team, any top picks, if not Grow?
So for me, Grow at the moment is a complete avoid. I would sell it for the simple reason we've been stating for a while that all of these companies, and 80% of Grow's revenue comes from transaction services, right? Anything that has to do with transactional volume, we think you are at a peak at this point of time. It's going to be very difficult in the next 6 months to 1 year to grow the volume significantly. For me, the right place to invest in the capital markets still remains the entire mutual fund space. I think, look, if we assume a 12% just growth in equities over a longer term period, even if the funds, these mutual funds don't get additional money, but they're able to grow that 12%, their profitability will grow at a faster pace because you are charging your revenue stream on the money that you manage. So automatically the operating leverage play out. But you're also going to see growth in the space. So I'm not denying the fact it will be cyclical, where if the markets fall, you may see some redemptions. But from the next 5-year view, I think these stocks could all have 25 to 35, 40% CAGR returns. I'm talking. So our top pick in the space remains Nippon, followed by Aditya Birla, and then HDFC. We love ICICI and we love Canara, but we find valuations a little bit on the higher side for those two. So for me, this is the space, if you capital markets, if you want to make money, this is the space. Stay invested for the next 3 to 5 years will be fantastic.
Okay, all right. So that's view coming in on a lot of these names. But the next question that we have is from Nikhat, who is writing us from Bengaluru and asking whether this is the right time to enter into something like a JK Cement from a short-term perspective. Rajesh, your view?
So cement packs have been in a big buzz since last few weeks, and JK Cement, if you see, there's some strong base around 5,300 levels. So as of now, wait, but if it comes around 5,300, that would be ideal level. And on the high side, 6,000 has been the immediate resistance. Once 6,000 is crossed, we are expecting strong move. But as of now, wait for a dip towards 5,300 to enter this stock.
Got the view, Rajesh. The next caller actually is coming from Mumbai again. Nishad has a stock query for us. Nishad, good morning and welcome to Ask Profit. What's your query?
Yeah, I want to know about Jyoti Labs. I'm holding 20 shares at 414. I'm currently at a loss. Should I average it out or should I just hold it?
And Nishad, did you enter this counter with a long-term view or a short-term view?
Yeah, long-term.
Long-term view, got it. Samir, on Jyoti Labs, he's bought it at 414 is Nishad, but currently trading at 250. Any view that you can offer?
I think, look, valuations for Jyoti Labs are quite decent, if you ask me. Yes, the FMCG space is going through a bit of a tough spot at this point of time. They are a smaller player, more niche, but their growth opportunity obviously remains a lot stronger because they are more of a regional, as they become more of a pan-India player in a larger way. We think there is opportunity. 20 times earnings for an FMCG company is always good, given the fact that the others are trading at 45, 50, 55 times. I think this is one counter you could probably hold on to for a little longer and see how things go. We think there is upside to this stock.
Okay. All right. We've got our next caller. Mohammed is calling us from Bengaluru. Mohammed, hi. A very good morning. I believe you have a question on Schneider.
Hi, good morning to you all. I have 600 stocks, shares at 641.16. Should I need fundamental and technical view on this.
Okay.
And what?
All right. Okay. Got your question. I'll take this up with Rajesh. Rajesh, what's the view like on Schneider?
So last year during the May month, there was a sharp rally from the levels of around 560, and then the prices moved towards the 1000 level. Yesterday as well, the prices took support around those levels. There was a bullish pattern known as bullish kicking. So as long the recent lows of around 570 is held, we expect there can be a move. Possibly 720, 740 can be expected. So 570 would be crucial going ahead, and 720, 740 would be the immediate next 6 months target.
Well, viewers, it's time for a second round of the rapid fire in this edition of Ask Profit. Rajesh, as well as Samir, you know the drill. Keep your answers on buy, sell, hold, so we can take as many as possible. The first one's coming in from Vanita Bala from Kuwait, who's a regular viewer. Her question is on entry into either Apollo or Narayana Rudralaya. What would you recommend, Samir?
Apollo Hospitals for me is the best bet in the hospitality. Hospital space, not hospitality, hospital space.
Okay, the next question is on Anant Raj. Can the person continue to hold at the current levels? Rajesh, your view?
As of now, hold stop loss would be around 500 and exit on a 590 levels.
Aegis Logistics, Rajesh, our viewer Sriram is holding 30 shares at 212. Any quick view?
Exit on a bounce towards 680.
Okay, Sandur Manganese and Ore, Raja from Chennai wants to know if he can continue to hold this counter, maybe add more at the current levels. Rajesh, your view?
Not tracking this counter.
CG Power, Rajesh, another one. Prakash is asking a 3-month view on the stock.
Hold on to it, exit towards 630 levels.
Okay, Bajaj Housing Finance is the next one. Devi Prasad from Bengaluru wants to know if you can continue to hold the counter or not. Samir, your view?
I guess you can hold on, but if you want, there are better opportunities in the housing finance space.
And what would that be, Samir?
Samman Capital is one of my top picks in this space.
Got it. Ashok Leyland is the other one, and it's been on a tear, this particular stock. Kunal is asking if it's the right time to enter. Samir, would you recommend after a run-up?
No, not after this run-up. I say wait for corrections to buy more.
Okay, so Suzlon is the next one. Samprit, his buying average price is 68, and he wants to know if he can continue to hold the counter or not. Rajesh, your view?
Add some more around 42 levels.
Nalco is the other one. Rajesh, our view actually bought it at 189. It's a counter that has been in focus. Your view?
I mean, book somewhere around 400 levels.
Okay, Godrej Properties is the next one. Devanath wants to know if he can continue to hold, add or exit. Samir, your view?
I think add-on at this point has fallen a lot.
Apollo Microsystem is the other one. Samir, not sure if you track it, but Rajkumar is asking this question. He's holding 750 shares at 300.
I do track it. His stock has corrected. Defense is going to do well. So I wouldn't add on right away. Maybe closer to 189, 190 I would add on. But yeah, it long term still remains positive.
Tata Chemicals is the next one. Jayakumar's average buying price is 752 and holding 100 odd shares. Should I hold or book profit is the question. Rajesh, your view?
Hold on, exit around 800 levels.
Geofinance is the other one. Gautam is asking he should sell his position in Geofinance and switch to SBI. Rajesh, would you recommend that trade?
I would suggest hold on to Geofinance. The stock is approaching strong support levels.
Okay, the next one is on Ashok Leyland. Shiva wants to know as to what should be the target price that he should be eyeing for the next 6 odd months. Rajesh, your view?
So already a stretch up move is there, but the stock can move towards the 210 levels.
The next one is Gale with a 2-year view. Samir, would you recommend buying right now?
If he's holding, buy closer to 150.
Got that view, Samir. But Samir as well as Rajesh, that was the end of the second round of the rapid fire, as well as the time that we had on this edition of Fast Profit. Appreciate your time here and helping us solve the 54 queries that we were able to in this 1 hour. But viewers, thanks so much for watching. If there's any stock query that is left, which I could see quite a bit, do tune in. We'll solve all those stock related queries that you sent to us today at 2 p.m. So see you then.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Shitty footage, guys. Apologies for that.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
Hello and welcome. You are watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put the spotlight on one company that you need to have on your radar today. Before we move on and do all of that, it's important to look at which company are we talking about. It's a very, very hot sector a very, very hot space right now, and that is the EMS sector as a whole. We're talking about EPAC Durable, a key company in the consumer discretionary space. They are key manufacturers AC, but before we do all of that, a little bit of history about the company. It was incorporated back in 2003, began as a contract manufacturer essentially of consumer durables, which includes AC amongst other key products. Now, when you look at what the company has focused on, it has largely been the room air conditioner space, and even post-listing, it was a meaningful part of the company's revenue and margins as well in that aspect. But post that, in 2012, they later transformed into an original design manufacturer. It essentially means that they designed the product for other companies in the AC space like Voltas and Blue Star, and designed the product as well, which is a high margin business. Now, this was of course founded by the Singhania and the Bothra brothers, and we will be speaking to Ajay D.D. Singhania in just a bit. But important to look at, what are the other clients that they focus to. So all the room air conditioner clients like Voltas, Haier, Philips amongst others, Godrej, Daikin, Havels are all the company's clients, and these are just some of them. When you look at the key products though, over the last few years they have diversified away from air conditioners into large domestic appliances as well as small domestic appliances. The large domestic appliances do include products like washing machines, while small domestic appliances have water purifiers, air coolers amongst other key products. This has been a key diversifier for the company, and that's very, very visible in terms of revenue. Now, it's been a tough year for the company, largely led by a longer period of winter, shorter summer, a bigger monsoon. So AC sales do get impacted, and that's reflected in the 36% downtick that we've seen in the AC revenues. But because of the diversification in appliances as well as the other key segments like components, that has helped the company in somewhat way to reduce the losses. So while the AC segment is down 36% in terms of revenue, the total revenue is down only 15%, led by the high growth for the appliances as well as the component space. And that has been the one key differentiator. Although though, the key problem is that there have been a key concern on the financials of the company because of this aspect. Over the last few years, AC concentration has been key, but that has impacted the company's margins at this point of time. So when you look at the rating parameters with the funds which we'll be focusing on and diving deep into what's impacted the business, is going to be key because the company's share price is down 49% in this particular time frame, and we'll focus on a lot of that. But income statement, balance sheet, cash flow, return ratios, if you're a regular viewer, you know a bit about this. Shareholding, street cred, valuation, and finally, what do analysts actually make out of EPAC Durable? When you look at the first key parameter, that's income statement. Now, between the 3-year CAGR, if you see, the performance has been quite strong. 33% growth that we've seen just in terms of revenue. The EBITDA margins have also been substantially scaling to 7 to 8%. While FY25 did have a blip, it has been a good year overall on a 33 to 48% growth in terms of a CAGR growth, that is, in terms of revenue and profit. So why the neutral rating? In the last few quarters, it's been a difficult performance for the company, and margins as well as net profit has been impacted. Just for this specific quarter, Quarter 3 saw 427 crores in terms of revenue, but profits were impacted, and that's been one of the key concerns for EPAC Durable. We have been talking about the impact in terms of margins, but it's also important to look at the balance sheet as well. Now, we've been looking at the long-term borrowing as well as the other key aspect that has increased, and that's visible here. So while the equity portion and the reserves have actually increased going into H1 of FY26 as well, we saw stagnation of this number post FY25. But you look at the borrowing number, that increased and almost doubled from 62 crores to 122 crores at the end of FY25, and the H1 number is just for H1, so that's 33 crores. So there has been an increase in borrowings, and that's because of the increase in working capital. Lower AC sales, it means that the inventory is higher and a lot of money gets locked into that. Hence, the company had to borrow quite a bit to include and transfer into that particular period, while the cash bank level has been quite stable at 44 crores, but from the FY24 level, it has seen a quiet dip as well. And hence, we've given this a thumbs down, and largely on the back of lowering the company's inventory as well as borrowing number is something to talk about. When you look at the third key metric, and that is cash flow, we have been talking about working capital as well as the impact of the business in terms of the cash flow from operations as well. So when you look at the cash flow from operations, it has increased to a highest level of about 257 crores in FY25. There you see the dip to 31 crores in FY26. And this is, of course, in FY25, this was H1 of FY26, we saw the dip. Also, the operating profit, the operating cash flow to PAT is the other key metric. After a humongous increase, that has again come down to 56%, while the net cash flow has also been largely stable. So there are multiple key factors happening here. While some metrics are a positive, the cash flow from operations being impacted is clearly a big negative, but we've given the company a little bit of benefit of the doubt, given it a neutral rating for cash flow as well. The fourth metric though, that's return ratios. Now, for a company the size and scale of EPAC Durable, there has been a pressure on the return ratios, and the story largely was as the company gets bigger, the return ratios will improve. Well, FY22 was a year we've seen reduction of the return on capital employed over the last few years. With the company's advent into larger appliances as well, the return ratios are expected to improve, but that has yet to materialize. So while it has improved from FY24 to FY25 level, we will have to wait for a couple of years at least to look at a meaningful increase because of these initiatives. So hence, we've given this a neutral rating as well. The other key part is shareholding. It's been largely stable, one where the company has shown immense promise in not selling out at any point. So we've seen some selling between March 24 and 2025, but largely a little bit only at 47.18. Company has been managed to keep it. What's also interesting is the increase in shareholding of retail as well as public investors. It's gone from 32% all the way up to 45% and shows the company's interest amongst retail investors. As the share price has corrected, that's also one of the key factors that retail investors do sometimes buy the dip, but it's important to keep track of the metric while domestic investors have steadily reduced their shareholding. Hence, while we have given this a thumbs up rating largely on the back of promoter holding, there is a lot to look at in the changes between public as well as the foreign institutional investors and also the domestic institutional investors as well. When you look at the street cred, that's the other key part. It has been a disappointing picture for investors for EPAC Durable over the last few periods. When you look at the number over the last 1, 3 and 5 months, specifically the stock is down 14% in the last 1 month. It has been under pressure, largely led by what's happening in the particular space as well. But even in the 6-month period, the stock is down 34%, almost down 50% on a year-to-date basis. So that's just in the last 15 to 20 days of January 2026, and down 49% in the last 1 year. So investors have borne the brunt for EPAC Durable as they've held on to this particular counter. 5-year performance has to have some caveat that the company listed in February of 2024 since then has given decent returns, but given the large what has happened in the last 6 months, we've given this a thumbs down for now. When you look at the final few metrics as we wrap up into looking at this aspect has been valuations. Now, because of the stock price correction, FY27, the next year of financial year 2027, looks quite appealing in that sense at 30 times price to earnings for an EMS company that too. While price to earnings is also visible of that, the EPS is expected to be impacted in FY26. Now, last year the company in FY25 did about 5.6 rupees in terms of EPS. Consensus estimates are down to just 3.4 rupees, and hence the higher price to earnings metric in FY26 compared to FY22, where hopefully the growth comes back. But because of the share price correction, analysts have, while reduced their target prices, continued to maintain their buy ratings, and that's visible in the calls as well. So they are seeing a return potential of almost 33% as we speak, and hence we're continuing to see that positive momentum, at least from the analysts at this point of time. But it's also important to look at what the company also has to say at this point of time, and we have the management which will join very, very shortly on this aspect. So you have seen that the company's performance has been impacted. Quarter 3 also had a lack of growth in that sense. So it's important to speak to the management as to what they think could be one of the key positive metrics for the company. Before we do that, the final ratings, income statement, cash flow as well as return ratios do get a neutral rating. Balance sheet, the company will have to improve on that aspect. While the other key metrics, if we can pull that up very, very quickly, shareholding is a positive, valuation a neutral in that point. For FY26, we need to look at the growth, while analyst as well as analyst recommendation has been a key positive. So the overall rating we get at 4 out of 8 for EPAC Durable as well. But to discuss in detail about what the company is all about, and we have spoken to Ajay D.T. Singhania in the past, let me welcome the MD and CEO of EPAC Durable at this point of time. Mr. Singhania, very good morning to you, sir, and thanks so much for joining in. It's a real pleasure to talk to you at this point in time because while Q3 was a tough quarter, you did mention a few positives about you that the company has looked at, and certainly that investors need to watch out for as well. But largely my first question, sir, the last 3 quarters, the first 9 months of FY26, you managed to do a decent performance. But to start us off with, what is the current picture of inventory on the ground? Have you seen reduction in this particular quarter, and is it coming to a level that's largely normalized, or what is the expectation of normality for inventory over the next few months?
So, good morning. In regards to the inventory normalization, yes, Q1 and Q2, because of the unseasonal rains, we had inventory being piled up both in trade as well as our end not getting manufactured. But thankfully, Q3, we saw the uptick, and the inventory movement has definitely started. The order book has been good, and going forward, next 6 months onward, the season sets in. So the market is very bullish that the past is behind us, and the tailwinds are still very strong for the industry. So at 15 to 20% kind of a growth is what I've been repeatedly saying is on the cards for the industry for the coming 26 season, and shall continue for next 5 to 6 years, definitely. So next medium to long term, definitely the tailwinds are very strong for AC.
Got that, Mr. Singhania. And you highlighted that over the last couple of quarters, it has been that the industry has been impacted largely because of higher inventory amongst other key issues. But in the short term, what can be the expectations from Q4? Because it is a quarter where a lot of inventory is built in by the AC makers. Is there expectation that that is visible at least to you in the conversations of the first 22 days of January, that Q4 could be a decent, at least flattish on a YOY basis? How should we see this?
So Q4, definitely we see growth compared to YOY basis. Q3 also has been a growth, and Q4 again we see a growth and recover partly whatever was lost in Q1 and Q2. So Q4 will definitely be a quarter wherein we'll see a lot of recovery happening, although it will not be possible to recover the entire sales loss. So as a whole, on an annualized basis, we see that the industry is going to witness some shortfall as compared to FY25, but yes, largely recover the loss of the previous 9 months.
The other key aspect, Mr. Singhania, has been that last Q4 of FY25, you did about 650 crores of revenue. Now you are mentioning that you are expecting to seeing some growth at least. So could we expect a low double-digit kind of growth expectation? Now I know you can't pinpoint it, but is there expectation of that at least?
Definitely yes, definitely yes. So what I'm saying is the loss of the previous 9 months partly is going to get recovered, although the entire sales loss cannot be. But yes, we are looking at a ramp up in Q4 and cover a lot of ground here.
Is the expectation largely that with this you will be able to at least have flat revenues for FY26 compared to FY25, because it's a big number that you're aiming in Q4 of FY26. You are aiming for almost 700 to 800 crores of revenues. You did about 650 in the in Q4 last year. So is that the expectations from you as well? And what could be for margins as well, if I can slip that question in as well?
Yeah, so broadly, yes, the guidance is that we are looking at the number you just mentioned. So recover a lot of lost ground on the AC, as well as our other levers are firing very well. So for us, the small and large domestic appliances will component business is something which is helping us cover a lot of lost sales. And at the 3 new diversified segments for us, the LDA, SDA and components are growing at multi-fold. So that's what we see as the growth lever going forward as well.
If you can also talk about, in terms of parts, because we've seen for AC specifically, You have diversified into newer segments as well, and that's very visible in the components growth for you. But before that, has there been increase of raw materials because of copper amongst others? How are you navigating that challenge?
So overall, if we look at the AC prices, there has been correction on two fronts for the coming quarter, and definitely the street, I believe the brands are going to increase the prices or have already increased the prices. So it's on two counts. One is the upgradation in the BE norm. So that's like the previous 5-star becomes a 4-star and a 3-star becomes a 2-star. So there is upgradation because of the price correction because of that, which broadly like 4 to 5% kind of a price correction. And then another 4 to 5% is the price correction because of the commodities, what was done in the last quarter. So overall, we see close to 10% price correction in AC. And any further impact of commodity definitely gets passed on in the next quarter.
Also, Mr. Singhania, one of the biggest developments that happened in the industry has been the ECMS scheme that has come in. Now, we've already seen a few companies get into PCB manufacturing and get approvals as well for it. What has been EPAC's plan for ECMS? Have you already applied and are awaiting approval right now?
Yeah, so we have floated a separate subsidiary company called Bumjin Audio Products Limited, wherein we are targeting to manufacture a lot of audio parts, components, sound bars. So that's a part of our application under the ECMS scheme. And the structural approval has already been there, and now we are filing for the further plan and everything.
Mr. Singhania, if you can talk a little bit about your subsidiary, as you mentioned, is that largely into audio, or is this something specific to ACs as well? If we can, if I can just harp on that a little bit, is it also into PCB manufacturing, or that's not included in that?
So PCB is currently under our current company portfolio. So we already do PCB as an EMS. We make controllers and supplies the component. The specific subsidiary we're talking about, Bumjin Audio Products, is a JV with a Korean company called Bumjin. And they specialize in making audio components and sound bars, TV speakers, Bluetooth speakers, and all these things. So we are under currently planned to start manufacturing by the end of 26 or probably Q4 of 27 and start selling these products in India market.
So is there any plans of venturing for ECMS specifically into a new facility for PCB manufacturing? Or is that something you will take it as time comes? Because at this point of time, we've already seen approvals come in also for a few companies. So what is the expectations for EPAC specifically going into ECMS via your PCB manufacturing?
So PCB manufacturing is what we already do under our current facility.
So is there another level of capex that we could expect from you to increase capacity? Because and we've spoken to you previously on this, that India is still very deficient in terms of a lot of parts that go into both for ACs as well as for other related electronic products. So the opportunity is quite huge in PCBs, right? So is that something that you've thought about, and any rationale of not going into it as of now, currently as we speak?
So we currently do a PCB assembly, so not the bare board, but we do the entire component, the controllers. And as we scale up our operations, definitely we'll start doing more of PCBs in-house. So currently we do for air conditions and our small domestic appliances. Going forward, definitely yes. So the expansion and backward integration would continue, and scale up will happen as and when required. So that's something definitely a focus sector as our component business is increasing. Investments in PCB controllers, the assembly lines will continue to be ramped up under the current facility itself.
The other thing, Mr. Singhania, has been your advent into your LDAs, SDAs, as well as components. Is the expectation that all three of those specifically will have roughly around 30 to 35% of your revenue in FY27?
Probably more than that. So we continue to grow in AC more than the market. So if the market grows at 15-20%, definitely we will outgrow the market. But at the same time, we believe that our SD and LD has and as well as the components have potential to grow multifold. And in a medium to short term, we are looking that our ACs, like current year, it has come down to almost 60%. We will try to maintain it 50-55% and outgrow our other sectors like the SD, LD and components. So that should overall contribute to almost close to 45-50% in 27-28.
Now, Mr. Singhania, just a couple of key updates, and you've spoken about this to us in the past. The one is on Hisense. It's a big project for you. You mentioned that almost 8,000 crores of revenues could be accrued over 5 years once the project starts. So the earlier expectation was that project would start in December 2025. You've now said March of 2026. Is that timeline on as we speak?
Yeah, definitely that we are on bang on timeline. So we had maintained earlier that December is the timeline where we're looking to start the trial productions. The trial productions have been successfully completed. We have got all the approvals in place, and coming the current quarter, which is Q4, we are looking at to ramp up productions. So everything is on time. And our ODM sales to Hisense for the AC has already started since last year. And now the Hisense designed product is what is going to get manufactured in the new facility, the new greenfield facility. The facility is ready. The trials are done. Everything is online, on track. And this quarter, probably next month is when we are contemplating that the mass production will start.
Mr. Singhania, what would be the products that would come out first out of this? Because apart from ACs, there are other related products with Hisense as well. So what would be in, just for FY27, if we can talk about, in that year, what is the expectation of the products to start with?
So the new facility, the greenfield facility, we are starting the Hisense designed air conditions, which are a complete tech transfer from China in the next month. And then going forward, washing machines, both top load and front load, are going to start within this calendar year 26 itself.
The other aspect, Mr. Singhania, has been on washing machines. Now, that has been a product that's been with you over the last 3 to 4 quarters, but probably what's happening on the street is that the accretion that was expected compared to other EMS players, and unfortunately you are in the industry of comparison, has been one of the key focal points for investors. So for washing machines specifically, while you mentioned about large domestic appliances being a key growth area along with the other two segments, specifically for washing machines, is there any revenue targets that you can give us over FY27?
So the good news I'd like to share here is for the washing machines, definitely, yes, there was some delay in getting the approvals from the customers, but now that is all behind us. From Q4, we have already onboarded, got the approvals for 2 marquee clients, and the production has already started and ramped up in the current quarter. And we see significant quantities and revenue targets. We will definitely revise upward when we do the earnings call for the next for the final annual results. So that's something I'm repeatedly saying that LDA is one segment which we see will grow at a much rapid pace.
And so Mr. Singhania, you've given us a breaking news, at least on the show today. You've given us something that you've not said anywhere before. So I'll take it with both hands. The other aspect of the smaller domestic appliances as well, the expectations that while it is a higher margin business, because of the prices of those products being so low, it's a big volume game, and it's something that's while you have been an ODM player, you've always been a technology player as well. So the volume game hasn't been one which you've fought with other players. With SDA, that strategy changes a little bit. So any rationale that you can give us in terms of entering that hyper competitive space, and what do you make of it?
So our competitive strength here is our, like you said, the scale and maintaining the leadership position in the appliances, the large appliances like ACs and washing machines. Definitely, we see will take leadership role in next 2 to 3 years. For small domestic appliances, I think the code we have cracked is not about volumes alone. We want to also increase the width and the basket of offerings. So we have a roadmap wherein we are going to introduce a new product, almost 1 to 2 new products every quarter, and increase the basket of offerings. Because that not only helps us cater to the versatile demand of the customer, but also kind of balance the seasonality and balance our quarterly revenues. So the whole idea of what we have been working on is to have uniform, continuous revenue stream every quarter.
Well, Mr. Singhania, you've been very, very honest and upfront to us about a whole host of issues that you are trying to track, but appreciate your time here on NDTV Profit. We wish you the best. Hopefully speak to you once you'll speak to us again when Hisense starts production in March. So a lot more talking, a lot more numbers at that time. But thank you and appreciate your time here at NDTV Profit.
Thank you so much. Thanks a lot.
Well, that's largely, on EPAC Durable specifically, a key company in the ECMS space. In the EMS space specifically, looking to enter ECMS as well. But that's all the time we have on KYC. Stay tuned. A lot more action on the other side.
is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Shaky footage, guys. Apologies for that in advance.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses.
Positive global handover weans off as Nifty fails to hold on to the early morning gains today. Trades below 25,300 levels. Broader markets underperform as volatility index rises. Real estate, banks and financials under pressure. Metals shine. Interglobe Aviation reported a sharp decline in the net profit in the third quarter of the current fiscal, weighed by one-time impact of new labour codes and flight disruptions in December. The company now eyes pilot hiring timelines and operational efficiencies. Premier Energy is under pressure after revenue misses the expectations of the street. Lower tax aids the profit. Improvement in asset quality aids Bandhan Bank. Gross NPA ratio declined significantly to 3.3% from over 5%. Brokerages remain upbeat with CLSA Macquarie optimistic on the margin outlook.
And among other Q3 contenders, Street will be keenly watching out for the results of several counters, Cipla, Godrej Consumer, JSW Steel and Shriram Finance to announce results today. Good afternoon. Welcome to Markets at 12. I'm Nisha Poddar, and at 12 today, in the middle of the day, well, market is looking weakish. In fact, more than 100 points drop from the high point of the trading session when we talk about Nifty 50, closer to the lower end of the spectrum of the trading session. 25,200, that is one level which is now getting tested at the current moment. Let's also take a look at what the internals are suggesting. Of course, big boy Reliance Industries is causing a lot of dent to Nifty 50's performance. Eternal, L&T, HDFC Bank, Axis Bank are some of the others. But on the upside, it is big boy from the IT sector, TCS, along with HUL, Asian Paints, Hindalco, Ultratech, the two Aditya Birla Group companies, as part of Nifty 50, are adding their weight to Nifty 50 when it comes to the positive momentum. If we really take a look at the sectoral performance, well, Bank Nifty is in line with the key indices, top indices, but on the other hand, the broader markets, there is a large amount of weakness compared to the key indices today. So keep an eye out on the mid-cap as well as small-cap universe. When it comes to the IT sector, that is one sector which is in the green and is really contributing well to the space. All right, now spotlight on some of the other earnings of the day. Remember, we are in heavy earnings season currently, and weak set of numbers for Syngene International, Premier Energies. Q3 beat the estimates. Vasha has all the details. Tell us, Vasha.
Well, let me start with Syngene International, wherein the numbers were quite weak. If you see, impact was led by ongoing inventory correction for one of their drugs, which is Librela, and there was a one-time loss of 70 crore in Q3 due to new labor codes, and they've reported additional gratuity cost related to that. They've also extended their collaboration with BMS through to 2035. But the interesting point over here, and why Syngene is under pressure, because we did speak to the management, and they said to NDTV Profit that they are expecting degrowth of 2 to 3% in revenue versus the mid-single digit guidance that they had given for FY26. A bit negative coming for Syngene International. This is the guidance which is expected at only degrowth of 2 to 3%.
All right, Varsha, thanks so much for getting all those important details. Now, remember that we are in heavy earnings season today. Of course, JSW is going to announce its numbers later today. Of course, most of the IT majors have given their results, and let's focus on that particular bit. Emphasis has mixed Q3. In fact, my colleague Puneet had a chat with the management on the performance as well as the outlook. Take a listen.
This morning. My first question largely on your deal ramp up, and we've been speaking about it consistently over the last few quarters. It's been quite strong yet again in a seasonally soft quarter. It's been a very strong quarter for you for deal wins. However, there seems to be a disconnect between that as well as your revenue growth profile, or that translating into your P&L as we speak. If you can offer us some perspective, why the conversion from TCV to realized revenue is taking so much time for you? Is it largely that the deals are structured in such a way that the ramp up is gradual, so as to not have too much impact on P&L? If you can start us off with that, sir.
Sure. I think firstly, the ramp up in deal wins is something very deliberate and very focused. We've been driving our large deals team over the last 12, 18 months, and this is showing up in both pipelines and TCV wins. On the nature of these deals, I think many of these deals typically are transformation combined with some form of existing takeover of operations. And in typical constructs of these deals are such that it'll take you 3 to 6 months to either ramp up or get to a point where you can start applying those transformation levers. And some of these are even longer term than the usual 3 to 4 years. So a combination of those factors basically means that each deal, depending on the nuance, will take some time. But conversion's been pretty strong. I think the thing to note is through the financial year 26, our growth's actually been accelerating, especially in the direct business. So I think it's fair to assume that ramp up is translating into growth. And of course, there are other puts and takes. The deal wins that you're seeing are just net new. If you have segments of the business that have other headwinds, then of course it nets off some of the growth. But broadly, all of that is behind us, and given where we stand, I think the correlation that we've now published should give you a sense that the higher correlation will mean that faster growth, as correlated to TCV wins as well. So fairly well, placed and comfortable with where we stand.
Got that view, but in terms of what we've seen in the sector as well, that the deal wins, once they start showing up in the financials, there's largely that the number of headcount that you have to add for that particular deal wins also has an impact on margins. Are you largely seeing that, or is it because, as you said, the deliberate way that you are ramping up these deals, we shouldn't see too much impact on margins going forward?
Yeah, I don't think there's anything specific to call out. I think whatever we feel comfortable with the headcount position. Also keep in mind a number of these deals are blending people-based services with certain platforms and software assets that we're deploying as well. So I think if anything, we are, based on our current headcount and utilization levels, we don't think we need to call anything out specifically in terms of impact on margins due to ramp-ups.
There's also been, your guidance on AI as well as its pricing power. You mentioned that, there's no pricing deflation largely from artificial intelligence, which is largely a contrarian view, right, to the broader fear that we are seeing in the market. So the question largely being, any kind of quantification that you can give on this particular aspect? Do you feel that are clients like actively signing outcome-based deals for AI large compared to maybe value-based contracts in that sense? If you can give us some perspective on that, sir.
Yeah, I think what we are basically saying is depending on the way the stack you play in, your services that you offer, and your ability to move seamlessly from the input-based pricing or effort-based pricing to an outcome pricing should take care of the AI deflation fears if you play it right. You will see volume expansion, you will see wallet share gains, you will have the ability to drive a certain degree of profitability. So if you stay in the same mode of pricing, then you will see price headwinds, and of course, price headwinds mean revenue headwinds as well. So I think it's a question of how you're able to use the positioning that you've built, the capabilities that you've built using platforms, and more importantly, proactively driving those conversations with customers. So you're not, reacting to an ask from a client on either efficiency or AI-led gains.
All right, so that was the emphasis management talking about their quarterly performance. We'll slip into a short breather, but many more news and developments on the other side. Stay tuned to Markets at 12.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
Welcome back. You're watching Markets at 12 and let's focus on one banking results. In fact, Prashant Kumar, the managing director and CEO of Yes Bank, spoke to me a little while earlier on the company's performance. Remember that the bank has given strong set of numbers, that there are a few one-offs which have made the numbers look much better. So we got into the internals of this particular discussion with Prashant Kumar. I started by asking him about the loan growth scenario, which was clocked in at 5% in this particular quarter gone by, and what is the guidance going forward for loan growth for FY26. Take a listen. All right, we are joined by Prashant Kumar, who is the Managing Director and CEO at Yes Bank. Mr. Kumar, always a pleasure to welcome you on NDTV Profit. Of course, a strong set of numbers coming in for this particular quarter, but I want to focus on a few of the aspects which have improved or at least optically improved the performance of the company in the last quarter gone by, which have been one-offs or non-recurring in nature as well. And that's where the operational aspects also kick in. So my first question to you, Mr. Kumar, is on the loan growth. Now, for the last quarter, it has been at 5% growth. Now, if we are not wrong, there has been a guidance given by the bank of 8% to 10% growth in this particular financial year. With the 5% loan growth in the last quarter, has anything changed on the growth outlook? And what will be your guidance for FY26 and 27 on loan growth?
I think we are quite confident to achieve 8% loan growth for the current financial year. And why I'm saying this, because if you see last quarter-on-quarter growth is 2.9%. So if we grow in the same range, which is around 3%, our YOY loan growth would be around 8%. Okay. So basically nothing has changed, but we are following a very strategy in terms of chasing a profitable loan growth. Sometimes you may go for just loan growth, which may not give you the margins, because there are certain asset classes where the margins are very thin, very competitive. And on top of it, then you have the PSL obligation. So I think it makes sense that you chase those asset classes, which not only gives you good margins, but also in terms of not unnecessarily bring the obligation on the priority sector requirements.
All right, so 8% is what you're guiding for this financial year. But Prashant Kumar, you also reported an expansion when it comes to the NIMs. Now, there were a few events like CRR rate cut, deposit repricing, which also impacted, which are one-offs. And also we know that the rate cut is going to show much more impact from Q4. So putting all this into perspective, what are the NIMs headed for going forward?
So I think there has been an expansion of 10 basis point on NIMs for the third quarter. The current quarter, the 25 basis point cut in repo, definitely the entire loan book would be repriced in the 3 months. Okay. Though there would be advantage because of the CRR cut also. But I think in this quarter, for the entire banking industry, if we are able to protect our NIMs, I think that itself would be quite challenging. Because the reason is that quarter 4, there is always a good loan growth. And because of the tight liquidity situation, I think there is a very close fight between all the banks to get the deposit. You have seen like the loan to deposit ratio of the banking industry for the first time has crossed 81%. And some of the banks are actually 90% plus. So I think in that situation, definitely those banks would be fighting very hard to get the deposit to support their loan growth. So I think Q4, there would be definitely a very close fight for the deposit. Everybody would try to get maximum deposit. Would not be possible to further reduce the rate of interest on the deposit, at least in the current quarter. So our strategy is definitely in terms of protecting the margins in the Q4. But definitely going forward, there would be an upward journey or journey in terms of improvement.
All right, so that was the Yes Bank management giving more insights on the future outlook of loan growth, NIMs and ROA. In all three, they are on track with the guidance that they have given. All right, let's now focus on the budget expectations. And yes, wishlist has been going to the Finance Minister. Budget 2026 is just around the corner. And private equity space, the alternative investment funds, they have really given a huge amount of growth capital as well as investment diversification opportunity in the country. So they have big asks from the Finance Minister. Let's get some of that from an industry expert. Let me welcome on the show Srinivasan, who's the Managing Director at Kotak Alternate Asset Managers. Srini, always a pleasure to welcome you on NDTV Profit. Now, if you have to summarize in the key highlights of the top 5-6 aspects, which are the key demands of the private equity and the fund industry from the union budget this time?
There are a bunch of things that we have asked for. I think the first of them is certainty of taxation, which is, as you know, that private equity funds or alternative investment funds are limited life vehicles, and which is quite different from some of the others who are unlimited life vehicles. So at the end of our life, we need to have clarity that the taxes are completely done and dusted. And we have requested as part of the budget that if the tax assessment of these limited life vehicles on their completion gets done within a 12-month period, it gives certainty to the investors in the fund. It also solves a lot of problems where SEBI is grappling with regard to liquidation or complete closure of funds. And this will give a great relief to both fund managers and investors, because sometimes in anticipation of potential tax liability, fund managers have to retain some money back, and that impacts investors' returns as well. So I think that's the first ask. The second ask that we have made is that between taxation on equity and taxation on interest income or debt securities is very wide.
If I can intervene, since you already expanded on this particular aspect, especially when it comes really at the time when the Tiger Global case in the Supreme Court, which was which had overturned the Delhi High Court verdict and had been given 7 years after the transaction took place. That particular case has given a body blow to the fund and the private equity industry. Is that particular scenario aimed to be really addressed for future with this big ask coming in from the private equity industry from the union budget?
Well, honestly, from our point of view, we had made this ask much before this Tiger Global verdict came about. And without getting into the merits of the Tiger Global situation, of which I am not fully intimately familiar, the reality of it is that if we can have tax certainty within a defined time frame and not a 7-year period for funds which have actually got completed, it would certainly help the cause of attracting more investments into the country. Whatever disruption that this particular verdict may cause, I think having this kind of certainty would certainly help the cause of attracting more capital into the country.
Right, Srini. In fact, the tax investigation as well as closure and resolution of the matter has to happen very close to the transaction, because funds have limited lifeline and time period, and therefore holding that cash is actually time value of money wise a loss on those funds as well. So that particular point coming out very clearly. When it comes to taxation overall, there is also a big ask of parity between equity products as well as the other hybrid debt or other related products. Where are we on that, and what is the big ask coming in from the union budget?
Well, I wouldn't say parity. I just said that, look, the disparity in terms of taxation between interest income and capital gains is actually resulting in misallocation of domestic savers' capital. Today, domestic savers are investing in different kinds of mutual funds, which are technically taxed as equity funds. And that actually is competing even with bank deposits in terms of customer assets. What we are saying is that if you have interest income taxed at the maximum marginal rate for high net worth investors, those investors are not really buying into interest bearing securities. And that has an impact even on the bond markets in India. If you tax interest at such an usurious rate compared to equity, then you are not helping the cause of deepening and widening the bond market. We need investors who are otherwise happy to take equity risk to invest in bonds, even if they are lesser rated, because they have the risk appetite to do so. Today, if you look at the bond market, the majority of the bond market is cornered by the AA and the AAA. And the institutions in India are also either by regulations or by risk management, focusing only on the AA and AAA. So the MSMBs, the lesser rated companies, they are not able to get capital or credit capital. And as an alternative investment fund industry, we have investors who have the risk appetite to invest in some of these lesser rated paper as well. And that actually makes a more vibrant, deeper and wider bond market. World over, bond markets are bigger than equity markets. We are not enabling that by having a differential in taxation, which is so wide that it is discouraging investors to invest in credit securities.
So that's the larger picture that you mentioned, Srini. And narrowing it down, private credit is one space which is growing very fast. But this particular area attracts interest income and taxation on interest income, which is much higher than capital gains tax. And therefore, it discourages and reduces the attractiveness of these kind of products. Any specific views on private credit growth and the hindrances there?
Yeah, absolutely. The taxation is one of the biggest hindrance to private credit growth, because if, as you know, in India, the category 2 funds, which are private credit funds, they're all pass-through vehicles. And the investors in those private credit funds are domestic banks, institutions, and of course, family offices. Now, if you look at the situation, a foreign investor comes into a domestic private credit AIF, that investor is likely to pay a maximum tax of 15% on interest income, as opposed to a family office, which is likely to end up paying at anywhere between 25% to 35%. And that essentially means that you are handing over the private credit market to foreign investors. That's one aspect of it. The other aspect of it is that you are discouraging the domestic investors from coming in. If it is a pass-through vehicle, you make it a level playing field for everybody to be able to participate, and you are able to commingle both international capital and domestic capital and provide the much needed credit into the domestic market. There is also another school of thought that some people feel that private credit can cause systemic risk. I think that is, at this point in time, too early and probably misplaced, because unlike in global markets, private credit funds in India do not take leverage from the banking system. So it is actually looking at it from the perspective of systemic risk, more of an equity capital. If the private credit fund does not make money or loses capital, it's the loss of the investor and not on the banking system.
Right. Thanks for clarifying that bit. But that anomaly, and by design here, Srini, the equity schemes and funds are made more attractive than the debt, hybrid and other such instruments. And that parity is very, very required, because equity is made much more attractive as an instrument. Finally, and very quick answer on that to explain enabling LLP's structure for AIFs. That's also an ask. How will this help? Quickly.
I think, again, trust taxation has always been a very difficult subject matter, and different regulatory authorities have different views with regard to how a trust is to be viewed from the perspective of borrowing, from the perspective of taxation, and from the perspective of operational ease and efficiency. World over, private equity funds are run as LLPs. What we are simply saying is that let's adopt what are the best practices in other parts of the world,
Right, so some of these could really make it to the union budget speech by the finance minister. Thank you so much, Rini, for breaking it down for us and being an industry voice to lay down the wish list coming in from the budget by the private equity industry. Thank you so much for joining us.
Thank you.
And completely out of time when it comes to markets at 12. Thank you so much for tuning in, but do stay tuned to NDTV Profit. Thanks so much.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाए।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर।
Hello and welcome to NDTV Profit. This is Hiral Dada bringing you our all new offering trending stocks. And with me today is Mahima Vachajani standing at the NDTV Profit market pit with all the action in the markets today. Mahima, an interesting day of trade as we speak. Weakness in the rupee continues. There is selling pressure as well. What are the key factors that you're tracking?
Right, so, at the start of the day, we did start in the green, but right now the markets have turned into the red. 83 points downtick is what we're seeing. We did slide below the 25,200 mark as well, so that's the first trigger that we're seeing on the benchmark indices. But with regards to where the broader market stands, they are, further underperforming the benchmarks as we speak. Both the mid-cap 150 and the small-cap 250 are down almost 0.7, 0.8% each. With regards to where the India VIX is concerned, that's up almost 3.5%, and that is indicating volatility, and that should continue going forward. Is what something the India slight recovery is what we are seeing in the India VIX right now, 2.3% right now. But with regards to where FIs stand, they've remained net sellers for 13th straight session now, and that's concerning. And that turnaround, we'll have to wait and watch out for as to how that happens and as to when that recovery comes into picture. And lastly, Bank of Japan, the latest coming in is that the rate of interest for coming in from them has remained unchanged for now. But pressure in the markets continue is the headline.
The pressure in the markets continue. That's the key headline that we're tracking at this hour. Let's quickly take you through the entire watch list that we have in terms of today's session that we're going to track. Asian Paints, the top gainer on Nifty 50. You have Dr. Reddy's and Sun Pharma. It's a GLP-1 push, for a semi-glutide and Ozempic in terms of selling and manufacturing in India. Hindalco up 11% in the last 1 month. Tanla Platforms, also on the back of a strong quarter, is buzzing in trade. A 200 crore rights issue nod for a Deccan Gold. The outlook in terms of FY27 absolutely positive is what we are tracking as well. Moving away from a Deccan Gold, Home First Finance is also buzzing in trade. Voltas also seeing some smart moves today. Bandhan Bank on the back of earnings. APL Apollo Tubes, the margin guidance has been revised, and IIFL has no evidence of tax evasion is what the management has indicated to NDTV Profit, and that's when the stock has seen a recovery. Eternal under pressure for a second consecutive day. Indigo Q3 profits have been hit by one-offs, and that's the pressure being created. The lowest revenue in 5 quarters for Ixigo is what we will be discussing as well. And RBI has ended the PIDF scheme, and that is what has put Paytm under pressure. So these are the trending stocks in today's session. But let me head across to Mahima, who will take the rapid fire with Akshay Bhagwat of JM Financial.
Right, so I'll start, Akshay, by asking you with regards to where Asian Paints stands. Slowly and steadily, the stock is picking up. 16% gains is what we've seen overall in the past 6 months. Your view?
Good afternoon. So positive view for short term, 2700 is the support. We can be looking at upside targets till 2850 on Asian Paints.
Okay, Dr. Reddy's is the next one. They've secured manufacturing license for semi-glutide. What are the charts indicating for this one?
Charts indicating a very positive stance. In fact, yesterday post results, good recovery from 1180 support. 1300 is the possible short-term target you can look forward to.
All right, Hindalco has run up almost 11% in the past 1 month. Is that momentum still strong on the charts?
Yes, maybe sideways for short term, but overall 1000 should be the target zone with the holding of 10 to 15 trading sessions.
Okay, Turner is the next one. I think strong earnings, but I think Dipender Goyal stepping down has kind of weighed down on the stock. What are the charts indicating right now?
Short term weakness can see a drag down till 250.
Okay, Home First Finance is the next one. NI growth is stronger than the loan growth at that 25% mark year-on-year basis. What are the charts indicating?
More of a neutral setup. Range bound trades expected between 1050 to 1150.
Okay, Deccan Gold Mines is the next one. High targets, tall targets given by the management. The stock has also seen gains of about 19% in the past 1 month. What are the charts saying here?
It's more of a range bound scenario, although it's gone down. So I will not take a fresh trade on this.
Okay, lastly, Voltas has touched an intraday high of 4%. Volumes not very strong on this one, but do you think the momentum is here to stay?
No, again, it's range sideways. 1275 is the support. If it breaks, you have to take an exit.
All right, so that's the view coming in on Voltas. Hiral, tossing back to you with regards to all of these EMS players plus consumer durable players, they've been under pressure. I think the key question from here on would be whether this pressure is off the radar post seeing the Q3 numbers or not.
Absolutely, that's what we are watching out for right now as we speak. But let's quickly address a Paytm on the screens right now and see what's happening on that counter. It's seen a major dip in intraday trade, went down to levels of almost 10% kind of a downtick, has recovered as we speak. Now, what Paytm is indicating is, there is a speculation that RBI may not renew PIDF. PIDF is the Payment Infrastructure Development. That's what it stands for, and that's the reason why, the stock has been under pressure. And this is what Arihant Capital is indicating. If this happens, Paytm may lose nearly 200 crores when it comes to annualized revenues, is what we are picking up from the analysts so far. So basically, Arihant Capital indicating that there is speculation that the RBI may not, renew PIDF, that is the Payment Infrastructure Development. And if that happens, Paytm may lose 200 crores in terms of annualized operating revenues is what we are picking up so far when it comes to Paytm. 200 crores currently flows directly to the EBITDA is what Arihant is also indicating so far. So that's the latest that we're picking up when it comes to Paytm right now. And that stock is trading under pressure. Apart from that, in terms of the potential mitigation, what they've said is that since the scheme's cancellation would affect the entire industry, players may collectively raise prices to compensate this. And a simple rupees 10 per month hike in soundbox rentals from the current 100 rupees per month would actually nearly fully offset this revenue loss. So one, there is an impact. Two, to mitigate the impact, they would at least have to take a hike of 10 rupees per month. So from the existing 100 rupees per month, it could go up to almost 110 rupees per month. And despite the regulatory uncertainty, the potential for corrective pricing power keeps the outlook positive. That is what Arihant Capital is indicating so far when you talk about Paytm. But 200 crores loss in annualized revenues is what we're staring at so far. We will take a discussion on this with the analysts soon as well. But let's head across to Syngene. That stock is at a 52-week low on the back of weak Q3. Varsha has spoken to the management as well, Peter Bains. Let's listen into that conversation.
Well, Hiral, if you see the Syngene has not given a good set of numbers, and this is why if you're seeing the stock is down. And the impact was led by ongoing inventory correction for one of the drug, Librela, and there was a one-time loss of 70 crore in Q3 due to new labor codes. But to speak more about the numbers and what lies ahead for next 2 to 3 years, I'm here joined by Mr. Peter Bains, who is the MD and CEO at Syngene International. Well, Mr. Bains, welcome to NDTV Profit. It's a pleasure to have you. You mentioned Q3 was impacted by a single large molecule. Can you help us understand whether the impact is temporary or structural?
So the impact has been ongoing through this year, and it is continuing to unfold, and we expect it to continue and play out in the coming quarters.
On that note, how much revenue concentration does this single product represent today?
So we don't give out that level of detail, but this was our largest manufacturing collaboration, and it's a commercial product, and it is clearly the single biggest impact on our numbers. What is important is to sort of drill down there and look at our business across the board. And if we put the impact of this single product to one side and look at the rest of Syngene's business, what we're seeing there across our diversified platforms is growth. So if I take that single product impact out of the picture and look at our manufacturing platforms, we are seeing capacity utilization increases, and we are seeing stable growth now coming out of both large molecules and small molecules. And then if we look at our research services platforms, we are seeing good growth in chemistry, we're seeing growth coming out of biology, and we're seeing growth in our translational and clinical services divisions. So in some ways, it's two parts. We clearly are facing the single product challenge that we've described, but on the other side of the business, which is where we're clearly focusing our efforts, is on driving growth across the breadth of our diversified platforms, and it is encouraging to see that we are growing right across those diversified platforms.
Right, but Mr. Bains, how confident are you about growth acceleration over the next few quarters? If you could, update us on that.
So I think Syngene is very well placed to capitalize on the strength of its diversified platforms. This gives us opportunities to grow in manufacturing, and we are encouraged by the capacity increases that we're seeing and the translation of that into early growth. We need to build on that clearly in the coming quarters to see that push on. And then back to our research services, good growth here, across chemistry, biology, and translational sciences, and we feel we're well placed, with our investments in new technologies and differentiated services, to look to build on this platform and see, growth coming in the coming quarters.
But Mr. Bains, is Q4 looking stronger? Now, why I'm saying this, because considering FY26 mid-single-digit guidance which was given by you, how is Q4 looking? Because Q4 has to be the strongest quarter if you have to meet that guidance.
Right. So in the light of, the ongoing challenge in the single large molecule, which I think has come in, a little bit higher than we anticipated, we will be making, an adjustment to our guidance.
And that change would be, so is there any change in guidance?
Yeah, so the guidance, on revenue, we will be adjusting that from a mid-single-digit growth to a degrowth in the 2 to 3% range.
Understood. Well, thank you, Mr. Bains, for joining this conversation, and all the best for the business. Well, Mahima, I mean, this is the big statement coming. Syngene has actually reduced its guidance from, mid-single-digit growth to now degrowth of 2 to 3% for FY26. And that's the reason, if you see, the stock is down almost 4 to 5%.
Right. Varsha, thank you so much for getting us those details. I think the cut in guidance is the main reason as to why we're seeing that fall in the stock coming with regards to where Syngene International is concerned. But moving on, the other counter that's in focus is Interglobe Aviation, that is Indigo. We've seen the slowest growth in terms of a Q3 performance is concerned since FY21, that is since COVID. However, the revenue growth is better than what the street was expecting. Of course, there was a one-off of around 1,500 odd crores in terms of where the PAT stands, but we have Somit joining us to give us the entire detailed report as to how Q3 has panned out for something like an Indigo.
Well, if you look at the Indigo numbers on a consolidated basis in the third quarter, they were quite strong compared to what the street was anticipating. Now, the beat was largely that had come in on the revenue front, which also translated to a beat on the EBITDA front as well. The net profit number, however, that was impacted because of a couple of one-offs worth close to 1,547 crore rupees. Now, of this 1,547, 969 crore was related to labor code and 577 crore was related to the flight disruption. Now, if you exclude this, then the PAT number would have been close to 3,130. Again, this would have been ahead of what the street was anticipating. If you look at the company's fleet count, that also increased significantly by around 23 aircraft to close to 440. The guidance given by the management, however, that is not that great because they're expecting Q4 capacity growth of at around 10%. They're expecting their unit passenger revenue to decline by around early to mid single digit, and they're expecting their unit cost that to increase by around a mid-single digit for FY26 as compared to FY25. Now, what are we implying out of this guidance that the management has given? And that is a key negative that is coming in for Indigo. And that is the overall revenue guidance implies that overall revenue growth would be just around 4.5 to 6.7%. Again, this is the slowest Q4 revenue growth that we will see since FY21, that is since COVID times. The cost guidance, now that implies that in the fourth quarter, the unit cost could significantly increase, excluding the fuel cost if you see. Apart from that, the Q4 profits could also come down significantly given the fact that there is a high base effect. Now, if you remember, fourth quarter of FY25 was extraordinarily strong for Indigo given the fact that there was Kumbh Mela and hence there were more flights that flew and higher yields were also one of the reason. Apart from that, the management did not comment on whether their growth plans will slow down in the near term because of the new pilot norm. So that is also one of the concerns. And lastly, the management to NDTV's question did say that Q4 could continue to see one-off cost owing to flight cancellation. So these are broadly the negatives that are coming in from the Indigo results. However, the third quarter numbers were ahead of what the street had anticipated. Now do listen into what the management had to say when it comes to the decline in revenue and increase in unit cost.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single-digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
Okay, so that's the view coming in on Indigo. Let me get in Mr. G. Chokalingam, founder and MD at Economic Research. Mr. Chokalingam, welcome to the show. Always a pleasure to speak to you. I want to discuss three stocks with you. Let's start first off with the Indigo. On the back of the commentary on the impact and the outlook, what is your view?
I firmly believe that medium to long-term outlook remains intact. Even in this quarter, it is mainly because of negative entry in other income and exceptional expenses. It has posted a solid degrowth on year-on-year basis. But the fact is that the revenues are growing. And from economics perspective, I would say that it is very difficult to compete effectively and pull down the market share of a leader like Interglobe in the next 1 to 3 years, because it's a cash burning industry. And Interglobe sitting on a huge gross cash, though it has got a gross debt as well. But it's unique. Its balance sheet is uniquely positioned. Its market share also, it is positioning the company in a unique way. So it's going to be very difficult to replace or reduce market share of Interglobe substantially in 1 to 3 years. Yes, things may change after 3 years, but it's going to be very difficult. And secondly, the oil price still down 18-19% from 52-week high. And I have a very strong view that the oil price is going to fall significantly in the next 1 to 2 years. And that is also going to favor aviation industry. So therefore, I would maintain a buy recommendation on Interglobe.
Okay, so that's Interglobe Aviation. Moving on, Syngene is another one I want to talk to you about as well. The management actually has come on record on NDTV Profit and said that they've cut the guidance from lower single digit to negative to degrowth. The stock is trading at the day's lowest levels. What would you make of this?
Yeah, it's very unfortunate. It's a great company, great technology company, great management. But unfortunately, if you see in the last 10 quarters, there has not been a great upside in the revenue on year-on-year basis. And if you look at the operating margin also in the last 10 quarters, it has been consistently going down. And this quarter also, year-on-year basis, it is down almost around 700 BPS. So with this reduced guidance, and it is trading to more than 50 PE. So my point is, why should one give this kind of PE ratio when it is expected to, in fact, continue very, very subdued performance? Most importantly, even before making provision for labor code charges, its profit has come down drastically, more than 45%. So therefore, I would avoid. I might even take a courage to sell the stock and wait for 1 or 2 quarters before the company starts improving its business outlook.
Right. Quick view, Mr. Chokalingam, in terms of Paytm. Now, there is speculation that RBI may not renew PIDF after December 2025, which is the Payment Infrastructure Development Fund. And what reports or even analysts are indicating is that the Paytm may lose 200 crores in annualized operating revenues. But there are mitigation plans as well, wherein they're saying that by increasing the subscription price, they would be able to, mitigate it. And secondly, by not deploying unprofitable devices, the stock actually hit a low of 10% in today's session, intraday downtick. Currently still continues to trade under pressure. Your view?
I would sell the stock. Yes, the company has done phenomenally well in improving, operating margin from double-digit negative to positive around 7%. But the point is, last 3, 4, 5 quarters, there has not been a meaningful strong growth in the revenue. So I am very nervous to give this kind of valuation, as you also put out, some negative development in the industry, particularly for the company. So I would stay away from Paytm.
All right. So staying away from Paytm is the view coming in from Mr. Chokalingam. The stock tanking and how down by about almost 7% as we speak. But shifting focus to something like a Kitex garment, we've seen the kind of pressure that textile companies have seen. In fact, it's been volatile year for all of these textile companies, considering the US tariff trade deal into consideration. But Kitex garment for second day in a row is seeing good gains. Today it's up by about 7%. And Puneet is joining us to give a perspective as to what's happening with this counter.
Well, thank you for that. It's largely been one of the big beneficiaries actually of the India-US trade deal. Now, that hasn't signed yet, but if it's the mother of all deals, as the EU Commissioner has herself said, Kitex could be one of the big beneficiaries. You're seeing an 8% up move on the stock today, although in the last 6 months it's down 37%. So it reflects the pressure that has been over the first quarter one and quarter two of FY26. If things do turn, and maybe they do in terms of the commentary by the company, it could be one of the big beneficiaries as well. Now, a lot of its exports come in the US as well as in the EU. If the EU trade deal does happen, it's a big beneficiary, and the US trade deal, while it has been much more talked about, could take some more time if needed, would be the other additional benefit for the company. If you also look at the global trends that are happening, in a lot of the production has shifted towards India, as well as reduction from Vietnam and Bangladesh, given the geopolitical tensions there. So it definitely could be a big beneficiaries. If you also see finally the revenue picture, over the last 3 years, the revenue has steadily increased from almost 553 crores to over 983 crores in FY25, but margins did get some hampering and some beat down because of higher interest costs on the net profit impact. So you have to watch out for that, but overall, a strong and big beneficiaries of the trade deal if it does happen.
Right, absolutely. Thank you so much, Puneet, for bringing us those details. Mr. Chokalingam, I'll quickly come to you on Kitex garments or the entire textile space. How, would you position yourself right now?
I would stay away. Of course, a company like Kitex and all is a great company, no doubt about it. But this morning we saw all media reporting European Union doing away with the GSP benefits for Indian goods exports. And among those goods exports, textile is one of the major exports. So already we have uncertainty from the US in terms of tariff hike. And particularly Kitex has huge capex in progress. So a substantial expenditure they have planned, and therefore the borrowing also has gone up. So with these uncertainties, I would sell Kitex garment at this price.
Okay, so that's with regards to Kitex. Now moving on, Tanla Platforms, that's seeing an interesting move in trade today, and that's on the back of the earnings that have been reported. 11% up move coming in there. Revenue has actually crossed that 1100 mark for the first time ever, and they've delivered growth across key financial sectors. Margins also have seen some interesting number on a sequential basis. I'm going to recheck if that can ever be the margin as well. The growth has been led by higher wallet share from the existing customers, and the focus of them is going to be investing in Wisely.ai. The investment is aimed at solutions for telecoms and enterprise. So that's the view on the Tanla Platforms. Mr. Chokalingam, any outlook over there? Because a 10.5% up move on the spectacular number.
To be very frank, I find it very difficult to understand Tanla business model, because there is a lot of trading of services. Employee cost is very low, unlike other technology companies. So that doesn't give me confidence. And market also, I don't know why with this kind of business revenue base and profits, it's giving a very low PE. So I would pause this stock. I would rather avoid giving any view on the stock.
Okay, all right. So that's the view coming in on Tanla Platforms. The other counter that remains in focus is Deccan Gold Mines. Now, its arm, that is GMSI board, has approved right issue in the ratio of 2:1 for that 200 odd crores, and they've approved right to issue at a price of 250 per share. The board is also, participating in this particular issue. Now, with regards guidance also, Mr. Chokalingam, where Deccan Gold Mine stands, they aim to have a profit of 200 crore by FY27. Is this a company that you're looking at from an investment point of view?
No, certainly not. The revenue is in poor single digit. I would rather wait for the company, build a revenue before giving a buy recommendation.
Okay, so that's with regards to Deccan Gold. Moving on, Bandhan Bank, the asset quality is improved in the third quarter. The profits are down this time around. The stock at the day's highest levels, 5.5% up move coming in there. Your view, Mr. Chokalingam, on a Bandhan Bank?
One can hold it. It is almost a slight discount to adjusted book value. So one can definitely hold the stock with the medium to long-term outlook.
Okay, so that's the view coming in on Bandhan Bank as well, but completely out of time. Thank you, Mr. Chokalingam, for joining us on the show at NDTV Profit. Thank you, viewers, as well, from Mahima, the team that put the show together, and myself. In fact, lots more lined up on NDTV Profit. Please stay tuned. From Davos coverage, it is the last day, and you have budget, which is the next big event that all are eyes on, and what's happening across nations when it comes to all your tariff barriers, the trade deals that are being signed as well. Stay tuned to NDTV Profit.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरा कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Shitty footage, guys. Apologies for that.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy in one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 20
Positive global handover weans off as Nifty fails to hold on to early morning gains, trades below 25,300. Broader markets, though, underperform as volatility index rises. Realty, banks and financials under pressure. Metals shine. And Interglobe Aviation reported a sharp decline in net profit in the third quarter of the current fiscal, weighed by one-time impact of new labour codes and flight disruptions in December. The company now eyes pilot hiring timelines and operational efficiency. On to earnings then. Premier Energy is under pressure after revenue misses expectations. Lower tax aids profit. And an improvement in the asset quality aids Bandhan Bank after the third quarter, where you do have the gross NPA ratio that declined significantly to 3.33% from 5%. Over 5%, brokerages remained upbeat, with CLSA and Macquarie optimistic on margin outlook. And among other Q3 contenders, Street is going to be keenly watching out for results of several counters, Cipla, Godrej Consumer and JSW Steel, as well as Shriram Finance, to announce results today. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you up of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But let's kickstart the show. Start by taking a look at the Nifty, of course, because you do have the Nifty that is not doing all that well for itself. You do have that positive handover that we have, a little bit of that, at least after that Wall Street strength that is actually weaned off down about 90 odd points. It's Nifty for you. When you take a look at the list of sectors, it's actually metals that is broadly shining, and you can see that reflected in some of the counters as well. Whether you're talking about a Hinzing, bunch of those counters actually that are buzzing away in trade. What's not doing quite well is perhaps a Realty. Let's quickly take a look at some of the counters that are buzzing away on the back of their earnings reactions as well. It's Bandhan Bank that is up about 6%. On the back of that asset quality improving in the third quarter, Home First Finance 5.5% uptick there. Hindustan Zinc, like I mentioned, 5.5% uptick there as well. And it's actually Swan Energy that is buzzing away, 5.5% uptick on that one on the back of an agreement as well. So there you go. That's a bunch of counters that are doing quite well for themselves. What's perhaps not doing so well is a Paytm that is down about 6% in trade. And, PNB Housing also on the back foot. Other than that, there's also Eternal that is down about 4.5%, almost 5% right now as we speak. Axis Bank also under pressure, and BEL also trading with cuts of about 1.5%. So those are some of the counters that you're looking at. But let's also quickly take a look at what your commodities are doing, because you do have gold, of course, eyeing that $5,000 an ounce mark. And silver, of course, has been in focus. It's been a decent week coming in, albeit a week with a good amount of volatility when you talk about this entire precious metals pack. But let's also try and decode what the next week is going to look like from here on. And Biren Vakil, commodity consultant at Paradigm Commodity Advisors, joins us on the show. Good afternoon, and thank you so much for joining in.
Thank you so much.
It's a very interesting week. When you take a look at gold, when you take a look at silver, you do have a bunch of your brokerages that are bullish, at least in the near term. And you do have a bunch of volatility that we've actually seen coming in this entire week. Gold is still up about 8%. You're looking at that $5,000 an ounce mark as well. You're looking at silver as well. We've seen a great deal of volatility coming in here as well. But let's start with gold first. What is your outlook from here on? And what are you expecting, at least in the near term?
Headlines from Davos is hawkish enough to infuse fresh momentum impetus in the gold. So I'm expecting further $200 gains in near term, say 1 to 2 weeks. And we may see 5500 or 5500 in next 1 or 2 months. Technically speaking, as per Elliott wave, market is in fifth wave structure. And this is typical symptom of euphoria or mania condition, which are part of symptom of Elliott wave, fifth impulse.
All right, then, and it's very interesting what we're seeing coming in when it comes to brokerages as well. I wanted to also try and understand what you think about silver prices from here on as well. Are you perhaps that bullish when it comes to silver? Because of course that $100 an ounce mark is something that we're all looking out for.
OTC silver market in London is far end is quite tight. It shows backwardation, means actual tightness in material. So technically speaking, in London spot, we may see 110, 115 in next 1 to 2 week. And structure is still inverted in China as well. So I'm fairly bullish on silver.
So you're bullish on silver as well, but there's a bunch of triggers that you're looking at. You're looking at that entire de-dollarization trend also playing in. Is that something that perhaps makes it to your radar?
You fight between tangibles and fiat currency. So PGM is leading the pack. And among precious metal, I think platinum seems to be dark horse, and it is showing acceleration in momentum and new highs. So these core metals are silver is leader. Second in the place is platinum, and gold is also gaining further heights.
And when it comes to the entire geopolitical risk picture, is that something that you see weaning off in, of course, there's no crystal ball that we have here, but do you see that the geopolitical risk premium is going to be priced in from here on? Because there's actually a lot of uncertainty that we've seen just in the beginning of this year itself. Do you think the market is going to get used to this much?
I think Venezuela and Greenland factor and the latest talk of a global board of peace, all these have shown greater elevation in geopolitical risk. I think it is still a lot of geopolitical risk yet to be factored in.
So lots that is yet to be baked in the pie, that's the word coming in there as well. But if someone were to perhaps start placing bets when it comes to silver, for fresh buys, what would you think that they should be looking at? What is your advice here? Do you think they should be looking at, if having an iron stomach, is that something that they should be a little bit ready for? Start with ETFs, or what's your view here?
Leverage is a tool as well as weapon. So for retail space, I think ETF is the best instrument to deal with current volatility, because current volatility is almost 5%, 10%, very high. So only deep pocket investors with proper risk management using options could test silver as of now. Otherwise, retail space may use ETF to participate the move.
No, absolutely. And I wanted to get a check going on copper as well, because, that's also quite important. Gathering pace, that entire rally there, is that something that you're also bullish on?
Currently, copper is in a consolidation, probably a corrective phase. But for the medium term, I'm bullish on copper as well.
All right, then. Thank you so much for joining in. Just one quick word from you. When it comes to the entire pack, gold, silver, as well as copper from outside the world of precious metals, what are you most bullish on for the year 2026 and also in the near term?
For near term and medium term, I'm fairly bullish on gold. But if choice given to me, I would prefer platinum, which seems fairly undervalued at current level.
All right, then. So that's something new to be looking at. Platinum, of course, we've been talking about this as well on the channel. Thank you so much for taking time out and joining us. So there you go, add platinum to your list, as well as the commentary coming in from Mr. Vakil as well. But time now for a very quick break. More news and updates on the other side.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
मोटिवेशन इज टू सर्व द नेशन। कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबान पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर।
Welcome back. Thank you so much for staying tuned in. Well, NDTV Profit has been traveling across India to capture the mood of industries and people ahead of the union budget this year. As part of our Budget for Bharat series, we reached Indore, the heart of the country's grain market and a major hub when it comes to agro processing as well. Now, in this bustling ecosystem of mandis, mills and exporters, my colleague Sharad met with one of the region's leading processors, Sri Kailash Grain Mills, to try and understand the key demand trends that are shaping the sector. Sharad brings us this ground report from Indore.
Hello and welcome to NDTV Profit. We are at Indore and joining us is Pankaj Goyal. He's the Managing Director at Sri Kailash Grain Mills. A very warm welcome to you and one of the largest players you are in this grain mills industry. Whenever we talk about the grain mills industry, we see about there's going to be a lot of people around, but I'm not seeing a lot of people around. A lot of automations are happening. Just explain us this process. How does this actually happen?
So if I talk about the grain industry, it's really transforming and it needs a lot of transformation. So we are talking about automation, and automation is mainly for consistency, and we are adopting a lot of the global technology.
Right now we are at the starting point of the value chain, I think. How does this process starts working? If you could just explain us.
So cleaning takes place through various equipments. We are removing the dust, we are removing the foreign particles. There are so many things which comes from the farm. And also we are taking so precise things where we are talking about even picking out the color defects in the wheat. So let's say in olden days, हमारी दादी हाथ से गेहूं बिनती थी. So even that is
separate आप लोग कर रहे थे.
So that is also happening with the technology where we have a machines who is already sensing the grain with the color.
Are they separating?
Yeah, so this is the equipment which is separating the grains in terms of colors.
See, you know, this grain has become almost automated. Well, what's the future here?
So I have visited various countries and in terms of wheat processing industries. So over there we are talking about the dark mills. So dark mill is
you spoke about dark mills.
Yes, dark mills.
That means there is no person involved in the factory.
Yes, there is no person involved in the factory. Even the lights are completely off for the power saving, where they are controlling the cost, and the whole industry is being automated to the tune that a person sitting on a computer can operate the industry.
there seems some concerns are still there. Industry is having some kind of headwinds.
Yes, certainly. I mean to say, being an agro-based industries, so always there is a lot of risk associated with the climate, and there is a lot of risk associated with the food security. So currently, the government is bringing a lot of policies every now and then, and we find there is a surprise every day. So we get a notification today, the exports are banned tomorrow, there is some stock limit. We have lost one of the very big market we developed in last 5-10 years.
And is this the export market you're talking about?
Yes, this is the export market. So we were one of the global players supplying to a lot of industries across Asia and the other regions. But since 2023, the exports are banned.
What's your budget expectations if you had to put into the government? What would that be?
In India, still the value addition is not as per the mark which is happening in the global standard. So to create this value addition, there is requirement of more stability in terms of a government policy, engaging with stakeholders, especially the industries, to have an outlook of the industry also. Certainly, government is doing a great work on balancing the farm side and the consumer side, bringing the price stability. But in this whole game of stabilizing the things, industry is really not able to survive. They're facing a big challenge.
We're talking about the consumer front.
Okay.
That's pretty interesting on that. But to put in perspective, what's so special about Madhya Pradesh and agriculture, especially the wheat front? Over here, I'm hearing a lot of different varieties of wheat. Where is being used? Is it just roti or something more?
So Madhya Pradesh grows very large varieties of wheat. So if you talk about for the chapatis, you have a sharbatis, which are specialized wheat, which is grown for good chapatis. You have a durum wheat, which is used for pasta making, for semolina, for halwa, for upma. You have other varieties of wheat which are good for bread making.
But Gen Z viewers, they are also very particular about the protein front.
Correct.
They seek protein in anything and everything. So over here, what are the protein related products which everybody wants to know?
So durum wheat is really a rich protein product which is used for making good quality pasta. As compared to the other varieties of wheat which are there in the market, the durum wheat has higher protein levels up to 11.5% protein level.
But apart from that, there is also northern India and the southern India markets. They behave very differently.
Correct.
So you are into grains, but of course one area rice is also there. So how do you balance this up?
The North India market doesn't pay much premium for the atta.
And why is that? Why doesn't North India pay that much? घर में ही बना लेते हैं.
चक्की में पिस जाता है. So that is a homegrown product. And certainly if you go to South India, for the chakki atta, they are ready to pay the higher price because that is something, a unique product which is not a homegrown product.
What are the initial demand trends looking like,
In India, in last 5-10 years, we have seen a big change in the consumer demand in terms of packed food. So atta which used to be grinded at the homegrown chakkis or atta which used to be sourced in the bulk and the loose has now changed completely. Consumers are looking more packed and safe food where they're asking the trust on the product which they are consuming. So more consistent product, more quality conscious product, that is what the consumer is looking for.
Thanks a lot, Pankaj, for giving us the entire industry view, what the budget expectations are, and of course for the future itself, best of luck from NDTV Profit to your entire team. Thank you.
Thank you so much.
Then there you go. So that's something from our Budget for Bharat series. But the voices that matter are all at Davos 2026. Let's now cut across to an exclusive conversation coming in from Davos, where Indian leaders share their insights on the defining forces shaping the global economy.
We've
been talking here in Davos about tariffs, geopolitical concerns, and what it means for the world. But one area where the impact is seen in a very sharp sense is trade. And to give us perspective on what really the geopolitical and tariff talk means for trade is Anil Mohta of DP World. I would describe this company as one of the world's largest logistics company, end-to-end supply management, basically the job of getting goods from one place to another. That's what they look at. Anil, thank you so much for joining us here at the NDTV studios.
Thank you. Thank you for having me. It's a pleasant weather today relative to yesterday. And there were a lot of concerns yesterday about what is going to be said about Greenland and what's the impact in terms of the global alliance. So I guess a lot of those concerns stay rested today. Let me talk about tariff, trade, global policies. What does that mean in terms of the global trade? If you look at the overall volume of trade, the volume of trade has never come down. You see a year-on-year increase in the global trade. Tariff has some impact in terms of people trying to see which is the best place to procure their goods. But in terms of the overall value of the goods, if you start looking at what is it in terms of impact for the full value of the cost of the product, it's not that substantial. In the past, the US tariffs used to amount to more like 2.5% on an average value of a good that a person would consume, which today is more in the range of 10 to 12%. Yeah, 10 to 12% cost of goods increasing relative to the price people were paying for the tariff ocean freight during the COVID times is not that meaningful. Yeah, so it is not something that is going to deter people from consuming goods. What people have to consume, they will consume. The price will be a little high, but it's not as bad as what people were paying for freight back in 2022-23. Now, we need to think what is the objective and what is going to be achieved out of these trade policies and how the developing markets can position themselves into China plus one or China plus many strategy. The tariff has been introduced with the intention of creating trade balances with the countries, with the intention of promoting production within the home countries. Can it deliver the outcome in places like US and Europe? It's not just the labor cost that matters. It's more than the labor cost. Labor cost arbitrage goes only few miles. It's the overall productivity gains that you achieve is the most important thing that matters. And that is where countries in the developing markets needs to create the full ecosystem for trade to grow in those countries. It's not one thing that matters. Having a good port is important, but having a good free zone or an industrial zone around that is equally important. Giving a comfort around the regulatory certainty is equally very important.
No, so let me come to some of those 2 points with more details. Number one, you said that the impact on the value of trade has not really changed with tariffs. People pay the extra because they have to. But that's on an absolute term. There would be a difference in some discretionary and non-discretionary items. Pharmaceuticals, etc., yes, no matter how much you charge, people are going to get it. But have you seen certain buckets of trade or sectors of trade taking a hit or certain routes taking a hit?
Trade is like a river flowing through the mountain. It will find its way. You create obstacle, it will find alternate ways to find its ultimate consumer. And that cannot be stopped by putting in, artificial blockages like tariff or currency restrictions. We have not seen the trade reduce in terms of quantum. Year on year, we are seeing the trade volume increase only.
Other than that, right there is commentary coming in as far as Davos is concerned. But let's also put the spotlight on some of these counters that are in focus on the back of their earnings that are going to be reported. So it's actually a JSW Steel That is down about 1%. Bunch of other counters also in focus. In fact, let's take a look at Cipla. That's also set to announce its numbers. You do have US pressure that's still intact. Can the India business and companies quarter really sort of see a pickup here? Varsha, in fact, is joining in with that answer.
Well, thank you so much for that. We'll see a weak set of numbers when it comes to Cipla. Now, let's highlight the concerns. One is the US business, which is still under pressure. The base US sale is expected at around $215 million, which will be impacted by Revlimid, that is the cancer drug cliff. And the price erosion continues to be a key headwind. Overall, the US business remains a concern. When it comes to the drug, which is lenalidomide, the Cipla has regained traction in that drug, but has also reached the market share of around 24%. But it faces competitive risk from the Amneal's entry, and sustainability of market share will be closely watched. Then talking about the India business, well, the domestic business is expected to grow at 7 to 8%, but the growth is not sufficient to offset the US weakness that the company will see, and this will have a limited impact on overall consolidated performance. So overall, on a net-to-net basis, if you see a weak set of numbers for Cipla is expected, well, we'll see when the company will announce its results in today.
Alright, thank you so much, Varsha, for joining us with that update there. So there you go, that's Cipla for you as well. But tell you what, that's all that we have on the show for now. Thank you so much for tuning in.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
Shitty footage, guys. Apologies for that.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders. 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground.
Hello and welcome to NDTV Profit. My name is Varsha. Well, Tata Industries is in focus. Now, this is on the back of Q3 FY26 numbers. Just for the benefit of viewers, let me just, tell the numbers. The revenue was up almost 20%. EBITDA was up 30% at 320 crore versus 240 crore last year. Margins were at 10.8% versus 9.9% year on year. And profit was up almost 43% at rupees 235 crore. But, to speak more about the numbers and what lies ahead when it comes to next 2 to 3 years, I'm here joined by Mr. Anil Gupta, who is Chairman and Managing Director of KEI Industries. Well, Mr. Gupta, welcome to NDTV Profit and always pleasure to have you. My first question would be, if you see the revenue saw growth of 20%, this is below estimates what Street was estimating because of the lower growth in your key C&W segment. Now, what led to this lower growth and what's the outlook from here? If you could update us, as you reported, I think lowest growth amongst the key peers in C&W. So if you could, just give us the outlook on that.
Good morning. The issue, the lower revenue growth is mainly due to because we had capacity constraint in our cable factories, and due to which the revenue could not grow. Now, with the commissioning of our Sanand plant in end of December and now production being ramped up from January onwards, I think we'll come at par with our industry peers in terms of revenue growth. It was our interactions that, considering the demand and scenario, we are for short of capacity, and hence we started building up new capacity 2 years back. And this problem should be over from the fourth quarter.
Got that point. Also, sir, then with that, do you still stick to your growth guidance of around 18% for FY26 and 20% over FY27 and 28?
Of course. In this financial year, we definitely expect to grow by 20% overall revenue for the full year. And next 3 to 4 years, we will grow by 20% CAGR with the upcoming capacities being lined up in our new plant.
Understood. And Mr. Gupta, in Q2, you outperformed your peers due to higher export sales. And in Q3, if you see, the institutional export sale was seen, the share has gone up sharply. What's the growth seen and targeted here? And high margin exports will be driven by which categories? And thirdly, the export order book, especially Sanand project and key markets for that, if you could update us with all the three questions.
We have grown significantly in this financial year in exports. In the third quarter, we have grown by around 95%. And in the full year, we have already grown by around 80%. Our major markets of exports are Middle East, Australia, and now Europe. And we are continuously adding geographies in our export basket. And we expect that this growth in exports will continue in the coming years as well. The exports will be targeted from our existing factories as well as our new plant coming up at Sanand. And I think, but we will be equally focused on our domestic market and gaining back domestic market share also which from our new facility.
Yeah, shifting our focus to Cipla, because Cipla's Q3 earnings is out, and a weak set of numbers is being seen when it comes to Cipla. The net profit is at 676 crore versus estimates of 1,000 crore, though there was a one-time impact also of around 276 crore on the new labor codes, but EBITDA is down 37% at 1,255 crore versus 1,989 crore. Margins are at 17.7% versus 28%, and net profit is down 57%, and revenue is flat at 7,000 odd crores. Now, the problem over here is it missed estimates by a strong margin. Now, one of the reasons we are still waiting for the press release for the company, but one of the reasons would be a low US growth, because US growth is still under pressure. This is equal, or this is true for every pharmaceutical company, because the base US sales was actually expected at around $215 million, and this US growth was expected to be impacted by Revlimid patent cliff, and the weakness was partly offset by, or this was expected to offset by lenalidomide and arbitral growth, and there seemed to be pricing erosion also in US market, which might have impacted the overall revenue for the company. If you see, the Cipla had regained traction in one of their products, that is lanreotide, which had a market share of around 24%, but they face incremental competition risk from Amneal's entry, and sustainability of market share will be closely watched when it comes to this product. India business was expected to grow at 7 to 8% year on year, but overall, if you see, the numbers were expected to be weak, Somit, but the miss is by quite a large margin if you see.
Yeah, and it completely seems like the miss has come in from the top line, around 500 crore miss on the top line, which has trickled down towards the bottom line. Obviously, there's that one-time expense, I believe, because of the labor code, but the EBITDA margin miss is really 600 basis points. I guess analysts were expecting the EBITDA margin to be close to 23%, but it has come in at 17.7%, so that's a big miss coming in. Let's get in some view from Prashant Tapse, the Senior Vice President, Research Analyst, Mehta Equities. Prashant, did you get the time to go through the Cipla numbers? A big 500 crore miss at least that we see on the top line front. 7,074 crore is a number that has come in. Analysts were expecting this number to be close to 7,500 crore rupees.
Yes, you rightly pointed out. I think the major downside has come from the export businesses because of the US and India trade deal. There is some kind of pressure with respect to the export opportunities, and even when we say export has high margin business, so that is also contributing lower pressure on the EBITDA level. So overall, the numbers on the top line, bottom line, as well on the bottom line. So I think if you consider there is a good miss which has been seen on the back of street estimations. That is the reason why the stock has been down, and the stock has been continuously down from the last 1 week, expecting such kind of bad numbers in the market. But this picture remains same with everyone. If you see Dr. Reddy's, if you see other companies, pharma companies which are exposing more to the US. So similar kind of top line miss, similar kind of marginal hit has been seen in the industry. So I think the total everything has been discounted right now. I think the coming quarter would be a major wait and watch for us. If the deal goes well, I think the margins will recover back to its 24-25 levels.
Hi Varsha, this side, pleasure to have you. Though I agree for the US thing, because this is the US pressure is would be seen in every pharma company, considering the Revlimid phase out that all the companies will be seen. But domestic growth, I think, was also low when it comes to Cipla. But overall, on a pharma pack, if I were to talk about, apart from Cipla, which are the other companies that you are bullish on, considering the Q3 expectations that investors have built in?
I think granules would be one such stock which I am very much bullish on, considering more growth from the domestic space. I think that stock looks very good, and that is in our in-house research counter. So that stock we are very much positive and expecting a better Q3 as well as the full year numbers for FY26. So second half is going to be better EBITDA improvement expectations in granules and as well as on the full year aspect.
Right. From Cipla now, let's start shift our focus towards the small cap stocks. And today, first, let's discuss what's on the show. Firstly, as we were speaking with the management of KI Industries, the outlook was something important to track. But apart from that, we'll be talking about Infobeans Technologies. Now, the company reported a weak set of numbers. The net profit was down 17%, and that is the major reason why the count is also weak in trade. Dhampur Bioorganics, and the stock is seeing some kind of did see some kind of short covering yesterday. Now, this was on the back of strong Q3 numbers that we have seen coming in from Dhampur Bioorganics. Anthony West, something the stock has moved nearly 10% up on intraday basis. And lastly, we'll be speaking about Deccan Gold Mine. The stock is up nearly 21% in the last 1 month. And out of the last 7 sessions, the stock has been gaining for 6 out of them. If you look at the profit number for FY27, the company is eyeing a profit of close to 200 crore rupees as against a 45 crore loss of that we had seen in FY25. And if you look at the markets, the Nifty 50, it's down nearly 220 points, broken below the 25,100 level, and yet again, the benchmark index is below all its key moving averages, below its 50, 100 and 200 DMA. Among the sectoral indices, other than Nifty, Pharma and Nifty FMCG, all the sectoral indices are down more than 1.5% in trade. Nifty Real Estate Index is down nearly 3%, Nifty Energy down around 2% and the Nifty Small Cap Index, that's down close to 1.5% in trade. Nifty IT and Nifty FMCG, these are the only 2 indices that are largely flat in trade. But Varsha, when it comes to the small cap segment, what's been buzzing here?
Well, you know, we are seeing some bit of pain when it comes to small cap segment also. If you see, it's down almost 1.5%. But let's see which are the stocks which are moving as of today. You have Ashoka Buildcon. The stock is up. This is on the back of course, order win. You have Mukka Proteins. You have Jindal Poly Investment, wherein the stock is buzzing on the back of strong volumes at around 5 times. Even Everest Kanto, if you pull up that stock, the stock is buzzing on a very strong volume at almost 92x. The volumes are at 92x of its 30-day average. The stock is up almost 11%. Patel Retail, if you see, is buzzing on the back of volumes at 2x. But on the losers side, though, you have HG Infra, wherein the search was conducted at companies of EPAC Prefab, Tatva Chintan and Khaitan Chemicals, are some of the stocks which are on the losing trend when it comes to overall small cap. But moving on, Infobeans Tech is in focus, is cracking in trade. This is on the back of course, Q3 FY26 numbers. But let's get Jasmeet in to tell us more about that.
Well, Varsha, thank you for that. If you look at this particular counter, let's quickly understand what does the company do. Well, company operates in AI-led service transformation space, and company has huge clients, including Microsoft, ServiceNow, and Salesforce. If you look at the overall key numbers, we see a weak set of numbers coming for this particular counter. The margins have dropped sharply in this particular quarter, though the company has done well on YOY basis. But given an IT company, we generally track it on QOQ basis to get a better understanding of the company. On QOQ, the number looks pretty weak. If we look at the next aspect, we also say that the overall revenue sees a good growth, broad-based growth seen across geographies for revenue figure, but the margins are under pressure as the employee expense rose at 14% versus the revenue was 7%. So expenses grew faster than the overall top line. That's what impacting the margins. In terms of the other key highlights, the management did approve a bonus issue of 1:3 share. That means every 3 share you hold will get 1 additional share of the company. Apart from that, revenue is up 7%, EBIT is down 2.9%, margins are down by 185 basis point, while the net profits is down to 15%. Management remains positive about the new labor code and says they have already included that impact in this particular quarter and don't see any much impact going forward. All in all, we see a weak set of numbers coming in for the company, but the guidance of the management remains strong going ahead.
So much, Jasmeet, for all the details. Well, Prashant, what's your view when it comes to Infobeans? The numbers are weak, but the guidance remains strong, and also your view on overall IT sector.
I think despite the guidance have been very strong from the management, the numbers looks very weak, almost below the street estimation. So one, again, the stock has rallied a lot because of the AI integration, and a lot of AI focused stocks have been rallied in last two quarters. So I think the expectations of the earning growth were very high in the investors category. So that led some kind of disappointment in the investors, and then leading to such kind of provoking attempt in the post-result impact. But again, IT industry, I think we need to wait and watch for clear deal which is going to happen between India and US. I don't think, because the way how TCS, Infosys, HCL Tech, as well as Wipro has provided their numbers, there is a very mixed action seen in this stock. But overall, many stocks which are focusing high on the AI may see some kind of good interest. But this would be some kind of wait and watch approach for me.
Anthony West, that counter continues to remain in focus. Multiple order wins is something that they have announced in the past. Today, the stock is up nearly 13% despite the weakness that we are seeing in the market. What could be the reason? What could be happening in this counter? Let's get in Jasmeet to give us more details on Anthony West.
Well, Sumit, thank you for that. As rightly said, the company has been buzzing recently on the back of the huge order wins the company has been getting. If we look at the overall business update for the Q3, the management has remained positive. The overall update says the core operating revenue has grown 9.2% in this particular quarter. Further, the overall total waste managed by the company also is a of roughly 19%, while the processing activity also jumped over 26%, while the sales, that's something which will be in focus for the counter, which sees a decline on RDF level, even on the overall composite sale level. Though the management is increasing the intake and the volume of tonnage they process, but the sales is something which is dropping, seen in the Q3. If you look at the overall key wins, the company secured 2 recent orders from the BMC for waste management of roughly 1,300 odd crores, and the order book of the management stays strong at 12,500 odd crores as of September 2025. Now, in terms of the outlook, management expects a compounded growth of 25% over next 4 to 5 years going forward. Further, they also see a key investor, that's MIT, having stake in this company, which makes an overall a positive up move for this particular counter. All in all, the company does waste management services for various government projects as well. We see good operating leverage and operational performance of the company, but the stock is also performing in the same line with what we were expecting. The sales is one figure that will be in focus given it's a downtick in the Q3 compared to previous quarter on YOY basis.
Right. Prashant, Anthony West, multiple order wins is something that we have seen in the recent past. Management is quite confident of a strong growth. In fact, multiple analysts or multiple brokerage notes were also citing 25% growth coming in. But at the current valuations, do you think it would be a right buy?
I think yes, considering the visibility of the companies by having a 1,000 crore top line recent and 12,500 crores of order book, there's a good 12 year kind of decent visibility of the top line. Obviously, this kind of sector requires a lot of hard work and a lot of government-related job works and all. I think they have done really well by getting that BMC order of almost 1,300 crores. So I'm very much positive at this point of time. Yes, the valuations are still comfortable for me. Quarter-on-quarter analysis should be done because the way the EBITDA margins have been volatile from last 2-3 quarters. So that has to be sustained by the management and maintained, make sure they earn well with respect to the new orders, what they are getting. But overall, yes, positive view at this point of time.
Before moving on to our next small cap stock, let's get in Puneet first to understand what's been buzzing in the FNO side. Puneet, a very weak trading session. Nifty is down nearly 200 points in trade. Anything that's been in action here?
Well, multiple stocks that are in focus, but let's firstly quickly start with the Sensex because here, as you rightly said, a lot of pressure that we're seeing across the markets today. Stocks like Eternal, Adani Ports and Indigo have biggest losers in the Sensex. There is some respite on the consumption names like Asian Paints and HUL, but largely a lot of pressure across a bunch of stocks, which is dragging the Sensex today materially in the red as we speak. When you look at the most, the top trades, of course, ITC, Axis and HDFC come and focus on the list with the top volumes also as visible on your screen. When you move on and look at the other key aspects, that's of course the most active contracts. You've seen 82,300 have the most one with 80,800 also continuing that aspect. In terms of the puts, 80,700 is one of the key levels that we're watching out for. For the BankX, that's the other key aspect. IndusInd, Federal as well as SBI are in focus. IndusInd also has its quarterly results today, so you do have to keep this counter on your radar. In terms of the most active contracts, you've seen largely for the BankX, 67,600 is the one on the calls that you have to watch out for. On the put side, 67,700 also is seeing active interest, but it's 64,700 that are seeing the most. Finally, in terms of stocks, what do you have to watch out for in terms of long build-up? There's Bandhan Bank as well as Hindustan Zinc that are in focus. Apart from that, short covering is seen in Nalco. After a very quick run-up, Nalco is back in focus yet again, while short covering seen yet again in Ashok Leyland. You have to realize that Ashok Leyland was at 280, had the bonus issue and the corporate action, and from 140 yet again, stocks almost closing in at 200 rupees per share. In terms of long unwindings, you're seeing Premier Energies as well as Syngene, which are the ones which are seeing long unwindings. Syngene, of course, we've been covering since morning on the back of their quarterly results. And finally, short build-up on Paytm as well as PNB Housing. So these are some of the key stocks that you have to watch out for your radar as per the BSE FNO setup.
Well, thank you so much, Puneet, for all the details. Well, moving on, let's pull up the chart for Dhampur Bioorganics. If you see, the stock is, the stock is up. Now, this is on the back of course, Q3 numbers. The stock is up almost 20%. Let's highlight the Q3 FY26 numbers. One is the revenue reported a decline mainly on account of lower sugar sales, but the profitability, if you see, the profits were positively impacted due to higher margins in sugar. Net profit was positive at 17 crore after sequential losses, showing operational recovery. Now, talking about the growth drivers, there's a seasonal cyclical recovery that has been seen. Sugar industry typically sees this and the Q3 profit recovery shows ability to manage through seasonality. Talking about the diversified product mix, beyond sugar, biofuel, spirits, ethanol, renewable power and chemicals are some of the, the diversified product mix that the company is eyeing. And of course, onto the capacity expansion, the new dual feed distillery is expected to be operationalized, in next few quarters, boosting fuel, ethanol and spirit volume. So overall, the Q3 company turning profitable is one of the reasons why the investors are, eyeing on it. But let me go across to Prashant. Prashant, what about Dhampur Bio? The stock is up 20%. What will you advise to investors? Should they book profit or should they, hop in considering the growth prospects that this company has?
I think if someone has luckily bought this at recent lows of 80s or 75s, they should try to book profit at this point of time. I think the numbers were surprising to see. After long underperformance of 2-3 quarters, the company has turned to be a profitable company. I think the more on ethanol as a business outlook, that is the stock is doing really good. But again, at 95 upper circuit, it's a way to go and book profits.
Kitex Garment is the next stock that remains in focus. On an intraday basis, it was up as much as 11% on the back of strong Q3 numbers, I believe. If you look at the volumes, they are nearly 8 times its 20-day average. Let's get in Puneet with more details on the same.
Well, thank you for that. There's also, definitely the earnings part that are in focus, but the India-EU trade deal is also one of the big beneficiaries for Kitex. Now, some comments coming in Davos about the mother of all deals for India and EU could be one of the potential triggers apart from earnings as well. Barring that, EU and as well as the USA is one of the key trading partners for Kitex as well in terms of the export geography. So any kind of respite on that, which has been hampering the stock over the last 6 months, stock's down 37% in the last 6 months. But an 8% move today and continuing that momentum slipped to 5.5, but definitely a positive move for the counter. The other aspect is that, post FY25, the company's interest costs actually had increased quite a bit, and you saw that impact in the FY25 profitability, but revenue growth over FY23 to 25 has been quite strong. So you have to keep H2 FY26 a key one for this counter. It's a make or break in terms of the performance that could lead the momentum in FY27, but one counter you have to have a focus on.
Right. Prashant, any view on Kitex Garment? The stock is up nearly 6.5% in trade today.
I think it was a very sentimental impact with respect to their quarterly earnings as well as the deal which is going to happen with EU and India. So some kind of positivity is more focused on the textile as a segment. So overall, that is the reason that the stock is up, but I don't have tracked this company fundamentally.
Well, thank you, Prashant, for that. We on to our other stock, which is buzzing in trade, is Deccan Gold. Let's get Mahima in to tell us what's happening with this counter. Mahima, over to you.
Right, so, overall, of course, not at its day's high point. The stock has fizzled out since the high of today's trades. But in terms of where this particular counter is concerned, there was a recent news that did come out with regards to its arm, that is GMSC board, that did approve rights issue of 2:1 in that ratio. And this for roughly 200 odd crores. And this was at the price of 250 per share. In terms of where the growth pipeline for this particular counter is concerned, management is allocating, into different, parts of different global countries in terms of where 2026 drilling capital stands. In Finland, in Mozambique, as well as in India. For Finland, it's the gold project. For Mozambique, it's the copper and gold project. For India, it is nickel and copper project, and Mozambique, another lithium as well as cesium project is underway. In terms of where the financial stands, the company is of course yet to kickstart in terms of where the revenue stands. Just did about 5 odd crores in FY25, made a 43 crore of loss in FY25. So everybody who's kind of invested in this counter wants to know as to how visibility looks like. When they spoke to NDTV Profit recently, they said that they expect PAT of over 200 crores in the next year when these mining start to realize. And FY29 bottom line, they expect to reach by 400 to 450 crores. But we'll have to wait and watch out for us to whether this actually materializes or not.
Well, thank you so much, Mahima, for all the details. Prashant, what about this counter? A lot of investors are actually, interested in this counter. In the last 1 month, the stock has given a good returns to investors. And, I guess investors are waiting for that one positive quarter, considering the 200 crores of guidance for FY27. What's your view on that?
Very high risk optimism in the counter right now, all because of the gold, which is being very shining from last 1 year at least. So if they are getting some kind of production trials going right in the Kazakhstan gold mining, and that will also trigger a lot for their profitability, which the management has guided. But again, a very high risk, high return category investors can think of taking any position in this. And a lot of big investors are also showing interest because of their visibility with respect to production of gold in all their mines, which they have declared right now. But yes, it's a high risk call, but overall gold being the very shining segment. So the investors are focusing more on this.
Well, thank you, Prashant. Thank you for joining us and giving us your perspectives on the stocks that we discussed today on the Small Cap Show. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोचा, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
Welcome. You're watching the afternoon edition of Ask Profit. Viewers, you're tuning in. This show is directed towards answering all your stock-related queries. But before we move on to the queries, let's take a quick look as to how the markets are doing. Clearly under pressure, we are well below the 25,100 levels now for the Nifty 50, down almost 1% there. The Bank Nifty also facing equal pressure, down by about 1%. Right now, let's try to pull up the Nifty 50 heat map and see as to what are the counters that are actually kind of keeping the Nifty in check. And you know, there's red across that sea, but you still have some counters like Dr. Reddy's, which is holding up, given up, of course, you know, some profits for the day. But Dr. Reddy's, Asian Paints, HUL are some of the counters which are up and about in trade just by 1%. But something like an Eternal, Cipla, Interglobe Aviation, as well as Geofinance, all down in that range of 3 to 5%. You have Power Grid, Bajaj Finserv, Axis Bank, as well as BEL, Maruti Suzuki, Trent, Kotak Mahindra, all down by about 1% each. So that's with regards to where the markets stand. The sentiment not moving positive is what we are seeing. The VIX also, if we can try to pull that up. The India VIX also is you know, kind of inching up. Let's try to pull that up because it's up by almost 7% right now. You know, in the midday, it was up by about 3.5 odd percent. 7% is quite volatile. So that's what the mood of the market is looking like right now. Let's quickly pull up the sectoral heat map as well to see as to what sectors are looking like right now. All in the red, and you know, there's no surprise there. Nifty Realty, the biggest loser, down by about 3 odd percent, followed by something like a Nifty Media, Nifty Energy, Nifty Defense, Nifty PSU Bank, as well as something like a Nifty Bank, Oil and Gas Consumption, all down in that range of 1% to 2% each. In terms of where the advanced decline ratio is concerned, because I'm sure that this, you know, gap has also widened, and widened in how throughout the day. Because it's down by about you have like 500 odd advances versus that of almost 2,000 odd declines. So that 4:1 ratio in terms of where declines are more than advances is what we are seeing. With regards to where the broader markets are concerned, Puneet, I think the pressure has continued and still continues.
Well, continues to be so, and that's very well visible in the declines as well. But you know, the flash on the bottom of the screen, you know, rupees hit a new all-time record low as well at 91.89 as we speak right now. And you know, stop losses are triggered on the short bet, so you have to continue to monitor this aspect. But definitely, it's been a while since we, you know, addressed the rupee, because we saw these interventions coming in from the RBI. Not today, at least. Hit a record low of 91.90, and then currently trading at 91.91 will be the other key aspect that we continue to monitor very, very closely. Before we move on to the broader markets and that action, Shriram Finance is the other one I want to quickly highlight, because the earnings came in and it's a very important set of earnings, and likely it, you know, let's quickly pull up the Nifty IT as well. Let's see what it's doing, because it's one of the biggest beneficiaries of depreciating rupee as well. But that consistent pressure that we've seen on the rupee, it does highlight that impact of, you know, continued volatility as well. So quickly pull up the Nifty IT to see if there's any intraday moves that we are seeing on this particular counter as something to watch, because you do see all of those stocks come back into fray. You get the oil and gas companies also come back into fray once there's very stark pressure on the rupee. So that continues to be that impact, as we say. But overall, that impact is definitely one key impact that we continue to monitor, Mahima.
All right, okay. And as Puneet was mentioning, rupee yesterday we saw the biggest fall, single day session fall in the rupee. Today also hitting another new lows is what we're seeing now. 91.9 is what we're seeing in terms of where the rupee dollar rate is concerned, down almost 0.3%. So that's with regards to where the rupee dollar rate goes. But we're also joined by Ruchit Jain, Vice President Equity Technical Research at Motilal Oswal, and Lancelot Dikuna, CIO at ValueX Wealth Connect, joining us now. Ruchit, before I take on the quiz, I think it's important to have your take in terms of where the markets stand. We're well above the 25,100 levels also now. What is the kind of support that you're now seeing?
There's no doubt about the trend for the market, which changed in the second week of Jan. Earlier, since the month of October till this first week of Jan, whenever there were corrections in the Nifty, the 50-day EMA was acting as a support. Now, that support got breached on 8th of January, and that too with a significant negative market breadth. And after that, if you look at from 8th of Jan till now, the market breadth has consistently been on the negative side. So still no signs of reversal. Minor pullbacks are getting sold into. I think 24,800, 24,750 is the next support that we are watching out for. And now whatever lower top, low bottom structure, if until that negates, along with the positive market breadth, then only I think the structure overall would change. Otherwise, on any kind of pullback moves, we are likely to see continuation of the selling pressure.
All right, okay, so that's the view coming in on with regards to where the Nifty 50 is concerned. Quickly, in terms of where Shriram Finance stands, your net profit has come down by around 29%. Your net interest income at that 6,500 crore mark versus an estimate of 6,535 crores, so largely in line with where the estimates were. In terms of the overall, NII stands, the uptick has come in at that 18% mark. Let's quickly pull up the chart. Not doing much in trade right now, not reacting much. There's a slight spike that, of course, we've seen post the earnings were announced, but trading around 0.8% higher. But with that, let's dig into the queries. The first question that we have is from Mali, who is writing us from Hyderabad, asking about Newgen Software Technologies, whether this is the right time to make an entry into this counter or not. Ruchit, your view on the charts?
I would recommend to avoid fresh entry as of now. Overall, the stock has been an underperformer since last few months. It's not that the stock is correcting along with the market since last few days. But in last few months, in the last entire 1 year, we have not seen any kind of uptrend coming in the stock. So the stock on the weekly as well as the monthly stock charts have also breached its important support. So until we see any change in trend, better not to do any bottom fishing.
But the other one that's coming in on Suzlon now, the next query. And Shinoj from Abu Dhabi actually is writing this question. He's bought it at 59.5. So, pardon me, currently sitting on a loss of almost 52,000 rupees. Lancelot, should he continue to hold, or what would you recommend him to do with Suzlon?
I think, while business seems to be slowly stabilizing for Suzlon, given that, the outlook is a little difficult for the wind market, and the trends that we've seen is that it's become more competitive in this market, and people have become a little bit more wary in terms of expanding their wind energy footprint. Growth could look to slow down over the next 12 to 24 months, and it is valued at around 20-22 times earnings. So I think one should probably wait out. Or if one has to book losses, it may be worthwhile booking loss and then wait for a lower level. Maybe that you can add at lower level again.
Focus to rupee back again. It has hit a record low of 91.95. To give us more clarity on this, we are joined by Anindya Banerjee, SVP Currency and Commodities Research with Kotak Securities. Anindya, 91.95 record low level, near to 92 is the number that we are now seeing. What is causing this fall?
Yeah, a very good afternoon. Thank you for having me. Actually, it has been always the equity SPR outflows which has been doing this, and today the sudden fall in the equity market It, I think, also causing this downward pressure on the rupee. And once it broke the recent all-time high, a lot of stocks got triggered of the importers, and we saw this flurry of buying. And seeing this rupee weakness, exporters are not really hedging. So from that part too, the supply is coming up.
Right. Few dealers were saying that their stop losses had hit because of the sharp fall that we are seeing in the equity markets. Do you see that also one of the reasons why we are seeing this kind of reaction when it comes to the Indian currency?
Yes, it is, because Indian rupee is already one of the weakest currencies in Asia. So whenever there is a sharp fall in the equity market, it is seen as a kind of signal where the speculators come and short the rupee, especially in the options. So that also adds to the pressure. So only when the RBI will step in aggressively, we will see a turnaround.
And do you expect Reserve Bank of India to step in? Because a couple of days back, I believe they had stepped in. And again, after that, we are seeing this kind of downfall. Multiple analysts are saying that the worst is over, but it doesn't seem like.
Right. Actually, RBI, yes, the RBI generally tends to step in whenever there is a 80 paisa to a 1 rupee move, like almost we have seen today. So we would see the RBI step in above the 92 levels. But what is happening is RBI is not selling very aggressively. They are not continuing the selling. They are coming to the market, selling dollars, and then going away and letting the market dictate the price. Because I think as long as the trade war is on, they will continue to use the currency as a tool to fight the trade war.
And just one last question, Anindya. Where can we expect this to stop? Because I remember when it had hit 90, there were multiple foreign global broking firms were saying that the worst is over. At 91 again, they started saying that the worst is over. And now we are nearing 92.
It's very hard to put a number because see, it's already it's quite undervalued based on many models that we use to look at a currency. Currently, it's completely flow-driven and sentiment-driven. So what is needed is a kind of a positive trigger. We'll see whether the EU-India FTA can be that, but I think the India-US FTA could become that trigger. So till then, we have to wait.
Well, thank you, Anindya. Thank you for joining us and giving us your perspectives on the Indian rupee. Back to you, Mahima.
Right. Thank you so much, Somit, for bringing those details with regards to where rupee, of course, we're seeing hit its low point, and we've seen this in the past couple of days. Every day is a new record low for the rupee. We'll have to wait and watch out for as to where this stops at the end of the day. But moving on, the next question that we have is from Deepak, who's writing us from Hyderabad. By the way, viewers who are tuning in, you can also give us a call and ask your queries straight away on the call on the number that will be flashing on your screen up there in a while. But the next question, Deepak from Hyderabad is holding 250 odd shares of Elecon Engineering at the rate of 400 per share. He's sitting on a loss of around 6,000 odd rupees. How long can he hold is something that he wants to know. Ruchit, on the charts, what would you suggest?
The short-term trend seems to be negative for the stock. We have a low top, low bottom structure which is going on in the stock. And we have not seen any kind of pullback moves of late, which has been supported by high volumes. So I think until we see any such signs, better to avoid. And in case of any existing positions, if you get any minor pullback moves, look to exit on pullbacks.
Got the view, Ruchit. But the next one, and it's been a kind of like a retail favorite stock, which is getting a lot of queries on. This is on Kaynes Technologies. Prashant is asking this question. He's bought it at 3,938 and asking if he should wait right now or average as well. Lancelot, I don't think we've spoken to you on this counter because EMS has been in focus over the last 4 to 6 weeks. Your view of this correction across stocks as well as on Kaynes Technology, should you average in right now?
One should average right now because, even if you look at the current price earning multiple, it's trading almost at 61 times current earnings. And if you look at even the sales growth, while it is expected that we grow at around 25-30% every year, the earnings multiple still remains highly elevated. So one needs to wait for a serious correction, and then one can look at adding and averaging out on the downside. So I think having gotten at a very high level, one has to consider whether it may make sense to book some losses and exit, at that level, and then look at, if it does correct, add at lower levels.
Okay, so that's the view coming in with regards to where Kane's Tech stands. The next question that we have is from Hariprasad Reddy, who's writing us from Hyderabad. He's got 450 odd shares of Tata Chemicals, bought 2 years back at the levels of 980. Wants to know as to what should he do with this counter. Lansor, I'll stick with you for this one. What's the view like?
So I think Tata Chemicals has been, in consolidating. And as far as the business is concerned, the business remains strong with soda ash as part of its business that is even expanding to Africa and that the product range is being expanded. So last year the EPS was at 9 times, and while it might be a little expensive, from an investment perspective, it's trading at a little higher multiple. But we are seeing some amount of growth coming in with the new plants that will come on stream. And so one can look at, maybe adding on Tata Chemicals even at this price.
Got that view, Lancelot. But the next question coming in on Tata Motors CV and another counter that we've been getting a lot of queries on. This one's from Abdul Rashad. He's from Kerala and asking if it's a good time to enter this counter. Lancelot, let me stay with you because very recent listing, so I don't want to trouble Ruchir with it. But in terms of that counter, do you think that given what we've seen actually with Ashok Leyland, what a stock move, right? Post that corporate action, it's back very close to that 200 level. Would you recommend getting into Tata Motors CV right now?
I think if you look at maybe the CV cycle and the passenger vehicle cycle, I think the CV cycle is seeing considerable amount of traction and growth. And so it would probably be a better idea to invest in the CV space as opposed to directly in the passenger vehicle space. So given that this demerger has just happened, and we have still to get individual numbers of each division, and how the balance sheets are, what kind of return on earnings that we can expect going forward. It's a rather difficult task to try and make a valuation impact at this point in time. But given that we are seeing a growth in the CV segment, I think one can look at accumulating the stock at this point in time.
All right, so that's the view coming in on Tata Motors CV. The next question that we have is from Reenu, who's writing us from Bengaluru, asking about Uno Minda. She's been accumulating this counter since September 2025 and wants to know, currently, by the way, she's holding 70 odd shares at the levels of 1186. For the next 3 months, should she continue to accumulate is her question. Ruchit, would you recommend that?
Hold your existing positions, but if you're looking to go fresh longs on this or accumulate more, keep a buy and dip approach. The major long-term trend for the stock is still positive, and the recent correction just seems to be a corrective phase within an uptrend. The support for the stock would come around 1060, 1070, where the 20 EMA on the monthly charts is placed. Every time, if you look at this entire uptrend since October 2020, that is in last 5 years, every time the stock corrects towards its monthly 20 EMA, then after that the stock resumes its uptrend. So that support is around 1060, 1070. So if it comes down towards that level, then the risk reward ratio would be favorable to add more over there.
Okay, so that's the view coming in on Uno Minda. We've got our next caller. Ajay is calling us from Noida. Ajay, hi, a very good afternoon to you. I believe you've question on Paytm.
Hi, good afternoon. This is Ajay from Noida. I'm a long-term investor. I wanted to know what the effect of a recent news on a PIDF is going to affect Paytm. I'm invested in it for a 12 to 18 months.
Okay. All right, Ajay. Got your question. I'll take this up with Lancelot. Lancelot, what he's referring to is with regards to the news coming in as to RBI ending the Payment Infrastructure Development Fund, and this was used to kind of incentivize deployment of digital payment infrastructure, right? The scheme ended in December 2025 and has not been extended is the news that's come in. But, he's not wrong in asking this question because the stock is tanked and how? Almost trading at slow point right now, down 8% as we speak. How do you assess this entire news flow with regards to Paytm?
So, I would look at it in a slightly different manner. This fund actually was to incentivize, payments, payment gateways and payment infrastructure at a time when payments were in a very new stage. And now we are seeing a much more mature digital payment market. There are many players who have gotten, and we are seeing people using the infrastructure. If you look at the volume of digital payments that is happening, there's a significant increase over the years and over the last few months. However, when you come specifically to Paytm, I think the fact that they were depending on the payouts from this fund, and now that payouts is not going to be available to them, I think that will definitely have an impact as far as its bottom line and profitability is concerned. In any case, if you look at valuations were still on the higher side, and I think since the risk reward ratio is not favorable, one should stay away from making investment in Paytm at this point in time and wait for valuations to become attractive or moderation.
All right. Okay, so that's the view coming in with regards to where Paytm stands, but it's time for a rapid fire round. Lancelot as well as Ruchit. So we try to throw as many questions as possible to you. You try to keep your answers as short as possible to just buy, sell and hold. The first question that we have is from Nivendu Sharma, who's asking about Hindustan Zinc. He's got 150 shares, wants to know if he can continue to hold the counter or not. Ruchit, your view on the charts?
Trend is positive, so continue to hold.
The next one's, Eternal bought at 260. Lancelot, what would you recommend Lalita to do?
So if you are a longer term investor, I think one should stay invested in Eternal, even though there may be some short term negatives. Because over the longer period of time, I think one would.
Okay, the next one is on Railtail. Jaya from Bengaluru wants to know the short-term target for this one. Rujit, on the charts?
Short-term, the trend is weak. 310 can be expected in the near term.
L&T is the next one. Lancelot, for the next 6 months, because our viewers bought it at 4,071. Would you recommend continuing to hold?
Yes, I would recommend continue to hold.
Okay, Jubilant Foodworks bought at the levels of 531. Can he book losses or wait? Lancelot, your view?
I would suggest better to book losses.
The next one's for you, Lancelot. Our viewer, actually, Don Francis from Kerala, is asking two stocks, Talbros or Voltam. Which is the better choice to enter in the long term?
It's better to enter Talbros in the longer term for a longer term.
Okay, Castor India is the next one. The person wants to know if he can average out at the current levels. He's sitting on a loss of around 3,500 rupees. Ruchit, your view?
Provided current levels around 165, you can do averaging.
HDB Financial is the other one. We had some recent news flow also for their chairman resigning today. But Lancelot, any view? Is there a preferred pick in that space?
Yes, I mean longer term, I think the business model is very robust and one should accumulate this stock at even the current levels.
Okay, Kirti is asking about Kalyan Jewelers. She's bought 100 shares at the levels of 510. Can she continue to hold from a long-term perspective? Lancelot, your view?
She should continue to hold.
PG Electroplast is the other one. Lancelot, coming for you yet again. Ashok Reddy is asking if it's the right time to enter for the next 1 year.
Yes, for a 1 year perspective, one can look at adding to the stock.
Okay. Natco Pharma is the next one. Madesh from Tamil Nadu wants to know if this is the right price to make an entry. Ruchit, your view?
No, the trend is still weak, so avoid bottom fishing.
The next question that's coming in is from Rajesh from Bangalore, and again another housing finance company, Bajaj Housing, is what he's asking on. Would you recommend if it's the right time to purchase, Lancelot?
Yes, I think this is a long-term business, and if you buy even at this levels, one will be.
Maruti Suzuki is the next one. Jaya Krishnan wants to know if this is the right time to make an entry for the next 6 months. Ruchit, your view?
Look to buy and dip around 14,700 where 200 EMA is placed.
Tanla Platform is the other one. Let's pull up that count. It was up in trade at the start of the trading session. Ramesh holds 50 shares, but at 985. Lancelot, should he continue to hold, average down? What would you recommend?
No, I think it would be better to exit rather than try to average down at this point in time.
All right. Okay. So that's the view coming in on Tanla Platform, up 8.5% as we speak. But with that, Ruchit and Lancelot, thank you so much for helping us answer all of those queries. We're completely out of time on this edition of Ask Profit. But do stay tuned. India Market Close up next.
This is Davos. a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है.
This is going to be shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा.
Welcome to India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Samit Sarkar. Clearly, a day where you're seeing that pressure which is building in terms of markets, because of which that impact coming in on the Indian rupee as well. We'll come to that, but we had at 25,068 cuts of almost 0.9% coming in there. Let's just pull up the intraday chart of Nifty 50 and then we'll look at Bank Nifty and the VIX as well. Is going to be interesting to track over here. But clearly the pressure is building up across. Can we just have the intraday chart of Nifty 50 as well? There you go. We are at the day's lowest levels if you talk about it. I mean, 25,041 has been the day's low. I mean, somewhere hovering around those range. That range. And if you pull up Bank Nifty intraday as well, you'll see that similar chart over here at the day's lows again. 58,445 has been intraday low in terms of Bank Nifty. If you look at the heat map, let's pull up that one and then we look at the advanced decline ratio as well. It seems to be pretty even Stevens in terms of reds and greens, actually more of reds versus greens. Dr. Reddy's is holding pretty strong in trade today for a second consecutive session. HUL, Asian Paints will be reporting numbers next week. So there is some momentum there as well, but no major trend that's emerging from the IT pack. It's Tech Mahindra and TCS along with the WIP Infosys, which is maintaining on the borderline. Adani group of companies trading under pressure. Eternal today is down nearly 6%. Third consecutive session where you're seeing the pressure build up. Indigo is an earnings impact. Cipla, again reacting to what the numbers are looking like in terms of today's session. And if you talk about heavyweights as well, HDFC Bank, yes, that pressure coming in from there. ITC, yes, pressure coming in from there as well. Reliance Industries is another one that we should look at as well. I'm genuinely not able to track where RIL is right now, but there you go. Yeah, almost 1% down in terms of where RIL is concerned. Let's look at the advanced decline ratio right now as we speak, because the VIX is also now pretty elevated. You see the way the mouth is widening, clearly almost 2,000 declines versus around 500 advances, breadth absolutely favoring the bears in trade today. Broader markets and VIX is what we will look at now. Broader markets also, first is the VIX, a 6% up move, but the level is crucial in terms of the VIX. We're at the day's highs of levels almost of 14.31 is what we've hit. That's where we are hovering at. Deeper cuts coming in broader markets. Mid cap 150, 1.5% downtick coming in there. And if you talk about the small cap 250 as well, similar kind of cuts trading at the day's lowest levels. Let's look at NSE 500 components, and that will give you a breadth of the advanced declines. Adani Green, Adani Energy, Adani Enterprise, major pressure there. Paytm 7.5%, 200 crores is the kind of impact on the potential of what the RBI is not allowing. Poonawalla FinCorp is trading under pressure as well, and that's probably because of their other Poonawallah's commentary when it comes to RCB stake. Syngene International, Eternal, a few of the other ones. What's standing out? Tanla Platforms again earnings, Home First again earnings, Bandhan Bank on earnings is what you're seeing. But again, Hinzink, the upward journey continues. So it's a pretty interesting day of trade. The breadth absolutely in favor of the bears. And the question from here on is, where do we go? Because I think Tuesday is going to be expiry. So probably everything that needs to happen on a Monday is happening today in the market, Somit, because it is going to be a long weekend. And two, probably no negative news in the budget is what the street is watching out for. And that is the only positive trigger that I see right now, apart from the India-US trade deal. Because if you pull up the Indian rupee as well, I mean, record lows once again. Whether the RBI will intervene or not, what dealers are indicating right now is that the importers are buying dollars. 91.90 is what you're tracking over there as well, Somit.
So one more reason why the rupee has also depreciated is because of the sharp fall in the Indian currency, at least Indian markets, Indian equity market. At least that is what the dealer check is indicating. And yes, and yet again a painful day for the Nifty 50, below 25,100, below all its key daily moving averages, 50, 100, 200, and from the highest point we have again slipped more than around 1,200 points in trade. But let's also welcome in our guest on the show today. Let's also welcome in our guest on the show today, Jay Bala, founder and chief market technician, and also Lancelot Dicuna, CIO of Value X Wealth. Jay Bala, coming to you first. The downward trend in the Nifty 50 continues. Where are you seeing some support coming in? Because we are now even below the 200 DMA.
Yeah, I had been expecting this market to drop to somewhere close to 24,400, the August low, and maybe slightly below that. But in my opinion, the medium-term trend that began from the April low of 2025 is undergoing a correction. And once this correction ends somewhere below 24,400 or thereabouts, we are likely to see the resumption of the bull trend that we saw between April and July. And I'm still holding the view that the markets are heading to 29,000 in the medium term.
Okay, so Jay, we're looking at Nifty 50 again from a perspective where there is pressure that's building up. And any trigger that you're seeing that could be a good level to watch out for, that, okay, if those are the levels ahead of the budget, there could be some bit of positive momentum on Nifty and Bank Nifty?
On the higher side, you mean?
Yes, on the higher side.
Okay, see, I think the structure needs the markets to drop to the August lows. Only then that's complete. But, from a levels point of view, Reliance holds the key. And Reliance, if it can hold 1350, the September low of Reliance, and that's going to be the crucial point. We need to see Nifty trade about 25,400 for to see the possibility of resumption of the uptrend. But even that'll still be doubtful. I would rather wait for the markets to. It's looking more and more probable that the markets are heading closer to the August lows of 24,400.
Okay, so what would your top picks be at this hour then?
Cash, hold cash, and selectively short the market, and look at financials, which have been doing, which have done a tremendous job over the last several months. I would say we can even attempt a short at Bank of Baroda with a stop loss of 314. But keep all this, and objective is 276, 270 thereabouts, and I would say keep these short term, because in the medium term I'm bullish. The markets are undergoing a correction. It's a welcome correction, and I don't see any major hiccups coming through for the market in the medium term.
Technically, just wanted to get your view on a stock like Eternal. Lancelot, I'll come to you also when it comes to earnings and overall fundamental outlook. But Jay, Eternal on the charts, do you see more downside?
Of course, it's on the medium term charts. It's undergone important 5-step move, which marks the end of the short term top. So I would look at the stock dropping closer to the mid 2025 low of about 190 odds, and once it's there, then we can reevaluate. But it does look like, with the limited history that the stock has, that the long term could be good, but it has to undergo turbulence in the short to medium term.
Okay, turbulence in the short to medium term. Lancelot, how are you looking at Eternal? Third consecutive session of decline. And the numbers were good. I think it's mainly an overhang that we are seeing when it comes to change of management. Do you think that the street is unhappy with the change of guard that's happening?
So I don't know whether it's, somebody being unhappy with the change of guard, but I think from a valuation perspective, yes, it was, trading at a very high valuation. And now that, some trigger is there, people are looking at an opportunity to rebalance on the valuation and take profits off the table. And from a longer term investor or a fundamental investor, there's still time for which you can justify it from a valuation perspective. So I think, we would see some more correction. And once it corrects to levels where the growth catches up with the price, then one would look at it saying, okay, yes, this is a good probable price to enter. I think it's too early to say that for now.
Right, Paytm is one counter that remains in focus. Now, the stock was down as much as 10% in trade, and this was after the street realized. In fact, the word I'm using realized is because this thing actually happened on 31st of December, but it was the fact that no one knew about it, and that was the reason why the stock never declined. And today the people came to know that PIDF incentive scheme, that is I believe Payment Infra Development Fund scheme. Now, that scheme expired on December 2025. Now, why was this scheme given? The government provided, or what was this scheme actually? Here the government provided around 40 to 90% of the cost of the device as an incentive to promote digital payments in Tier 3 and Tier 4 cities. Now, typically 75% of the payment was upfront, and the remaining happened depending on the activity that the merchant used to get on that device. So this scheme has been expired, and that means that now Paytm won't be getting any funds from the government for this. Now, as per analysts, they were this could have an impact of around 200 crore rupees on their operating profit. But there are few analysts that also believe that the company could simply increase the prices of soundbox rental by as much as 10 rupees, which is just 10% of the current charges, and completely offset this revenue loss that is expected to happen. So it will clearly depend on how Paytm now reacts to this, given the fact that this scheme has already expired on December 31st. But also Paytm came out with this announcement where they are accepting the fact that this scheme has ended, and in the first half of this financial year it contributed close to around 128 crore rupees to their financials. So that is important that we need to watch out for when it comes to Paytm.
So that's going to be interesting. We'll take a question next, but let's also cut across to an exclusive conversation coming in from Davos, where my the managing editor of the channel, that is Tamanna Inamdar, who's in conversation with IOCL chairman A.S. Sani, discussing the oil supply issues amid the geopolitical concerns. Let's listen into that conversation.
Thank you so much for that. We've had incredible conversations right here through the World Economic Forum. And we have the IOC chairman, Mr. Sani, with us this morning at our studios. Mr. Sani, thank you so much for your time to NDTV Profit. Have you had a good WEF this year?
Yeah, good morning and thank you for hosting me here. Yeah, this was a wonderful year and a lot of conversations around energy, lot of conversations around newer forms of energy, lot of conversations around the continued legacy of conventional fossil energy also. So it's a well-rounded energy conversations that have been there, and look forward to cementing some of the good partnerships here that we have started the conversations.
Was the highlight for you, among other things, the address that US President Trump gave, where he kept speaking about conventional forms of energy? I mean, he kept referring to a green scam, so to speak. As you look at the global energy platform or picture right now, how do you look at it, Mr. Sahni? Do you think oil is making a comeback, or there is going to be a waning of conventional forms of fossil fuel?
Look, I perceive this problem in a very different manner, because I see it from the lens of the country of India. For India, this non-fossil forms of energy, or the newer forms of energy, which happen to be low carbon energies also, low carbon polluting energy forms also, they are a godsend opportunity for a country like India. Because in oil terms, you know that around more than 85%, 87% of my crude requirements we are importing, and we are spending around $130 billion per year as a country for importing those crude oils. And if the kind of energy growth India is needing, and the kind of growth that India is perceiving in the next few years, if we continue on the same trajectory that we hope that we will continue, then I will have to spend hundreds of billions of dollars every year going on importing this crude oil and moving on the same path. For me, these alternate forms of energy are a godsend opportunity for at least adding all the new energy requirements to coming from these renewable forms of energy, the energy which is coming in a cleaner form. Maybe it is in forms of EV, it is in forms of bio, it is in forms of nuclear, it is in forms of all other kinds of energy other than fossil. They are good for the country like India. So whatever the world thinks, we should catch on to this bandwagon, and we should move ahead on this alternate sources of energy.
No, India is clearly charting its own path through the entire situation in the last 1 year. And as a country that imports crude, the good thing for us is that crude prices have been very soft. Despite some, flare-ups when there's something happening in Venezuela, Russia, Iran, कभी ना कभी कुछ ना कुछ हो ही जाता है. But we have been okay. How have you been navigating this as someone who runs a large oil corporation?
We have been constantly on the endeavor to increase the sources of crude that we are procuring from outside. And crude prices are only one aspect of the whole matrix, I'll say. The cracks have been varying. Although we can't complain on the types of cracks that are going right now, with diesel at around $18 to $20 and gasoline at around $10 to $12. We can't complain, but we have seen better days also, and we have seen worse days also. So that is also a part of the matrix. The situation is good. Situation is satisfactory because of the crude prices that are being there, and the reasons for crude prices being there where they are is the supplies demand factor. Today, the supplies are available all across the world. The newer forms of the newer areas, the newer geographies that are coming up, that is Brazil, that is Colombia, that is Guyana. So these are all opening up for newer geographies. Today, I can tell you that India was procuring, last 5 years back or so, we were procuring crude from around 27 geographies. Now we are procuring from 41 geographies. So we have expanded our span of procuring crude, and that is what gives me a sense of stability in my energy security.
It's part of a strategy to de-risk, right? You don't want to be dependent on a Russia or an Iran. Percentage of imports from Russia for you have come down significantly?
They are based on commercials, basically. They are on a very moderate phase, I'll say that.
But if I were to compare from a year ago?
Moderate, very moderate.
No, so say halved, 7,
because
3/4.
I don't want to talk about all the companies, because it is you are talking of India. I don't want to comment on that. But they have been on a downward. They have been on a downward
spiral. So there's no stress there. I would say, Mr. Sahni, actually we should, and viewers watching right now should commend the strategy that oil corporations and the Indian PSU space over here has had to navigate all of this. In terms of what it has meant for profitability of these companies, and I know you're in a silent period, so I will not ask you about your profitability, but marketing margins on a year-to-date, on an annualized basis, have been pretty solid because of dropping crude prices despite the rupee. Is it in the 8 rupee mark? or thereabouts?
No, you are referring to, probably you are referring to GRM when you talk of marketing margins. They are, in our parlance, refinery margins and marketing margins are different ball games. But I understand what you are referring to. And I will not comment on the figure, as you are rightly said, that we are going to declare our quarterly results in few days. So I can't comment on that, that is for sure. But what I can show, that I can be very sure in telling you that the kind of transformative journey that my company is taking in last 9 months or 1 year, wherein I am trying to improve my costs on transportation, on supply chain, whole ecosystem supply chain, the cost on processing of crude in my refineries, increasing the efficiencies of my refineries, reducing the energy consumption in the refineries, reducing the CO2 emissions that we are doing for the environment. All this is going to give me a substantial benefit in terms of my profitability, because everything, all of these, some of the actions have been completed. They will be giving results in next 6 months or to 12 months, and some of them will be a long-term projects which we will take up for improving the efficiencies. They will take 2 to 3 years also. But in nutshell, I am saying this company is on a path wherein it is going to improve its operational margins, and its operational efficiencies will improve.
Yeah, and we have been seeing that also quarter on quarter. And this is also part of Project Sprint, isn't it?
Yes, Project Sprint is basically working on customer focus. It is working on cost consciousness. It is working on strengthening my core business. These are the 3 C's. And then the company has to be transformation ready. The company has to nurture the talent, and the company has to be technology ready. So these are the 3 T's. The 3 C's and the 3 T's, they comprise the sprint. And these are the 6 priorities on which we are working. We are working very assiduously on developing the talent for us, because the talent line, the pipeline of talent, what we are targeting today is not only for Indian Oil but for the industry also, because our people have been great leaders going forward into other companies also. So we are developing them for not only for us but for the industry also.
Absolutely. Just as an outlook for the rest of the year, and I think asking anyone for an outlook on what 2026 calendar year is going to look like geopolitically is tough. But having said that, do we possibly see a situation of a large unlocking of supply from Venezuela? That has been the big question mark. Huge reserves, very little contribution, I think 1.5% to world supplies of crude. Do you think that we see a large unlocking? What does it mean for India? What does it mean for a company like yours? Do we have the capability of refining the kind of crude that Venezuela could produce?
If you are talking of 1 year horizon, I don't see much of the effect. But long term, maybe what happens 2 years down the line or 3 years down the line, that is in the realm of future. That we should not predict on that or speculate on that. But 1 year, I don't think it is going to be major, because the quantities are less. Lot of investments will be needed for bringing up that crude onto the market. So, and whatever crude is being produced, in my sense, most of it will be getting consumed in Gulf Coast of US only, and maybe some other areas. But at the same time, I can say that several of the Indian refineries are capable of processing those kind of crude. So technically, we don't have a problem. I can speak for the private sector refineries also, and for the public sector refineries also.
Is there an opportunity for our industry at all, or is it not going to make an impact?
It may happen. It may happen. Sometimes some opportunities can come, and we should be ready for that.
Okay. Thank you so much, Mr. Sani, for speaking with us. It's been delightful chatting with you in the cold air of Davos.
Thank you so much. Thank you.
Right. Before going to Lancelot on IOCL, Jaybala, any view on Paytm on charts?
See, Paytm has broken down from a head and shoulders stock. So, it's likely to go around the 1,000 mark at least. So, if you're long, be very cautious. This is not a good setup. And there is a pronounced negative divergence at the top. So, this is likely to undergo a slightly deeper correction in the short term. So be very cautious, don't be long.
Okay, so that's with regards to where Paytm goes. But moving on, we've already spoken about Indigo so far, because clearly in terms of the quarter, it's a strong adjusted, overall strong adjusted for one-offs is what we've indicated. The stock is at the day's lowest levels. Revenues are up around 6%, and the EBITDA, adjusting for the forex loss, is down around 5.5%. Margins at around 29.8% versus a 30%. I would love to get Saumit's view on this. In the meantime, he's just looking at Laurus Laboratories as well right now. So I'm just taking the opportunity to look at this one. Profits, again, a downtake of around 78% to 540 crores, and we've seen a loss of around 2,449 odd crores in the previous one. Overall, in fact, it's the slowest third quarter revenue growth that we've seen since FY21, and this was the year when COVID had hit. However, the revenue is better than what the estimates are, which has led to the overall beat. In fact, let's also listen into what the management had to say, because they've said that the exceptional loss owing to the new labour code was around 968 crores and due to flight disruptions stands at around 577 crores. The PAT would have been 3,130 crores, excluding the one-off impact and the forex loss so far. Let's listen into the management.
We are currently estimating mid-single digit percentage increase in our unit cost, excluding fuel and forex, for the full year 2026 as compared to the full year 2025. This revised guidance is based on the revised capacity estimations. We are estimating an early to mid-single digit moderation in our unit passenger revenue as compared to a high base of the same quarter last year, which had a very strong tailwind in the form of religious congregation for the Mahakumbh.
Well, if you look at the Laurus Labs number, 1,778 is the revenue number coming in, as against the street estimates of 1,637. EBITDA has come in at close to 481 rupees as compared to 439, that was the analyst estimates. Margin coming in at 27% as against 26.8% estimates, while the net profit number, that has come in at 250 crore. Analyst estimates were close to 190 crore. Strong beat looking on all the fronts for Laurus Labs, and that is one of the reasons why the stock has perked up around 2% even in such a weak market. We are yet to get the finer details here for Laurus Labs, but it seems to be a beat on all front, with strong beat coming in at least on the profit front. 250 crore is a profit number that has come in as compared to 190 crore that the street was anticipating. Now, one of the reasons behind this could also be lower tax structure, but we have to get to those details. But yeah, overall it seems to be a good beat so far when it comes to Laurus Labs. Lansdowne, any view on CDMO companies like Laurus Labs? Divi's is yet to report numbers. Laurus Lab has reported a strong set of numbers.
Yeah, I think the strong set of numbers is actually very helpful in terms of an outlook on this company. But if you look at valuations, despite the strong set of numbers, the stock still trades at almost 60 times, its forward earnings. And while there is, this is one of the sectors that we continue to see strong growth, a growth potential. One needs to probably wait and see, at what levels one can look at buying it, because in case there are a couple of negative quarters, then the stock could get re-rated significantly, and probably that's the time one can look at accumulating the stock.
So that's the view coming on Laurus Labs. I think for them, finance costs have significantly come down from 57 crore to 38 odd crores. But overall costs have gone up by 13%. Yet there's an uptick, slight uptick in the margins that we're seeing for Laurus Labs, and that's why the stock, up and above in trade, almost 3% as we speak. But shifting focus, we have Saumit, of course, with us, who's going to give us all the chatter that he's been hearing from the dealing room. Saumit, what are you picking up today?
Quiet. Not too much activity yet again in the market.
I think lots of activity on the downside. Too much right?
Downside. But yeah, the thing is, at this kind of levels, people are not that courageous to even short market from the current levels, because it has fallen a lot. Yeah. And technically, there's no reason as such other than global factors. No,
but don't you think, Saumit, that the global markets overall, if you see the way Europe has opened up, the way US was, there is some bit of stability at least at the global markets.
But Indian market does not seem
exactly. It's only our markets which are correcting right now. Right. Secondly, Monday is a holiday, which is again an extended week. So probably because Tuesday being a NSE expiry. Expiry game and rollovers are happening today itself.
Could be. That could also be the game, given the fact that it's a long weekend coming in. So yeah, that could also be one of the reasons why we are seeing this kind of a downtick in markets. But few stocks that dealers have highlighted. Firstly, a bunch of mid-cap IT names, Emphasis, Persistent and Coforge. Dealers indicate that there are some buy flows coming in all the three names at the lower level in trade. and delivery volumes are expected to be on the higher side for these counters. When it comes to Voltas, there are buy flows on the large HNI desk. Dealers are expecting strong Q3 numbers coming in from this company. And lastly, when it comes to Hero Moto, there are sell flows on the PMS desk. Dealers expect weak Q3 numbers coming in from Hero Moto, and hence this selling pressure coming in for this counter as well.
Okay, so interesting names there, Mahima.
I think Voltas has been seeing good gains. It did touch an intraday high of almost 4% in trade today, but right now seeing gains of about 2%, has cooled off a bit. Jayabala, your quick view on something like a Voltas, not much in terms of where volumes stand, but seeing some momentum in trade today.
Yeah, it's a very uninspiring chart. It's gone sideways and it's been stuck in a range between 1520 and 1180 for the last several months. And it's in the short term slightly negatively biased. So I wouldn't see today's bump up as a big positive, but it's probably going to be meandering within this range of 1520 to 1180. So it's an avoid at the moment. No clear structure in the short term. Maybe it's probably needs one more drop below the 2025 low for it to complete a correction. Not clear at all.
In terms of where the direction stands for Voltas is the view coming in from Jayabala with regards to where technicals are concerned. But earlier today we spoke to Nimal Jain, the founder of IIFL Group, about the IIFL's tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listening to exactly what he said.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
Okay, so that, was the clarification coming in from IIFL Finance, which after being in the positive has slipped into the negative as well. But as we slip into a short break, let's also listen into the management of Bandhan Bank, where the stock was seeing some smart moves, whereas Syngene, which has gone ahead and cut the guidance, and that's the reason why the stock is trading under pressure. And the clarification came in only on NDTV Profit. Let's listen into both the managements as we get into a break.
So asset quality, definitely it has improved. One thing is that we have taken I would say a very important step this time. We have sold almost close to 3,200 crores of assets to one of the ARCs. And this has definitely given a one-time reasons. Of course, we have got a hit in the profit and loss because of making higher provisions, because that our PCR on account of this almost is at the same level at 83% if we include the write-offs. And we wanted to maintain that provision coverage ratio. So we have taken a hit in the balance sheet, but we decided that we should cleanse also our balance sheets, which were piling up with the NPA, especially in the EEB segment, that is the Microfinance segment, right from the days of Corona. So we have got rid of those assets. We have been able to sell it to our ARC company, where we have also invested in the SRs.
In the light of, the ongoing challenge in the single large molecule, which I think has come in, a little bit higher than we anticipated, we will be making, an adjustment to our guidance. The guidance, on revenue, we will be adjusting that from a mid-single digit growth to a degrowth in the 2 to 3% range.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Single pass.
मोटिवेशन इज टू सर्व द नेशन। कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, दुश्मन इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है।
Big shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, आई वॉज नॉट जस्ट रनिंग, आई वॉज फ्लाइंग। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर
Welcome back. You're watching India Market Close here at NDTV Profit, where while markets are not, at all positive right now, there's one counter that's zooming in trade on the back of its earnings, and that's Laurus Labs. And we have Varsha joining by, who tracks this very closely. Varsha, good improvement in terms of where margin stands, net profit also up 1.7 times. What has led to this?
Well, I would say, a strong set of numbers that Laurus has posted, beat estimates on all round. Revenue is up 25%, EBITDA is up almost 68%, margins at 27% versus 20%, and good uptick in net profit. Now, let's see what are the key highlights, what has led to these numbers. One is the strong growth that you're seeing is, of course, led by CDMO space. Everyone knew this. The next leg of growth for Laurus Lab is, of course, CDMO. And there was also robust performance which was led in generics division also. The EBITDA that you're seeing, the strong gain in EBITDA is because of due to improving operating leverage. I would say the investment that the Laurus did in the last 1 or 2 years, now they are enjoying their fruits when it comes to the EBITDA margin, when it comes to the revenue growth. While if you see that they've delivered gross margin expansion of over 4.3 percentage points to 60%. This was led by the better product mix. Also, if you see the outlook for FY26, they're well on track to deliver healthy operational growth. Now we need to see whether this performance of 26 to 27% of 25 to 26% of margin will they do in Q4 also. But one more thing, the lower tax rate also aided profit because the estimates were around 190 crore of profit, but they delivered almost over 250 crore of profit. So lower tax has also helped that. And lastly, if I were to talk about the FY26 capex is expected at around 1,000 crore with no equity dilution planned, and the ROC is expected over 25% over the next 2 years. So overall, a strong set of results. This was expected, but they have beat the expectations as well.
Their own medicines are working on them, I think, Varsha. That's what it seems like right now. But clearly, Soumit was just pointing out, after hitting that high, the stock is again just corrected from the day's highest level. So it actually tells you what the markets are actually looking at. In fact, in terms of the outlook for 26, what they've said is that they are on track to deliver healthy operational growth, as Soumit has been pointing out, for a Laurus Laboratories, and that's what you should focus on, but your stock is under pressure. In fact, we have Neeraj Diwan as well who's joining in. Neeraj, your view when it comes to Laurus Laboratories, who's posted numbers right now. A good set of numbers, but the stock is corrected. And to add to that, you have a Cipla also, which has reported their numbers.
Yeah, good afternoon. See, I like the space. CDMO is growing very well for most of the companies. I like the CDMO API space. But see, Laurus Lab, to comment on Laurus Lab, the results are good, definitely. But then the stock is expensive. So at these levels, they're going to be profit taking. You know, you look at other stock in the listed space, which into similar space, they're available at much better valuation. So I like the space, but I would rather look at some other opportunity in the space.
Okay, so that's the view coming in with regards to where Laurus Lab stands. But let's quickly also try to pull up Cipla as we speak, because the pressure for Cipla has started, and with regards to where Achin Gupta, the successor, is going to take over from 1st of April from Umang Vora. Management is, kind of talking about that. The stock is down 4% in trade today at its, low point as we speak. But Neeraj, before we talk more about that, your quick view on Cipla?
Medicine provider. The results were not good, so I think that is why the stock is correcting. But I think it should be an opportunity because over the medium to long term, definitely there are a lot of other things that will happen for the company, and there will be a lot of other drugs they're working on. So this is an opportunity, I think, for medium to long term investment.
Neeraj, I'm just going to interrupt over here. Just give me 2 minutes because we have the Cipla management who's speaking at the press conference. Let's listen in to what they have to say, and then we'll talk about your views.
Consumer business, where we continue leading on multiple categories, and the profitability also keeps improving with economies of scale and better efficiencies. If I then move to our second largest business, which is North America, we delivered a top line of 167 million in the last quarter. As I mentioned, this had a small contribution from lenalidomide in Q3. Base business delivered a double-digit YOY growth, and several products did well. Albuterol continued to hold number one position. We had a market share of 22% as of last week of December. There was some challenges which came our way. Lanreotide, one of the prominent products, faced a supply challenge following the US FDA audit of our partner Pharma. We are working together with them on the remediation efforts, and we expect supplies to resume sometime in H1 of FY27. Meantime, the product will be in limited supplies based on clearance of existing lots. And we're also looking at enabling an alternate site together with the partner. What's exciting about our US business is the pipeline. We're making good progress on that. There are 4 respiratory assets that are under assessment and nearing approval. We believe 2 of these we could have a sole generic opportunity with quite a significant material upside. On peptides, we now have approval for generic Victoza, and we expect to launch 3 more peptides in the coming financial year. So our new launches would provide us strong sustainability on top line as well as bottom line. And while Lena revenues taper off on the business, we would expect a good continuity of growth in the business. On South Africa market, the private business outperformed the market 6.3 versus 5.7 for the market. We did see a temporary destocking at the channel at the end of Q3, but this will normalize in the coming quarter. EMU, happy to say that they delivered 4th consecutive quarter of 100 million plus revenues with 7% YOY growth in USD terms, supported with strong execution, both in DTM as well as B2B markets. And I think important to also mention that on regulatory front, we are expecting reinspection of Indore facility anytime now. So if I then move to an update on the profitability, we have reported 18% EBITDA for the quarter. This is a little bit lower than our internal plans, approximately 1.5% to 2%. A few reasons. One, as I mentioned, Lanrio, we had supply challenges towards the end of the quarter. Also, we continue to invest strongly in R&D. We put in 7% investment to sales on R&D, and we have some very exciting assets in the pipeline, including the filings that we are doing on complex oligonucleotides. Additionally, we incurred certain operating expenses in the quarter on account of preparation of the upcoming respiratory launches. So most of these are in the nature of one-offs. We are excited about the pipeline that is coming in. And I think I'm personally also excited about the quality and capability of the teams that we have. So we really look forward to a sustainable growth on top line as well as profitability as we continue to serve patients around the world. With that, we will open the forum for questions. Thank you.
All right, so that was the management speaking about what lies ahead for Cipla. But Neeraj, do complete your point. You were talking about Cipla.
So that's what I was saying, but the management also mentioned that there is a strong pipeline for the company. So the stock is corrected and there was expectation of not so good results. There's inspection which happened. So I think because of that, stock in the last 6 months had corrected from 300-400 rupees. So I think this is an opportunity for medium to long-term investors. So in the shorter term, maybe there may be some more impact, but medium to long term, there will be strong pipeline. There will be definitely good growth that will come for the company.
Okay, so that's with regards to where Cipla goes. Osho, the correction that we are seeing when it comes to Cipla, the reaction that you're seeing when it comes to Laurus Laboratories, all are event-driven right now. Any trade that is emerging on these two names?
For Cipla, firstly, I think obviously the counter has seen very strong beating from the high zone of nearly 1480. But at current levels, it is not advisable to exit positions for those who are already holding the stocks in Cipla because it is at historical supports of 1300. So I'm expecting that in the coming period, once the counter stabilizes, then from here onwards, we can look for opportunities on the longer side. But at present, if someone is not holding a position, there is no advice in Cipla to accumulate or to exit from the current levels. On the comparison with Laurus Labs, this counter has been one of a strong performer, and with the correction in the recent month, the counter have now tested the 100 exponential moving average. So I'm expecting that now it might hover within a range of nearly 1000 on the lower end and 1080 on the higher end. So that is the immediate trading range for the counter. If it breaches beyond the zone, then we can see some kind of continued momentum in the coming period. For now, 1000 is a very strong support levels and 1080 is the resistance that one can expect in this counter.
Shifting focus from pharma to solar manufacturing space, a big face-off between Waaree Energies and Premier. Waaree Energies reported a strong set of numbers, Premier a weak set of numbers. What are the differences? What is the reason? Let's get in Varsha to understand the same.
Well, thank you so much for that. You know, today we are actually comparing two companies in our bull versus bear case. Let's talk about starting with the Q3 FY26 numbers for Waaree, which is, you know, a volume leader. There was a massive growth when it comes to revenue, 119% year-on-year growth, while for Premier it was only 13% growth, and hence Premier was down in trade today. You know, talking about EBITDA surges for 167% for Waaree, while 15% year-on-year growth for Premier Energies, and the net profit, if you see, was up 118% for Waaree, and with the margin improvement of around 25%, while it has an industry-leading EBITDA margin at 31%. Talking about net profit, was up 118% versus 53% jump in Premier Energies. Now, let's discuss about both of the. If I were to talk about order book, massive order book at 60,000 crore versus 8,000 to 10,000 crore of order book when it comes to Premier Energies. Now, let's deep dive. Starting with Waaree Energies, why the numbers were so so strong. One is the unmatched execution and global reach, and the first Indian firm to sell 1 gigawatt plus modules in 1 month. Talking about, they have a 32% overseas revenue, which focuses on high realization US markets and expanding manufacturing to capture inflation there also. Also, if you see, they are investing almost $30 million in Oman facility for a future traceable supply chain. Now, talking about the fundraise, so they've recently raised 1,000 crores of fund for battery energy storage and inverters and hydrogen. Now, moving on, if I were to talk about Premier Energies, it's a technology and capacity focused company, and higher focus is on solar cells, and hence the margins for Premier is 30% versus 25% for Waaree, which is into modules. They are also targeting 10.6 gigawatt cell and 11.1 gigawatt of module capacity by September 2026. Even if you see, they are also on to large scale utility projects and IPPs within India. Moving on, if I were to talk about why Waaree numbers were explosive, one is 1 gigawatt per month scale up allows Waaree to absorb cost very efficiently, number one, and higher prices in US market versus India drove 118% PAT growth for Waaree Energies. Plus, if you see, 60,000 crore of order book signals much faster trajectory than peers. Now, if I were to talk about Premier Energies, why Premier Energy is a specialist when it comes to margin. One is higher ratio of cell manufacturing versus modules makes Premier Energy focusing on cell, which is a higher margin product, and hence 30% of margin for Premier versus 25% of margin for Waarees. Even if I were to talk about that defense segment, which provides high margin income regardless of solar price shifts, number one, and also, so if you see the overall, if I were to talk about, if I want to, differentiate between Waaree and Premier, of course, Waaree is in focus considering a volume game that Waaree is playing versus Premier, which is a specialist when it comes to margin. But considering today's sell-off in Premier Energies, Waaree has given a very strong set of numbers considering the production of modules, while Premier has been into 30% margin scale only.
All right, Varsha, thank you so much for getting us those details and completely helping us understand as to how these two are different and what is causing the pain in one and what is Waaree Energy is doing better in terms of fair that is in fact reflected in the stock as well in terms of how the financial performance has fared. But Osho, I'll quickly come to you on both of these counters. I mean, clearly the street has given its verdict with regards to where Q3 stands, but in terms of a technical stance, where do you find the charts more attractive right now?
But technically, both the counters are looking very bleak, but comparatively, Waaree Energies are having better technical formations as compared to Premier Engineering, because Waaree, we have seen a kind of a retracement from the lower end, from the oversold terrain. There has been a decent traction in the last two trading sessions. So that is an initial signal of a reversal in the counter, although conviction still lacks because it is below the 20-day exponential moving average, but comparatively, it is looking better than compared to Premier. So overall, I'm expecting if it sustains above the zone of 2650 to 2680 kind of a zone, then in the coming period, we might see some kind of respite or pullback in the counter towards 2900 odd levels. So I'm expecting that this counter might perform the other counter in the short-term period.
Osho, just wanted your view when it comes to. Okay, sorry, yeah, the chart was not loading. Just wanted your view when it comes to Syngene. The stock has nearly hit the lower circuit of 10% Fundamentally, obviously, they have cut their guidance and the numbers were weak. But on charts, any support levels?
Technically, there is a strong support around the zone of 530 to 520 odd levels, where we have seen a very strong consolidation in the previous year from the zone of nearly 530 was tested around 20 from 2020 towards 2023. So this has been a very strong consolidation zone for the counter. So I'm expecting that till it sustains above the zone of 520, the concerns remain subsides. But again, if there will be any kind of further breakdown below 520, then there might be some kind of disruptions in the coming future. So for now, I am expecting that another 20 points of loss or 20 points of fall can be seen as a healthy correction or can be seen as an even opportunity for the counter. And on the higher end, again, 600 is a very strong resistance. So 520 to 600 is the trading range for the counter.
So now BLW is another company that has come out with its earnings. If you look at the revenue, it's up 38%, but it's the margin pressure that has been acting up. Hence, that's the reason the stock is down nearly 4% in trade. Margins have come in at 24.7 as against 27% last year. And if you look at the EBITDA number, that is also up around 26%, but margin pressure is something that has led to the fall in the share prices of Sona BLW. Right. Any view on charts here, Osho?
Yes, the counter is having a kind of a consolidation around the short-term moving average, but overall I'm expecting that in the previous 2 months, the counter was trying to emerge above the 200-day simple moving average, but again, there has been a kind of a correction, but overall, the counter is into a consolidation, long-term consolidation zone. So I'm expecting that if it breaches the zone of 475 to 480 on a higher levels, then only one can look for buying signals in the counter. And from there onwards, we can even see some kind of momentum coming back in this stock. While on the lower end, again, it is having a very decent support around the zone of 440, 430 odd levels. So this is the support zone for the counter. No doubt there might be volatility in 1 to 2 trading sessions, but I'm expecting till the time it is respecting the zone of 430, there is no sign of concern in this counter.
Right. And what would be your BTST views, Osho?
It is very difficult in such market to have a BTST view.
And any STBT view?
STBT is also very, very.
I mean, it's fair, I think, taking the 3 days holiday.
No, but I have a stock in my radar, but that's not for BTST, but for positionally, it is looking very positive. Okay. HUL is one of the counter which is looking very positive to me. So being from the FMCG space, there has been some kind of defensive stock in the name, and HUL has even outperformed the market in today's trading session. So I'm expecting this counter can see some kind of outperformance in the coming period as well. So HUL will be the buy recommendation with a strict stop loss of 2350, and 2350 has respected its support zone. So I'm expecting that it might not breach in the coming period. And from here onwards, there can be a strong upside rally in this counter. So HUL will be a positional bet. Immediate target is 2460, followed by 2480 from positional 1 to 2 trading sessions.
So positive momentum expected in HUL from Osho. Neeraj, I'll quickly come to you on HUL as well as GCPL, the first FMCG company to post its earnings today in this quarter. The expectations are that profit, of course, growth will outweigh the revenue growth, but revenue growth is also expected in that high single digits. Your quick view on both of these counters?
Yeah, I'm positive on the consumer space. So I think that, of course, short-term impact will be there because of the results. But over medium term, also, I feel that FMCG is a space one because it is defensive. Second, because the inflation has been low, so raw material pressure is not there. So margin improvement can happen. Plus, GST benefit will also come their way for this full quarter. So I'm positive on these two counters.
Okay, so that's with regards to where GCPL goes and HUL. But you know, Ola, let's pull up that one on the screens because there has been some bit of pressure over the last couple of trading sessions on Ola Electric, and with the third quarter results right at the corner. What's in store for the balance sheet? Puneet is here with more details. Puneet, today as well, 3% downtick. And if you pull up a 5-day or a 1-week chart as well, that will tell you the kind of pressure that has been created on this one. 12 to 13% is the kind of value erosion that investors have already seen. What are you picking up?
Well, it's also very close to its 52-week low of 30 rupees per share as well. And the big headline is that the company could actually cut its guidance in FY26 for sales volume. But there have been some other bad news as well in this particular month itself. So the first biggest takeaway is that, its CFO has resigned. He was one of the key voices in the earnings conference call as well. So it's definitely one that has impacted the company and led to the recent downtick on the stock. The second key takeaway is that there are expectations of a weak Q3 earnings, and we'll get to that in just a bit. While the third one is that the market share has fallen to an all-time low of just 6% in January this month. So it's on a year-to-date basis that we are doing the first 23 months of this month. And 6% is compared to almost 35% that the company used to do almost just 12 months ago. So it's a sharp downtick that we've seen across market share. And promoter selling on the back of this at the end of December was another key trigger. But in terms of the Q3 sales data, that's another key aspect. For FY25 last year, quarter 3 was almost 84,000 units. That slipped to just 35,000 units. So there was a downtake of almost 58% on the downside. So minus 58% is what the number was. Apart from that, the Q3 preview is something else. Revenue is expected to fall by 41% to almost 615 crores, with margins expected to be EBITDA loss actually be of 180 crores and a net loss expected of 389 crores in this particular quarter. Finally, what brokerages have also cut target prices unanimously with Kotak Securities as well as Ambit being the lowest of 25 and 30 respectively. But the guidance cut is what I want to finally highlight before I wrap up. They had mentioned a sales guidance of almost 2.2 lakh units for FY26. This was cut from the earlier guidance at the start of the year of almost 3.7 lakh units. But given the company's 9th month sales performance, it seems a very bleak picture. Even from 2.2 lakh target, they've only resounded to around 1.4 lakh sales units, and hence there could be an impending guidance cuts either in quarter 3 or quarter 4. But that's the picture on Ola Electric and in the profit intelligence segments. A weak picture and a weak outlook altogether.
Okay, so that's with regards to Ola Electric. Neeraj, your view when it comes to your EV makers, Ola, Ather, all of them. The month probably has been slightly weak. How would you look at trading with on these names?
Yeah, actually, I'm not too positive on the two-wheeler space also right now. So because there's been some pressure lately, but if I have to go for a two-wheeler space, I'll rather not go for something like Ola Electric or Ather. I'll rather go for something like a TVS, which is present into electrical two-wheelers also. So I think there TVS would be my best bet as far as investment is concerned.
Right. Neeraj, quickly your view when it comes to a counter like DLF. Yes, obviously their cash flows were strong. They have become debt-free. But pre-sales number coming in at 420 crore as against estimates of 2,500 crore plus lower number of launches going forward, which will definitely have an impact on growth numbers, right, going forward?
Yeah, actually, this year, I think the guidance that they gave about 22,000 crores kind of a pre-sale, it's looking difficult for them to achieve. So last year they were able to, go past the guidance. So definitely there is some pressure in NCR territory, in Gurugram, where they are predominantly present. And that because of that pressure, you saw the numbers, the kind of pre-sale that they're doing for the quarter. So I think the short-term pressure is definitely there, but if again for a medium to long-term perspective, DLF, the kind of lease rental that they are targeting for in 2 to 3 years, and the kind of launches that are scheduled over the medium term are massive, and they may be 1 or 2 quarters blip here and there, but over the medium to long term, definitely the story is still intact, and they are almost debt-free, gross debt-free. So that will, in the longer term, I think once the cycle reverses for real estate, I think then one can have a look at this counter.
At this moment, in the real estate basket, any stock that you feel is attractive?
See, I would say DLF is also attractive for a long-term investor. There are other stocks also in the NCR market.
Then I would not say attractive. Would it be a right time to buy, or there could be more downside from here on also?
I would say that one should start accumulating. One should not be going all out and buying them, but I think these are good prices to start accumulating real estate stock.
Okay, so that's with regards to where DLF goes. Osho, let me take a quick question with you on real estate, because that was one of the top losing sectors in trade as we opened up for trading in today's session. And there seems to be some bit of weakness that is building in. One of the worst performing sectors of 2025 has been one of the worst performers at the start of 2026 as well. Are you seeing any opportunity on the charts, or do you say that the momentum is just downwards, best time to sell?
See, overall, there has been substantial increase in trading volume once there has been breakdown in majority of the real estate counter. Coming to DLF, there has been a decent breakdown, firstly around the zone of 680, then the zone of 620, and now I am targeting a short-term target for nearly 545 for DLF. So, and in this correction, there has been increase in trading volume. So there has been a strong conviction on the selling side for the real estate space. So I am expecting that in the short-term picture, yes, there is a bleakness on the technical charts and there might be further correction. But once these counters reach towards the oversold terrain, which some of them are already into the oversold terrain, then there might be some opportunity to start accumulating. But again, that in a staggered manner and not at current levels with the current scenarios going on. So one should wait for them to get stabilized at lower end and then may look for buying opportunity, but again in a staggered manner only.
All right, so that's the view coming in regards to the entire real estate pack. With that, Neeraj as well as Osho, thank you so much for helping us with all of those stocks insights and of course taking out the time and speaking with us at NDTV Profit. Quickly, if you can see as to how the markets closed today, of course, Monday being a holiday, the markets kind of have seen pressure throughout the day. 25,000, below the 25,100 is where we are ending at right now. Almost 1% down on the Nifty 50. The Bank Nifty also down by about 1.3 odd %. Broader markets also, there is no respite there. The mid cap 150 down by about 1.7%. The small cap 250 also seeing downtick of about almost 2% at the end of the trade. Quickly, if we can pull up the Nifty 50 heat map and see what are the counters that have really seen pressure in trade today and what are the counters that have actually kept Nifty in the check. You have Dr. Reddy's up 1.6%, although did go to almost 3% higher in trade today. Tech Mahindra up 1%. ONGC, HUL, some counters in the green. But on the flip side, you have counters like Eternal, Indigo, Geofinance, as well as Cipla, Axis Bank, SBI, Tata Consumer, as well as Power Grid, Maruti, HDFC Life. So, I mean, I can go on and talk about all of these stocks which have tanked almost 2% in trade today, but that's the reality. We are, not seeing any positive momentum. Quickly, if we can also see the India VIX, because, at the start we saw India VIX seeing great overall, gain of about 3 odd %. But with regards to where the India VIX goes, it's seeing, that kind of tells you the volatility in trade today, and we ended at that 7.7% mark. Let's also quickly pull up the BSE 500 and see as to what are the counters in the broader end of spectrum. Look like you have Home First Finance, Tanla Platforms, both in the green on the back of earnings, up 6% each. Hindustan Zinc on the back of fundraise, up 4%. Infibeam, Bandhan Bank, some counters in the green on the back of earnings. But on the flip side, you have something like Syngene International tanked 8%, and how something like a Paytm down 8% as well. Poonawalla Fincorp as well as Balaji Amines down 6% each. Quickly, advanced decline ratio before we wrap it and go to the cues that you need to watch out for. The gap has widened throughout the day with regards to where advanced decline ratio is concerned, closing at 1900 declines versus 500 odd advances. Lastly, in terms of where cues that you'll be watching out for throughout the day, you have India bank loan growth YY coming in, deposit growth YY also coming in. So data of this will be out this weekend. Foreign exchange reserves data will be out. US S&P Global Composite PMI data will be coming out. You can keep your eye out for that. S&P Global Manufacturing data will be out. Michigan inflation expectations will also be out. So these are some of the things that you'll be watching out in terms of where the global markets are concerned. But some of these names also seeing interim dividend announcements and of course cutoff dates for all of these names like Persistent Systems, United Spirits, Wipro as well as SRF. You have lock-in expiry for something like a Gujarat Kidney at 6%. Companies that will come in terms of earnings post market hours, you have Bharat Petroleum, Godrej Consumer, IndusInd Bank, all of these big names reporting their earnings. India Cements, Nuvama, Prime Focus as well as something like a Welspun Specialty. Also companies like Chennai Petroleum, Axis Bank, Ultratech as well as Kotak Mahindra. Asian Paints of course will be posting its earnings on Tuesday. WeWork, Spandana Spurti, Marico etc. will be in focus next week. So that's with regards to where some of these companies stand in terms of where earnings will post. But Adani Green has released its Q3 numbers showing steady growth in operations and profitability. The management has also issued a press statement outlining the company's performance and outlook. Let's listen to what they had to say.
I'm delighted to share Adani Green Energy's robust operational and financial performance for the first 9 months of fiscal year 2026, underscoring our relentless growth trajectory and industry leadership. Our energy sales surged by impressive 37% year-on-year, reaching 27.6 billion units. This robust growth is a direct result of significant greenfield capacity additions and strong plant performance. Our operational capacity expanded by 48% year-on-year to 17.2 gigawatt reinforcing our leadership as India's largest and fastest growing pure play renewable energy company and putting us firmly on course to achieve 50 gigawatt target by 2030. In calendar year 25, we added 5.6 gigawatt of greenfield capacity, which represents nearly 14% of countrywide solar and wind capacity addition. Our landmark Khavda project, the world's largest renewable energy installation, continues to advance at an accelerated pace with an operational portfolio of 7.7 gigawatt of solar, wind, and hybrid assets. We are on track for deployment of one of the largest single location battery energy storage project in coming months. Our hydro pump storage project on Chitravati River in Andhra Pradesh is also on track. Our industry-leading financial results further reflect our operational excellence. Revenue from power supply increased by 25% year-on-year to rupees 8,508 crore, while EBITDA grew by 24% to rupees 7,921 crore, achieving an EBITDA margin of 91.5%. These results are powered by advanced technologies and digitized operations, leveraging sophisticated data analytics, machine learning, and artificial intelligence for real-time monitoring, enabling superior operational performance. Adani Green Energy's commitment to sustainability and responsible business practices continues to be recognized globally. We have been named the world's #1 green utility in the 2025 Global Top 100 Green Utilities ranking by Energy Intelligence. AGL is top sustainability performer in power generation sector for second consecutive year in NSE sustainability ratings. As we look ahead, we remain steadfast in our commitment to India's energy transition by enabling large-scale adoption of affordable, clean energy. Adani Green Energy is powering sustainable growth for India and the world. Thank you.
जब बात बॉर्डर की रक्षा की हो तो हर फौजी दीवार बन के खड़ा हो जाता है।
वैसे ही जब बात आपकी गाड़ी की इंजन की हो तो डिवियोल आपके इंजन को देता है प्रोटेक्शन और पावर ताकि परफॉर्मेंस रहे लॉन्ग लास्टिंग।
डिवियोल हर इंजन का सोल्जर, सेलिब्रेटिंग द रिलीज ऑफ बॉर्डर 2 on 23rd January.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइड आउट बना के मेरे कमांडो ने बर्बाद करता है.
This is going to be shaky footage, guys. Apologies for that in advance.
Good evening, you're watching Market Express with me, Shreyansi Singh, and this is the show that gets you all the headlines that you need to know at this hour, including the ones that you may have missed. Let's get straight to the show then. Let's take a look at the markets. First things first, you're looking at another volatile session on Dalal Street as markets saw choppy trade after a good start in the opening session. Now, when you take a look at the benchmarks, Nifty and Sensex ended with near 1% cut, while broader markets saw deeper cuts as both mid and small cap indices also ended with almost 2% in terms of the downtick there. Let's quickly take a look at the sectoral picture as well. It was in fact a sea of red across sectors that you're looking at. Realty stocks witnessed sharp selling as well through the day as realty index ended with over 3% fall as well. When you talk about public sector banks, they also dragged in trade. And you do have the PSU Bank Index that ended with over a 2.5% cut. So that's something that you're looking at as well. And that's the sectoral picture largely that you have at hand when it comes to some of those sectors. Let's also talk to you a little bit about the rupee. In fact, that weakness seems to continue as the local currency has hit a record low of 91.95 against the US dollar today. Now, this of course comes against the backdrop of global turmoil, rapid FII selling and uncertainty around the India-US trade deal. So those are some of the factors that you're looking at that were a key drag coming in when it comes to the rupee. Let's also talk about Paytm. Let's get a little stock-specific talk about Paytm. That was down about almost 10%, 9.5% downtick coming in for Paytm. That was under pressure after a key revenue lifeline snapped for the company. And the RBI's PIDF scheme, which bought digital payments infrastructure and contributed 20% to Paytm's operating profit, expired in December with no renewal in sight. Now, a 200 crore rupee annual hit is something that you're looking at looming, and the industry is preparing for what comes next, tighter margins and possibly higher prices as well when it comes to merchants, and you can see that clearly being reflected in the stock as well, 9.6% downtick coming in. As far as Paytm is concerned, let's also talk to you about some of the other stocks. Then Cipla was the one that was in focus on the back of its third quarter earnings. Cipla reported a weak set of numbers when it comes to the third quarter. Profit fell sharply as you do have higher costs that hit performance. Let's also talk about the revenue that was largely unchanged, but operating performance actually softened and margins narrowed through the quarter. Now, what you're also looking at when it comes to Cipla is that the company was also impacted by a one-time expense related to the new labor codes, which further dragged down its bottom line. Overall, though, Cipla in fact ended the quarter on a slightly subdued note with profitability under clear pressure despite a stable top line, and that in fact was what was being penciled in. When you take a look at the counter, that was down about 4% in trade, and previously before the numbers were reported, of course, it was tepid, not doing all that much, ended the day with a cut of about 4%. That's Cipla for you. But talking about Laurus Labs, then posted a strong set of numbers in the third quarter with net profit nearly tripling to 252 crore rupees. Revenue grew over 25%. EBITDA jumped nearly 70% as well, pushing margins up to 27%, reflecting that little bit of robust performance that you have across its business segments. So that's a decent performance across segments that you're looking at when it comes to this particular counter. But let's keep it going with our coverage of earnings as well, because you do have Shriram Finance that was also in focus, reported a sharp 29% thereabout downtick coming in when it comes to the net profit, coming in at 2,522 crore rupees versus 3,570 crore rupees last year. Meanwhile, when you talk about the calculated NII, that actually grew 18% to 6,574 crore rupees on a year-on-year basis. This is in fact signaling continued strength when it comes to their core lending operations. The stock wasn't doing all that much at close, but the company is also preparing to raise funds via NCDs and bonds, reinforcing its capital position for future lending and refinancing needs. So that's something that you're looking at when it comes to this particular counter, but let's also keep it going with some of the counters that were in focus on the back of their earnings, and it's actually Interglobe Aviation that was in focus here. Posted a better than expected third quarter, even as revenue growth slows to its lowest since the COVID period, rising to about 23,500 crore rupees. Net profit in fact stands at around 550 crore odd rupees as well, weighed down by that one-off cost that you're looking at. That's been a common factor across some of these companies, and you're looking at that one-off cost being at 1,500 crore rupees when it comes to this particular counter. Excluding these exceptional items, though, you do have the profit that jumped to over 3,100 crore rupees. The airline adds 24 aircraft this quarter, while free cash falls noticeably. That's very important because this is the biggest drop that you're looking at for this particular metric in nearly 5 years, and that's Interglobe Aviations for you. But let's also keep it going with this particular counter, because there's actually a bunch of brokerages that have written notes when it comes to this one. Morgan Stanley sees opportunity, calling the stock overweight and highlighting strong profits and an attractive valuation here. Now, on the other hand, you do also actually have Investec that remains cautious, maintaining a sell rating, pointing to weak results and rising costs that could slow growth. So that's something that you're looking at when it comes to Interglobe Aviations. But let's also keep it going with some of the other counters that are in focus on the back of their earnings. So it's actually Premier Energies that is in focus on the back of a mixed quarter that they've delivered. Revenue came in softer than expected, but profits still managed to beat estimates. The company in fact benefited when it comes to the lower taxes, which lifted the bottom line. Its order book remains healthy, and during the quarter, it also commissioned a new 400 megawatt solar cell facility, adding to future capacity, which is going to be a key focus here. Operational performance is something that you're looking at that improved modestly with slightly stronger margins, and overall profit also saw a solid jump coming in here. So that stock though was down about 7.5% on the back of that revenue miss that we've highlighted earlier. So there you go, that's one particular counter that was down and out in trade. But let's also talk to you about Syngene International that was also down and out in trade, reported a tough quarter hit by inventory corrections and one-time labor costs. When you talk about the revenue here though, that has actually dipped slightly, but profits take a sharp fall with net income plunging nearly 90%. On the brighter side though, you do have the company extending its partnership with Bristol Myers Squibb through 2035, showing long-term commitment in its collaborations. But it does look like the street wasn't really impressed with that cut coming in to the tune of about 8% when it comes to this particular counter. So that's something that you're definitely looking at when it comes to Syngene International. But let's also be talking to you about a bunch of brokerage notes actually. Let's put the spotlight back on brokerage notes, because you do have Citi upgrading Aditya Birla AMC to a buy, raising its target to 900 rupees. Now the broker highlights stabilizing market share, improving equity fund performance and reduced redemption trends. Now you do have strong sales here in terms of the efforts being made when it comes to sales. Sustained performance are also expected to drive assets under management higher, making the risk reward outlook favorable when it comes to this particular counter. So that's something that you're looking at when it comes to brokerages. Let's keep it going with the brokerage story though, because you do have Jefferies maintaining a hold when it comes to IIFL Finance and trimming its target to 600 rupees. But the story isn't all somber, because you do actually have Q3 numbers actually beating expectations, powered by surprisingly low provisions. But there's actually a twist here that you're looking at. Tax authorities have called for a special audit, a move that could hang over the stock in the near term as well. Meanwhile, on the business front, you do have gold loans that glittered, driving growth. NIMs inched higher and credit costs came in better than the forecast, offering a bit of shine amid the uncertainty. Let's also talk to you about Coforge that posted a mixed quarter with revenue up slightly but profits down sharply by over 30%. EBIT and margins show marginal dips, while the company also announces an interim dividend to the tune of about 4 rupees per share, offering some relief to investors amid slower earnings growth. Let's also talk to you about Tanla Platforms. Now, this is one counter that has actually delivered steady growth this quarter with revenue crossing the 1100 crore mark and profit inching higher. The company says that momentum was strong across key metrics with both its business segments continuing to perform well. Most of the sequential growth actually came organically, driven by higher wallet share from existing clients. Tanla is actually also sharpening its focus on Wisely.ai with fresh investments aimed at building solutions for telecom operators and large enterprises. Overall, a stable and broad-based quarter for the communications tech player is what you're looking at. Sharpening focus on AI though, and that's one particular story that's quite important here. But let's also talk about Bandhan Bank that is showing signs of a steady comeback this quarter. Asset quality has actually improved sharply with gross NPAs dropping to 3.33% from over 5%, while NII slipped 5%. Provisions are down 16%, giving the bank some breathing room. And you did have Street also cheering that with a 4% plus uptick coming in here. Margins inched up with NIMs rising 6 basis points to 5.9%. Loan growth came in at a healthy 8.9%. And when you talk about the brokerage view here, the brokerage verdict actually is quite cautiously optimistic. CLSA calling it a decent quarter after tough ones, while Macquarie maintaining its underperform rating, but does see NIMs improving in the coming quarters. So that's a little bit of an update coming in as far as the brokerage verdict also is concerned. When it comes to Bandhan Bank, that particular counter was up and away in trade. Talking about up and away, let's talk about Swan Defense that secured a $227 million order for 6 chemical tankers from Europe's Rederitt Sternsen as well, with an option for 6 more vessels. The first tanker is expected to be delivered with 33 months, marking a significant boost when it comes to the company's order book. So that's an update coming in on the order win front. But let's also talk to you about one particular counter that was in focus. Sun Pharma getting its DCGI approval to manufacture and market a generic version of semaglutide injection. The drug used for chronic weight management is going to be launched after the existing patent expiries, boosting the company's portfolio. When it comes to the entire therapy segment, the stock wasn't doing all that much, but of course it was in focus on the back of this particular approval. Let's also talk to you about Zaggle Prepaid Ocean Services that has inked a major 3-year pact with HDFC Ergo General Insurance as well. Under this agreement, Zaggle will be providing its Propel Rewards, an engagement platform that is a digital solution designed to manage structured incentive recognition and partner engagement programs as well. So that's something that you're looking at. When it comes to this particular counter, the collaboration actually strengthens Zaggle's presence in the enterprise reward space while giving HDFC Ergo access to a specialized tech-driven reward system. And the company in fact says that the deal is fully domestic and not a related party transaction. So that's something that you're looking at on the deal front. They've also said that they're ensuring full compliance with governance norms. So that's the update coming in here. But let's also take a look at Ixigo. That has reported its lowest revenue in 5 quarters, down about 13.5% in trade. Lowest revenue in 5 quarters. Other than that, revenue is very important to be looking at, because you do have EBITDA that rose 23%, 23 odd percent. You did have a rise coming in as far as the revenue is concerned, but that milestone in fact didn't cheer Wall Street, didn't cheer Street at all. Margin saw a slight dip, 8.3% compared to 8.9%, but the bottom line was strong with net profit jumping 56.8% to 24.3 crore against 15.5 crore year on year. So Dalal Street wasn't really cheering that, down about 13.5 odd percent. That stock for you. Let's also talk to you about Sona BLW that posted a mixed quarter with revenue up sharply by over 38%, while net profit remains flat at 151 crore rupees. EBITDA rises over 26%, though margins dip slightly. The company also declares an interim dividend of 1.6 rupees per share. Let's also shift focus to some business news coming in terms of some updates, though. You do have platinum prices that actually surged to a fresh all-time high as investors rush towards safe haven assets. Amid growing uncertainty in the United States, the metal touched an intraday record of around $2,684 an ounce, driven by a weaker dollar and nervousness over US economic and trade policy. Now, at the same time, there's demand that has outpaced supply as well when it comes to platinum, a metal that is used in a wide variety of sectors. So, a tale of two triggers managed to scale up platinum onto that record high. Let's also talk to you about Amazon, that is preparing for another major round of job cuts with thousands of corporate roles expected to go next week. The move is part of the company's plan to trim around 30,000 white-collar jobs overall. Amazon already cut about 14,000 roles in October, and the next round could begin as early as Tuesday. The cuts are actually likely to hit teams across Amazon Web Services, Retail, Prime Video, and Human Resources. And TikTok has struck a last-minute deal to keep operating in the United States, setting up a new majority American-owned joint venture to avoid an outright ban. Under the agreement, TikTok's Chinese parent, that is ByteDance, will cut its stake to just under 20%, meeting US legal requirements as well. American and global investors, including Oracle and Silver Lake, will take control of the new company. TikTok says US user data and its algorithm will now be protected through stricter security and oversight. The deal follows years of political and legal pressure over national security concerns. And former Google and Airbnb executive Piyush Ranjan, who also served as CTO of Walmart-owned Flipkart, and Mukesh Bansal, co-founder of Myntra, on January 23rd, launched Fermi.ai, an AI-first edtech startup focused on high school STEM education as well in India and the United States. The startup, which has emerged from the Meraki Labs ecosystem, is headquartered in Singapore and operates through subsidiaries in India as well as the US. And you do have Fermi.ai that is available for free on the cloud as the company remains in a pilot and product discovery phase. The launch comes at a time when the edtech sector is recalibrating after a funding boom and bust cycle, even as generative AI tools, the likes of ChatGPT, become deeply embedded in how students study. All right, then moving on, let's talk to you about Nokia Corporation that has expressed interest in setting up a global capacity center and additional research facilities. And Karnataka Industries Minister M.B. Patil said the telecom major discussed expansion plans during meetings with the state government on the sidelines of the World Economic Forum in Davos, which is where all of the action is. Nokia, which already runs its largest global R&D center in Bengaluru, is also exploring opportunities in Tier 2 cities. The Karnataka government has assured full support for the company's future expansion. The talks underline the state's push to attract high-value technology investments. And on to some national news then. Prime Minister Modi has flagged off 4 new train services in Kerala from Thiruvananthapuram, including 3 Amrit Bharat Express trains and 1 passenger service, officials said. Now, the trains linking Thiruvananthapuram to Tambaram and, to Charlapalli as well, and also to Mangaluru and Thrissur as well, Guruvayur passenger, are expected to strengthen regional rail connectivity across southern India. So that's an important update that you're looking at there. Modi's address highlighted the role of improved transport links in boosting economic activity and access to services. The event, though, also coincided with the inauguration of broader development projects in the state. And tell you what, with that, it's a wrap on Market Express. Thank you so much for tuning in.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets, and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans, and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है.
Shaky footage, guys. Good news for that.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या खुद पे.
Market ends close to 1% lower with Nifty closing a little above 25,000 levels. The Sensex falling over 750 points. All sectors finish lower. Nifty Realty loses the most. Broader markets underperform the benchmarks. Rupee weakens further to a new record low of 91.96 against the dollar as a result of the global turmoil, rapid FII selling and uncertainty around the India-US trade deal. Experts say today's sudden fall in the markets also weighed on the Indian currency versus the greenback. Q3 earnings in focus. Laurus Lab reports more than 100% jump in profit, with Cipla's profit drops, while Cipla's profit drops by around 57% on the back of one-time exceptional loss. Meanwhile, Shriram Finance reports a 29% fall in profit, with net interest income gaining 18%. Interglobe Aviation's share plunged over 4% after reporting 577 crore impact of Indigo's flight disruptions on its Q3 profit. New labour codes dragged the profit by 969 crore rupees. IIFL Finance shares fall nearly 18% after receiving an IT department notice. Company tells NDTV Profit that search happened in February last year and no evidence of tax evasion was found. Sun Pharma gets DGCI's nod to manufacture and market generic semaglutide injection. Company will launch the weight management drug after the patent expires. Karnataka High Court revokes the ban on bike taxis subject to conditions that the state may impose. Uber Rapido welcomed the court's decision. President Trump sues JP Morgan, files a $5 billion lawsuit alleging the bank shut his accounts over political vendetta. JP Morgan says the suit has no merit and it did not close accounts for political reasons. Trump posts on Truth Social about Greenland, says a structure for is being worked on and it will be amazing for the US. Profit 360 on NDTV Profit, and I'm your host Mahima Vachajani. Along the next half an hour, we'll bring you the latest on markets as well as national and international news. Let's take a quick look as to how the markets did today. Both the benchmark as well as the broader markets did close in the red, of course. The benchmark Nifty 50 closed almost 1% lower. With regards to where, the Nifty 50 heat map is concerned, let's try to pull that up because lot of counters kind of led to that fall in the Nifty 50. You had counters like Eternal facing immense pressure in terms of where the stock is concerned. Indigo, Cipla, as well as something like a Geofinance, Axis Bank, Bajaj Finserv, all of these counters ended in the red by about 2 to 4% each. On the flip side, you have counters like DRL, Tech Mahindra, as well as something like an HUL, which kind of kept the Nifty in check and held the Nifty above that 25,000 levels, but we did close below the 25,100 levels. With regards to where the broader markets are concerned, the mid-cap 150, let's try to pull that up, closed around 1.72% lower. The small cap 250 also closed by about 2% lower. With regards to where the BSE 500 is concerned, let's try to quickly pull that up because it was a very stock-specific market. So you had something like a Tanla platform, Home First Finance, buzzing on the back of earnings, gaining strongly up 6 to 7% each. Something like a Bandhan Bank also up on the back of its earnings. Hindustan Zinc on the back of fundraise. Soba as well as Infibeam seeing gains of about 2 to 3% each. But on the flip side, you had counters like Paytm, which did see a downfall of around 8%. Poonawalla Fincorp, Balaji Mines were some of the counters which did see pressure anywhere between that 6 to 7%. So that's with regards to where the markets are concerned. But rupee's weakness continues as it has hit a record low of 91.96 against the US dollar. Now this comes against the backdrop of global turmoil, rapid FII selling as well as uncertainty around the India-US trade deal. The rupee plunged to a fresh all-time low as dollar demand from corporates and importers outweighed early moves and compounded existing pressure on the currency. In fact, we did have a phoner on this, Anandya Banerjee, who is the SVP of Currency and Commodity Research of Kotak Security, tells the reason as to what is the reason behind this fall. Listen in.
Indian rupee is already one of the weakest currencies in Asia. So whenever there is a sharp fall in the equity market, it is seen as a kind of a signal where the speculators come and short the rupee, especially in the options. So that also adds to the pressure. So only when the RBI will step in aggressively, we will see a turnaround.
And do you expect Reserve Bank of India to step in? Because a couple of days back, I believe they had stepped in. And again, after that, we are seeing this kind of a downfall. Multiple analysts are saying that the worst is over, but it doesn't seem like.
Right. Actually, RBI, yes, the RBI generally tends to step in whenever there is a 80 paisa to a 1 rupee move, like almost we have seen today. So we would see the RBI step in above the 92 levels. But what is happening is RBI is not selling very aggressively. They are not continuing the selling. They are coming to the market, selling dollars, and then going away and letting the market dictate the price. Because I think as long as the trade war is on, they will continue to use the currency as a tool to fight the trade war.
All right, so that's the view coming in with regards to why we did see rupee hit record low. But the other counter that remained in focus today is Indigo. The share price crashed over 4% in the day after Q3 earnings. And for the quarter, December ended, of course, 2025, reported a 77% drop to the 550 crore against the 2,500 odd crores in the same period. Now, the low-cost airline did take a one-time hit of 1,547 crores. This includes an exceptional loss of 969 crore owing to new labor codes and a loss of 577 crore due to the flight disruption and regulatory penalty of around 22 odd crores. Laurus Labs was also in focus today on the back of its numbers, did come almost at the end of the market close, But it's time to look at how the earnings fared in terms of the numbers. This pharma major had a good Q3, beat across metrics. Net profit nearly tripled from 92 crore in the same period last year to around 252 crore this time. Operational efficiency stood strong with over 68% rise too. Let's get in my colleague Varsha to give us more details as to how Laurus Lab fared. But before that, the stock also ended 1% higher in terms of where the trade stand. We'll shortly get in Varsha to give us more details on Laurus Labs. But Godrej is another counter where the numbers came in just post-market hours in terms of where the numbers stand. Overall, Q3 financials, consolidated sales saw growth of around 9%. In terms of constant currency, the growth was at 7%. Underlying volume growth at that 7%. Standalone volume growth at 9%, where sales grew by around 11%. For Indonesia, underlying volume growth grew by mid-single digits and sales degrew by around 3%. Overall, EBITDA stood at a growth of around 21.6%, and consolidated net profit also saw a growth of around 14%. The company, of course, has declared an interim dividend of 5 rupees per share. So that's with regards to where, overall, the stock that is in focus, that is Godrej Consumer, which will be in focus on Tuesday, of course, because Monday is being a market holiday. But next on our list is Shriram Finance. This is a large cap deposit taking NBFC that had a tough ride in Q3. The company's profit dropped over 29% to 2,522 crore as opposed to 3,570 crore last year. However, on the positive side, the net interest income witnessed an annual growth of 18% at that 6,574 crore mark. But the street did not get that quite impressed with these numbers, and the stock ended almost flat with a negative bias in trade today. Sun Pharma is the other counter that remained in focus, has secured approval from India's drug regulator, that is DGCI, to manufacture and market a generic version of semaglutide injection in the country. The injection is indicated for chronic weight management in adults and is meant to be used along with a reduced calorie diet and increased physical activity. Sun Pharma will market the product under the brand name Novel Treat and plans to launch it after the expiry of the semaglutide patent in India. The DGCI nod follows the regulator's review of a phase 3 clinical trial conducted in India. Earlier today, we spoke to Nirmal Jain, founder of IIFL Group, about the IIFL tax evasion controversy that surfaced last year in February. The founder says that there has been no evidence of tax evasion whatsoever. Listen in to what he said exactly.
So when the search happened, which happened last year in February, that happens with the suspicion of tax evasion, but the suspicion is not a conclusion. So when they get the documents, data, and they find something immediately, then they make the firm declare, which did not happen in our case. So obviously there was no evidence of a tax evasion at that point in time, which is obvious.
All right, on to our segment from Davos. Our managing editor Tamanna Inamdar spoke to Yezdi, the CEO of KPMG India. Let's take a look at that conversation.
Davos is a place for thought leaders to exchange ideas, and of course the theme this year is the spirit of dialogue. But the biggest question on everyone's mind is how this dialogue will take place in the face of so much uncertainty. This is the one conversation point we have to start with when we're speaking to people, and Yezdi Nagpurwala, the CEO of KPMG, is with us. Yezdi, we're at a very interesting location, and I don't know if you can spot it in our camera. We're outside the USA House, which is at the English Church. And all of the action, the queues outside, all of the action really is about what Trump is going to do, what it means for the world, the USA and Europe talking about fresh tariffs. What does this mean for India? We've seen some impact on the markets, but where does India stand in the middle of all of this?
Hi, Tamanna. Let me just say, to begin with, I'm facing the mountains. So yes, you are right. The entire theme is the spirit of dialogue, and which is the main objective of getting all the business leaders in. And clearly, again, you are right. There is a huge amount of uncertainty prevailing, and especially with events lined up for today. And we'll have to see how they pan out.
No, but coming back to the point of the impact of tariffs, if tariffs do go up, I mean, I don't even know which iteration of the tariff war this is. Is second, third, fourth, 14th? Can't keep count after a point. But if there is an escalation of tariffs between US and Europe, and we don't have our trade deal so far, do you think it now starts to affect and impact Indian businesses, or are we relatively more secure?
So I don't know who has a control on tariffs at the moment. But one thing is clear, and there is a fair degree of recognition on that score as well, that India has to rely on domestic capabilities. It has to rely on domestic consumption, along with, of course, our exports and the rest of the world.
In terms of sectors where you see India really in a sweet spot, and we're speaking ahead of the budget as well, where do you think that growth comes with? Yes, you have the vantage point of looking at a variety of sectors. So you have some of that kind of an overview of where the growth really is coming from.
If you break it down broadly, for us it's services, manufacturing and agriculture. Keeping agriculture aside for a moment, services, definitely, there is a huge focus, and we've got a place in the world as far as talent and services is concerned, and we should continue to hold that. And I say this in light of all the developments we see on AI unfolding, and which will continue to unfold in the next 2 years. I would actually also talk about manufacturing, which has been a focus of the government for the last maybe few years, and that, along with a supply chain focus, will show us results.
And coming back to the point of what we can expect, or what you would hope to see in the union budget this year, considering how precarious the world is and how India can really be resilient.
I would say, without getting into specifics, I'd say we will continue our path of domestic consumption. And you saw a bit of that last year, and that should sustain, and you should see more of that, whether it's in the budget or outside of that. But I think the focus that we have on domestic capabilities will continue.
We've also seen a lot of easing of taxation with the GST, rationalization coming in. I would say more than easing, a lowering of taxes. We have seen, of course, what is done with the income tax, now the labor code. In terms of compliance for businesses, do you think that we're seeing a period of maybe transition, which will be a little painful before the fruits begin to show?
You're right. We are in this phase where, end of the phase, you will see that it's much easier to have a compliant business. The approach is to stay compliant. It's part of ease of doing business. But we are in a phase of transition. If you backtrack a few years, all said and done, after GST, there were things to be sorted out, and those dynamics have all now been sorted out. So you could say we are in the second phase of GST.
Okay. What has been the highlight of your Davos trip so far, Yesti?
It is, I would continue to believe there is dialogue. That happens definitely. India is represented fairly well, and I'm fairly proud of that, being here in Davos. A lot will be unfolded today with the events, but until today it is more around AI, and that is India's sweet spot as well. And one key philosophy or takeaway that I have now started developing is the very fact that India is building physical assets and infrastructure. Parallelly, India is building digital assets and infrastructure. And we are in a unique situation, a unique position in the world where we are building both of them simultaneously. What that means, what the opportunities are, we have yet to see.
I thought you were going to talk about one of the the after parties in Davos, which go on till the late night. That's very much part of what happens in Davos, if you have the energy to keep up. Thank you so much, Yezi. Great to have you here.
Thank you, Tamanna. It's a pleasure being here.
All right, so that was our managing editor Tamanna Inamdar, straight from Davos, talking about how the discussions are going in Davos, and of course everything is about AI going forward. But moving on, NDTV Profit has been traveling across India to capture the mood of industries and people ahead of the union budget, which is to come on 1st of Feb. As a part of our Budget for Bharat series, we reached Indore, the heart of the country's grain market and a major hub for agro-processing. In this bustling ecosystem of mandis, mills and exporters, my colleague Sharad met with one of the region's leading processors, Sri Kailash Grain Mills, to understand the key demand trend shaping up in the sector. Sharad brings us the ground report from Indore.
Hello and welcome to NDTV Profit. We are at Indore and joining us is Pankaj Goyal. He's the Managing Director at Sri Kailash Grain Mills. A very warm welcome to you, and one of the largest players you are in this grain mills industry. Whenever we talk about the grain mills industry, we see about there's going to be a lot of people around, but I'm not seeing a lot of people around. A lot of automations are happening. Just explain us this process. How does this actually happen?
So if I talk about the grain industry, it's really transforming and it needs a lot of transformation. So we are talking about automation, and automation is mainly for consistency, and we are adopting a lot of the global technology.
Right now we are at the starting point of the value chain, I think. How does this process starts working? If you could just explain us.
So cleaning takes place through various equipments. We are removing the dust, we are removing the foreign particles. There are so many things which comes from the farm. And also we are taking so precise things where we are talking about even picking out the color defects in the wheat. So let's say in olden days, हमारी दादी हाथ से गेहूं बिनती थी. So even that is, so that is also happening with the technology where we have a machines who is already sensing the grains with the color.
Are they separating?
So this is the equipment which is separating the grains in terms of colors.
See, this grain has become almost automated. Well, what's the future here?
So I have visited various countries and in terms of wheat processing industries. So over there we are talking about the dark mills. So dark mill is
you spoke about dark mills.
Yes, dark mills.
That means there is no person involved in the factory.
Yes, there is no person involved in the factory. Even the lights are completely off for the power saving, where they are controlling the cost, and the whole industry is being automated to the tune that a person sitting on a computer can operate the industry.
There seems some concerns are still there. Industry is having some kind of headwinds.
Yes, certainly. I am to say, being an agro-based industries, so always there is a lot of risk associated with the climate, and there is a lot of risk associated with the food security. So currently, the government is bringing a lot of policies every now and then, and we find there is a surprise every day. So we get a notification today, the exports are banned tomorrow, there is some stock limit. We have lost one of the very big market we developed in last 5-10 years.
And is this the export market you are talking about?
Yes, this is the export market. So we were one of the global players supplying to a lot of industries across Asia and the other regions. But since 2023, the exports are banned.
What's your budget expectations if you had to put into the government? What would that be?
In India, still the value addition is not as per the mark which is happening in the global standard. So to create this value addition, there is requirement of more stability in terms of a government policy, engaging with stakeholders, especially the industries, to have an outlook of the industry also. Certainly government is doing a great work on balancing the farm side and the consumer side, bringing the price stability. But in this whole game of stabilizing the things, industry is really not able to survive. They're facing a big challenge.
We're talking about the consumer front.
Okay.
That's pretty interesting on that. But to put in perspective, what's so special about Madhya Pradesh and agriculture, especially the wheat front? Over here, I'm hearing a lot of different varieties of wheat. Where is being used? Is it just roti or something more?
So Madhya Pradesh grows very large varieties of wheat. So if you talk about for the chapatis, you have a sharbatis, which are specialized wheat, which is grown for good chapatis. You have a durum wheat, which is used for pasta making, for semolina, for halwa, for upma. You have other varieties of a wheat which are good for bread making.
But Gen Z viewers, they are also very particular about the protein front.
Correct.
They seek protein in anything and everything. So over here, what are the protein related products which everybody wants to know?
So durum wheat is really a rich protein product which is used for making good quality pasta. As compared to the other varieties of wheat which are there in the market, the durum wheat has higher protein levels up to 11.5.
This is Davos, a picturesque Swiss ski town, which for 1 week every January becomes the epicenter of global power and ideas. The conversations here influence policies, markets and industries worldwide. From economic outlook to global priorities, Davos sets the tone for the year ahead. And NDTV Profit will be on the ground. I will be bringing you insights from global investors, market veterans and corporate titans. So don't forget to tune in to NDTV Profit as we decode the decisions that will echo far beyond these mountains.
Motivation is to serve the nation. कितना भी घना जंगल क्यों ना हो, श्रीनगर वैली बोलो या हमारा नॉर्थ ईस्ट में मणिपुर बोलो, उसमें इस प्रकार से बंकर या हाइडआउट बना के मेरे कमांडो ने बर्बाद करता है।
Shaky footage, guys. Apologies for that in advance.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices. It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth agenda.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art.
Hello and welcome. You are watching KYC or Know Your Company. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and put the spotlight on one company that you need to have on your radar today. Before we move on and do all of that, it's important to look at which company are we talking about. It's a very, very hot sector, a very, very hot space right now, and that is the EMS sector as a whole. We're talking about EPAC Durable, a key company in the consumer discretionary space. They are key manufacturers AC, but before we do all of that, a little bit of history about the company. It was incorporated back in 2003, began as a contract manufacturer essentially of consumer durables, which includes AC amongst other key products. Now, when you look at what the company has focused on, has largely been the room air conditioner space, and even post-listing, it was a meaningful part of the company's revenue and margins as well in that aspect. But post that, in 2012, they later transformed into an original design manufacturer. It essentially means that they designed the product for other companies in the AC space like Voltas and Blue Star, and designed the product as well, which is a high margin business. Now, this was of course founded by the Singhania and the Bothra brothers, and we will be speaking to Ajay D.D. Singhania in just a bit. But important to look at, what are the other clients that they focus to. So all the room air conditioner clients like Voltas, Haier, Philips amongst others, Godrej, Daikin, Havels are all the company's clients, and these are just some of them. When you look at the key products though, over the last few years, they have diversified away from air conditioners into large domestic appliances as well as small domestic appliances. The large domestic appliances do include products like washing machines, while small domestic appliances have water purifiers, air coolers, amongst other key products. This has been a key diversifier for the company, and that's very well visible in terms of revenue. Now, it's been a tough year for the company, largely led by a longer period of winter, shorter summer, a bigger monsoon. So AC sales do get impacted, and that's reflected in the 36% downtick that we've seen in the AC revenues. But because of the diversification in appliances as well as the other key segments like components, that has helped the company in somewhat way to reduce the losses. So while the AC segment is down 36% in terms of revenue, the total revenue is down only 15%, led by the high growth for the appliances as well as the component space. And that has been the one key differentiator. Although the key problem is that there have been a key concern on the financials of the company because of this aspect. Over the last few years, AC concentration has been key, but that has impacted the company's margins at this point of time. So when you look at the rating parameters with the funds which we'll be focusing on and diving deep into what's impacted the business, is going to be key because the company's share price is down 49% in this particular time frame, and we'll focus on a lot of that. But income statement, balance sheet, cash flow, return ratios, if you're a regular viewer, you know a bit about this. Shareholding, street cred, valuation, and finally, what do analysts actually make out of EPAC Durable? When you look at the first key parameter, that's income statement. Now, between the 3-year CAGR, if you see, the performance has been quite strong. 33% growth that we've seen just in terms of revenue. The EBITDA margins have also been substantially scaling to 7 to 8%. While FY25 did have a blip, it has been a good year overall on a 33 to 48% growth in terms of a CAGR growth, that is, in terms of revenue and profit. So why the neutral rating? In the last few quarters, it's been a difficult performance for the company, and margins as well as net profit has been impacted just for this specific quarter. Quarter 3 saw 427 crores in terms of revenue, but profits were impacted, and that's been one of the key concerns for EPAC Durable. We have been talking about the impact in terms of margins, but it's also important to look at the balance sheet as well. Now, we've been looking at the long-term borrowing as well as the other key aspect that has increased, and that's visible here. So while the equity portion and the reserves have actually increased going into H1 of FY26 as well, we saw stagnation of this number post FY25. But you look at the borrowing number, that increased and almost doubled from 62 crores to 122 crores at the end of FY25, and the H1 number is just for H1, so that's 33 crores. So there has been an increase in borrowings, and that's because of the increase in working capital. Lower AC sales, it means that the inventory is higher and a lot of money gets locked into that. Hence, the company had to borrow quite a bit to include and transfer into that particular period, while the cash bank level has been quite stable at 44 crores, but from the FY24 level, it has seen a quiet dip as well. And hence, we've given this a thumbs down, and largely on the back of lowering the company's inventory as well as borrowing number is something to talk about. When you look at the third key metric, and that is cash flow, we have been talking about working capital as well as the impact of the business in terms of the cash flow from operations as well. So when you look at the cash flow from operations, it has increased to a highest level of about 257 crores in FY25. There you see the dip to 31 crores in FY26. And this is, of course, in FY25, this was H1 of FY26, we saw the dip. Also, the operating profit, the operating cash flow to PAT is the other key metric. After a huge, humongous increase, that has again come down to 56%, while the net cash flow has also been largely stable. So there are multiple key factors happening here. While some metrics are a positive, the cash flow from operations being impacted is clearly a big negative, but we've given the company a little bit of benefit of the doubt, given it a neutral rating for cash flow as well. The fourth metric though, that's return ratios. Now, for a company the size and scale of EPAC Durable, there has been a pressure on the return ratios, and the story largely was as the company gets bigger, the return ratios will improve. While FY22 was a year we've seen reduction of the return on capital employed over the last few years. With the company's advent into larger appliances as well, the return ratios are expected to improve, but that has yet to materialize. So while it has improved from FY24 to FY25 level, we will have to wait for a couple of years at least to look at a meaningful increase because of these initiatives. So hence, we've given this a neutral rating as well. The other key part is shareholding. It's been largely stable, one where the company has shown immense promise in not selling out at any point. So we've seen some selling between March 24 and 2025, but largely a little bit only at 47.18. Company has been managed to keep it. What's also interesting is the increase in shareholding of retail as well as public investors. It's gone from 32% all the way up to 45%, and shows the company's interest amongst retail investors. As the share price has corrected, that's also one of the key factors that retail investors do sometimes buy the dip, but it's important to keep track of the metric. While domestic investors have steadily reduced their shareholding. Hence, while we have given this a thumbs up rating largely on the back of promoter holding, there is a lot to look at in the changes between public as well as the foreign institutional investors and also the domestic institutional investors as well. When you look at the street cred, that's the other key part. It has been a disappointing picture for investors for EPAC Durable over the last few periods. When you look at the number over the last 1, 3 and 5 months, specifically the stock is down 14% in the last 1 month. It has been under pressure, largely led by what's happening in the particular space as well. But even in the 6-month period, the stock is down 34%, almost down 50% on a year-to-date basis. So that's just in the last 15 to 20 days of January 2026, and down 49% in the last 1 year. So investors have borne the brunt for EPAC Durable as they've held on to this particular counter. 5-year performance has to have some caveat that the company listed in February of 2024 since then has given decent returns, but given the large what has happened in the last 6 months, we've given this a thumbs down for now. When you look at final few metrics as we wrap up into looking at this aspect has been valuations. Now, because of the stock price correction, FY27, the next year of financial year 2027, looks quite appealing in that sense at 30 times price to earnings for an EMS company, that too. While price to earnings is also visible of that, the EPS is expected to be impacted in FY26. Now, last year the company in FY25 did about 5.6 rupees in terms of EPS. Consensus estimates are down to just 3.4 rupees, and hence the higher price to earning metric in FY26 compared to FY22, where hopefully the growth comes back. But because of the share price correction, analysts have, while reduced their target prices, continued to maintain their buy ratings, and that's visible in the calls as well. So they are seeing a return potential of almost 33% as we speak, and hence we're continuing to see that positive momentum, at least from the analysts at this point of time. But it's also important to look at what the company also has to say at this point of time, and we have the management which will join very, very shortly on this aspect. So you have seen that the company's performance has been impacted. Q3 also had a lack of growth in that sense. So it's important to speak to the management as to what they think could be one of the key positive metrics for the company. Before we do that, the final ratings, income statement, cash flow as well as return ratios do get a neutral rating. Balance sheet, the company will have to improve on that aspect, while the other key metrics, if we can pull that up very, very quickly, shareholding is a positive, valuation a neutral in that point. For FY26, we need to look at the growth, while analyst as well as analyst recommendation has been a key positive. So the overall rating we get at 4 out of 8 for EPAC Durable as well. But to discuss in detail about what the company is all about, and we have spoken to Ajay D.D. Singhania in the past, let me welcome the MD and CEO of EPAC Durable at this point of time. Mr. Singhania, very good morning to you, sir, and thanks so much for joining in. It's a real pleasure to talk to you at this point in time, because while Q3 was a tough quarter, you did mention a few positives about you that the company has looked at, and certainly that investors need to watch out for as well. But largely my first question, sir, the last 3 quarters, the first 9 months of FY26, you've managed to do a decent performance. But to start us off with, what is the current picture of inventory on the ground? Have you seen reduction in this particular quarter, and is it coming to a level that's largely normalized, or what is the expectation of normality for inventory over the next few months?
So, good morning. In regards to the inventory normalization, yes, Q1 and Q2, because of the unseasonal rains, we had inventory being piled up both in trade as well as our end not getting manufactured. But thankfully, Q3 we saw the pick, and the inventory movement has definitely started. The order book has been good, and going forward next 6 months onward, the season sets in. So the market is very bullish that the past is behind us, and the tailwinds are still very strong for the industry. So at 15 to 20% kind of a growth is what I've been repeatedly saying is on the cards for the industry for the coming 26 season, and shall continue for next 5 to 6 years definitely. So next medium to long term, definitely the tailwinds are very strong for AC.
Got that, Mr. Singhania. And you highlighted that over the last couple of quarters, it has been that the industry has been impacted largely because of high inventory amongst other key issues. But in the short term, what can be the expectations from quarter 4? Because it is a quarter where a lot of inventory is built in by the AC makers. Is there expectation that that is visible at least to you in the conversations of the first 22 days of January, that quarter 4 could be a decent, at least flattish on a YOY basis? How should we see this?
So quarter 4 definitely we see growth compared to YOY basis. Quarter 3 also has been a growth, and quarter 4 again we see a growth and recover partly whatever was lost in Q1 and Q2. So quarter 4 will definitely be a quarter wherein we'll see a lot of recovery happening, although it will not be possible to recover the entire sales loss. So as a whole, on an annualized basis, we see that the industry is going to witness some shortfall as compared to FY25, but yes, largely recover the loss of the previous 9 months.
The other key aspect, Mr. Singhania, has been that, last quarter 4 of FY25, you did about 650 crores of revenue. Now you are mentioning that you are expecting to seeing some growth at least. So could we expect a low double-digit kind of growth expectation? Now I know you can't pinpoint it, but is there expectation of that at least?
Definitely yes. Definitely yes. So what I'm saying is the loss of the previous 9 months partly is going to get recovered, although the entire sales loss cannot be. But yes, we are looking at a ramp up in Q4 and cover a lot of ground here.
Is the expectation largely that with this, you'll be able to at least have flat revenues for FY26 compared to FY25? Because it's a big number that you're aiming in quarter 4 of FY26. You are aiming for almost 700 to 800 crores of revenues. You did about 650 in the in quarter 4 last year. So is that the expectations from you as well? And what could be for margins as well, if I can slip that question in as well?
Yeah. So broadly, yes, the guidance is that we are looking at the number you just mentioned. So recover a lot of lost ground on the AC, as well as our other levers are firing very well. So for us, the small and large domestic appliances component business is something which is helping us cover a lot of lost sales. And the 3 new diversified segments for us, the LDA, SDA and components are growing at multifold. So that's what we see as the growth lever going forward as well.
If you can also talk about, in terms of parts, because we've seen for AC specifically, you have diversified into newer segments as well, and that's very visible in the components growth for you. But before that, has there been increase of raw materials because of copper amongst others? How are you navigating that challenge?
So overall, if we look at the AC prices, there has been correction on 2 fronts for the coming quarter, and definitely the street, I believe the brands are going to increase the prices or have already increased the prices. So it's on 2 counts. One is the upgradation in the BE norm. So that's like the previous 5-star becomes a 4-star and a 3-star becomes a 2-star. So there is upgradation because of the price correction because of that, which broadly like 4 to 5% kind of a price correction. And then another 4 to 5% is the price correction because of the commodities, what was done in the last quarter. So overall, we see close to 10% price correction in AC. And any further impact of commodity definitely gets passed on in the next quarter.
Also, Mr. Singhania, one of the biggest developments that happened in the industry has been the ECMS scheme that has come in. Now, we've already seen a few companies get into PCB manufacturing and get approvals as well for it. What has been EPAC's plan for ECMS? Have you already applied and are awaiting approval right now?
Yeah, so we have floated a separate subsidiary company called Bumjin Audio Products Limited, wherein we are targeting to manufacture a lot of audio parts, components, sound bars. So that's a part of our application under the ECMS scheme. And the structural approval has already been there, and now we are filing for the further complete plan and everything.
Mr. Singhania, if you can talk a little bit about your subsidiary, as you mentioned, is that largely into audio, or is this something specific to ACs as well? If I can just harp on that a little bit, is it also into PCB manufacturing, or that's not included in that?
So PCB is currently under our current company portfolio. So we already do PCB as an EMS. We make controllers and supplies the component. The specific subsidiary we're talking about, Bumjin Audio Products, is a JV with a Korean company called Bumjin. And they specialize in making audio components and sound bars, TV speakers, Bluetooth speakers, and all these things. So we are under currently planned to start manufacturing by the end of 26 or probably Q4 of 27 and start selling these products in India market.
So is there any plans of venturing for ECMS specifically into a new facility for PCB manufacturing? Is that something that you will take it as time comes? Because at this point of time, we've already seen approvals come in also for a few companies. So what is the expectations for EPAC specifically going into ECMS via your PCB manufacturing?
So PCB manufacturing is what we already do under our current facility.
So is there another level of capex that we could expect from you to increase capacity? Because and we've spoken to you previously on this, that India is still very deficient in terms of a lot of parts that go into both for ACs as well as for other related electronic products. So the opportunity is quite huge in PCBs, right? So is that something that you've thought about, and any rationale of not going into it as of now, currently as we speak?
So we currently do a PCB assembly, so not the bare board, but we do the entire component, the controllers. And as we scale up our operations, definitely we'll start doing more of PCBs in-house. So currently we do for air conditions and our small domestic appliances. Going forward, definitely yes. So the expansion and backward integration would continue, and scale up will happen as and when required. So that's something definitely a focus sector as our component business is increasing. Investments in PCB controllers, the assembly lines will continue to be ramped up under the current facility itself.
The other thing, Mr. Singhania, has been your advent into your LDAs, SDAs, as well as components. Is the expectation that all three of those specifically will have roughly around 30 to 35% of your revenue in FY27?
Probably more than that. So we continue to grow in AC more than the market. So if the market grows at 15-20%, definitely we will outgrow the market. But at the same time, we believe that our SD and LD and as well as the components have potential to grow multifold. And in a medium to short term, we are looking that our ACs, like current year, it has come down to almost 60%. We will try to maintain it 50-55% and outgrow our other sectors like the SD, LD and components. So that should overall contribute to almost close to 45-50% in 27-28.
Now, Mr. Singhania, just a couple of key updates, and you've spoken about this to us in the past. The one is on Hisense. It's a big project for you. You mentioned that almost 8,000 crores of revenues could be accrued over 5 years once the project starts. So the earlier expectation was that project would start in December 2025. You've now said March of 2026. Is that timeline on as we speak?
Yeah, definitely that we are on bang on timeline. So we had maintained earlier that December is the timeline where we're looking to start the trial productions. The trial productions have been successfully completed. We have got all the approvals in place, and coming the current quarter, which is Q4, we are looking at to ramp up productions. So everything is on time. And our ODM sales to Hisense for the AC has already started since last year. And now the Hisense designed product is what is going to get manufactured in the new facility, the new greenfield facility. The facility is ready. The trials are done. Everything is online, on track. And this quarter, probably next month, is when we are contemplating that the mass production will start.
Mr. Singhania, what would be the products that would come out first out of this? Because apart from ACs, there are other related products with Hisense as well. So what would be in just for FY27, if we can talk about in that year, what is the expectation of the products to start with?
So the new facility, the greenfield facility, we are starting the Hisense designed air conditions, which are a complete tech transfer from China in the next month. And then going forward, washing machines, both top load and front load, are going to start within this calendar year 26 itself.
The other aspect, Mr. Singhania, has been on washing machines. Now, that has been a product that's been with you over the last 3 to 4 quarters, but probably what's happening on the street is that the accretion that was expected compared to other EMS players, and unfortunately you are in an industry of comparison, has been one of the key focal points for investors. So for washing machines specifically, while you mentioned about large domestic appliances being a key growth area along with the other two segments, specifically for washing machines, is there any revenue targets that you can give us over FY27?
So the good news I'd like to share here is for the washing machines, definitely, yes, there was some delay in getting the approvals from the customers, but now that is all behind us. From Q4, we have already onboarded, got the approvals for 2 marquee clients, and the production has already started and ramped up in the current quarter. And we see significant quantities and revenue targets. We will definitely revise upward when we do the earnings call for the next for the final annual results. So that's something I'm repeatedly saying that LDA is one segment which we see will grow at a much rapid pace.
And so Mr. Singhania, you've given us a breaking news at least on the show today. You've given us something that you've not said anywhere before. So I'll take it with both hands. The other aspect of the smaller domestic appliances as well, the expectations that while it is a higher margin business, because of the prices of those products being so low, it's a big volume game, and it's something that's while you have been an ODM player, you've always been a technology player as well. So the volume game hasn't been one which you've fought with other players. With SDA, that strategy changes a little bit. So any rationale that you can give us in terms of entering that hyper competitive space, and what you make of it?
So our competitive strength here is our, like you rightly said, the scale and maintaining the leadership position in the appliances, the large appliances like ACs and washing machines. Definitely we see will take leadership role in next 2 to 3 years. For small domestic appliances, I think the code we have cracked is not about volumes alone. We want to also increase the width and the basket of offerings. So we have a roadmap wherein we are going to introduce a new product, almost 1 to 2 new products every quarter, and increase the basket of offerings. Because that not only helps us cater to the versatile demand of the customer, but also kind of balance the seasonality and balance our quarterly revenues. So the whole idea of what we have been working on is to have uniform continuous revenue stream every quarter.
Well, Mr. Singhania, you've been very, very honest and upfront to us about a whole host of issues that you are trying to track, but appreciate your time here on NDTV Profit. We wish you the best. Hopefully speak to you once you'll speak to us again when Hissen starts production in March. So a lot more talking, a lot more numbers at that time. But thank you and appreciate your time here at NDTV Profit.
Thank you so much. Thanks a lot.
Well, that's largely, on EPAC Durable specifically, a key company in the ECMS space. In the EMS space specifically, looking to enter ECMS as well. But that's all the time we have on KYC. Stay tuned. A lot more action on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
तेरा ये बिजनेस एक मास्टर स्ट्रोक है यार, है ना? पर मुझे लोन कौन देगा यार?
बैंक ऑफ बड़ौदा देगा तुम्हें MSME लोन। बॉब डिजी उद्यम के साथ 100% डिजिटल प्रोसेस, अप्रूवल इन मिनट्स। बैंक ऑफ बड़ौदा से MSME लोन लेना भी एक मास्टर स्ट्रोक है।
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of the conversation. And this year, Suzlon, a leading global renewable energy company powering a greener tomorrow, comes on board with us as we spotlight ideas shaping a sustainable and innovative future. Suzlon co-presents NDTV Ignite at Davos. Your access to the world's thinking room only on NDTV network.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
A new era in luxury living. A celebration like never before.
This is going to be shaky footage, guys. Look these for that in the back.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
After Delhi and Hyderabad teed off in style, the NDTV PGTI Golf Pro-Am now travels to Mumbai, where business leaders and professionals will connect and compete, charged with excitement and energy on one of the country's most storied courses. NDTV PGTI Golf Pro-Am, the course of champions, the conversation of leaders, 23rd January 2026, Mumbai.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices. It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets.
India is the fastest growing economy in the world, has been for a while. But what does that mean for a non-resident Indian? 2025 has not been the best year for markets. Well, not here. The rest of the world has been just fine. But the long-term wealth creation and more importantly, the return potential for India is up there. The question is, should an NRI dedicate a large portion of their investment corpus to India? And if so, what should they bear in mind about portfolio construction, about taxes, and the rules related to repatriation? That is, in the event that they don't intend to come back to India. There are some places where you even get taxed at 0%. Joining me on this episode of MoneyWise is Shalini Sekhri, the Chief Executive Officer of Renaissance Investment Managers. Shalini, welcome back to the show.
Thanks so much, Alex. Always fun to be here. Thanks for having me.
And this is right down your alley. In the past, we've spoken about, retirement, and we've spoken about certain other aspects and inheritance and various other things. But today, I'd like to ask you, you're speaking to a lot of people who invest from outside into India. Is India currently a hard sell for you?
So, Alex, India continues to be one of the most exciting economies in the world. And as you know, markets follow economies. We are in a phase that we call the economic miracle. So I don't know if you've heard that. But it took us, 65 years to add the first 4 trillion of economic output, what we call GDP. And all reports suggest that we will add another 4 trillion, doubling from here in just 7 years. These phases come maybe once in a century in a country's history. And I think we are blessed to be alive at this time and to actually be seeing all of this play out. We all know that India is today the 4th largest economy. In spite of that, we are barely about 3.5% of the world's GDP as we speak. I think in under 10 years, that number would go to 7%. We would be a 10 trillion GDP economy. So I think these 15, 20 years are what we all call the golden years of the economy. And I think the bigger risk today is to not be in India rather than to be in India. As we know, stock markets do follow the economy. And if you look at the numbers, they've actually been stunning. So the last, say, 20 years, 10 years, 5 years, anywhere between 13 to 15% annualized GDP, annualized return at just a Nifty 50 level. We're just talking about the index. So when you kind of look at that, I think it makes us the second most large economy with those kind of returns after just the US. So for any international investor, whether a non-resident Indian or even a global investor, honestly, there's no getting away from India. So while there will be a lot of short-term noise, for the first time in history, we've been both in a physical as in a geopolitical war all around the world and an economic war. So when the largest country in the world unleashes trade wars on every country in the world, it is an economic war. So this confluence, I think we've probably not seen since the Second World War.
Yes.
So while there will be all of these noises, we all know that the best time really to start your investments is when you get these very brief opportunities in time to really, enter at the right point. And as we were discussing, smart money or the knowledgeable investor is really taking the bull by the horns, and we do continue to see that money flow in. Maybe the more retail investor is still trying to be a bit cautious, but as they say, you invest when others are fearful, and that's when you really make good money.
Okay, that's well answered. And even if it is a hard sell, I think you're doing a pretty good job, Shalini. So let me ask you this then. And before we get into portfolio construction and what you're talking to your clients about, when you are a non-resident Indian, I suppose what you're thinking about is what you need the funds for. Of course, you need it for what everybody else needs it. But are you going to take the money out eventually, or are you going to keep it in and move back to India? Is that something that you say is the first thing that you think about?
Sure. So portfolio investing can happen whether you intend to move back to India or not, right?
Okay.
So I think that all options are possible. But when you look at investing in India for NRIs, I would say as important as the product basket is really for them to understand how you route your capital, right? How repatriable will it be? How do you avoid tax leakages? And how is this going to compound in the long term?
Okay.
So I would say this is an equally critical part of it. And then obviously your decision on where to invest will get colored by, do you eventually want this money in India, to come back home when you retire? Or do you want to take all of this back out and have the money, freely moving between countries?
So let's look at each of these, because you talked about, and I hope I remember correctly, you're talking about the route, you're talking about repatriability, and you're talking about tax leakages, right?
That's right.
So let's talk about each one of these three issues so that everyone's on the same page. When you talk about routing of the money, you're talking about how you deploy money in India. How do you deploy money in India?
Sure. So there are two basic types of bank accounts that you would set up in terms of the infrastructure you require to really invest in India, right? One is the non-resident external account, or what we call an NRE account. This would be for money that you have not earned in India. So any money where the source of funds, which has been earned outside India, is freely repatriable. So ideally, you need to set up an NRE account in India, bring money in there from wherever in the world you have that money. You can invest it. And in most instances, the principal plus the return can be freely taken out because this money to begin with was not earned in India.
You said in most cases, are there restrictions?
There are, for example, in rental income, the rent, because it's earned in India, though your original purchase of the house might have been from, money earned overseas, the rent has to come into an NRO account.
Okay.
So the other kind of account being a non-resident ordinary account. This is for income earned in India. So you might have, say, sold shares in India, you might have received an inheritance, you might receive rent.
So what about
from
dividend income?
So dividend income on shares that you have here would come into an NRO account.
Interesting. Okay.
Yeah.
Okay. So go ahead. So you have to create this NRE account, but you also have to have an NRO account.
That's
if
right.
you're earning, and so if you're, I would guess if you're earning through mutual funds, you would generally not suggest a dividend option. You would choose to have it as a growth option in most situations.
So there are other interesting exceptions, right? So NRIs, for example, if they have NRO money in India, which is invested here, the dividend and interest part is freely repatriable.
Oh, interesting.
There's no cap. Otherwise, as you know, for even NRIs to take money out, there is a, liberalized remittance scheme limit, which is $1 million a year, right? But this does not count under that limit. So which means that if you earned a dividend or an interest income, you can take it out from shares.
Sure.
Or, a fixed deposit interest, for example. So there are all some of these textures to, some of the underlying. But largely, I would say the broad rule is if you have earned this money outside and brought it into India, into an NRE account, you can take it out freely. Alternately, you've earned it in India and it needs to stay in an NRO account and it's for your use in India.
Okay, so this is routing. Where does GIFT come into play?
So GIFT is a big subject. So this is a new concept that was set up a few years ago, right? Basically to rival the great financial centers of the world like Dubai, Hong Kong, Singapore. So what the government of India has done is it has set up something called GIFT, basically stands for Gujarat International Finance Tech City.
Yeah.
It is
GIFT is easier.
Yeah, it is. It's set up as a free trade zone, so to say, for financial services, which means that while it is in Gujarat, India, and within the borders of the land, it is treated as an international or a foreign jurisdiction. And it has its own rules and regulations, and they have tried to make it extremely attractive from a taxation and an ease of doing business for NRIs and other foreigners as well to come into India and invest in India. Similarly, Indians can use this route to also invest internationally. So GIFT City is another place that you can use, and taxation is an incredible benefit if you use the GIFT route, and we should talk a bit about that.
We will eventually, but so in terms of routing though?
So routing, clients can set up a multi-currency bank account in GIFT City. So there are all the large banks, including ICICI, HDFC, all of these that are today present there. You can open a bank account there, and you can bring your money into a GIFT City bank account. This is again fully repatriable. There are pretty much no restrictions because in a way it's not in India, right? By its, conceptually. So that becomes again very easy for clients to move money in and out. And all the large broking houses, asset management companies, mutual fund houses have set up operations there. So you can really access a very wide range of products by using the GIFT City route. One is to bring money, but then also have access to investment products.
Okay, so therefore, is there anything else that somebody should know about routing money into India? If you have the option, should you opt for GIFT as opposed to a traditional route?
So it really depends on what you're buying and whether those options are available currently as we speak in GIFT. So that's number one. Secondly, it also depends on whether you eventually do want to move back to India, in which case you may be fine using the NRE route, because then you've already established a banking relationship in India. You get to know your bankers, you start building a corpus there. So to that extent, I would say if you're unlikely to return to India, GIFT would be the logical choice. If you do intend to move back, then I guess it really depends. India and an NRE account may also make sense. But I think from a tax benefit perspective that investors are currently enjoying, GIFT may still make sense. You can eventually still bring the money to India, right? From
Interesting.
GIFT. Yeah.
Moving to the second point which you made, which was repatriation, and you've already spelled out the fact that a lot of the money that you invest from outside in can be repatriated fairly easily. Is there anything else that somebody needs to bear in mind? Are there off cases that you need to pay attention to? And two, if you do decide to move back to India, when you do, is there a process for you to follow to move those monies outside of the NRE into a normal account?
So eventually, to take your second question first, the NRE accounts or an NRO account eventually will get converted to a resident India account, right? So eventually, your status, once you come back, one of the first things you do is really to fix your KYC, because you would now have a resident Indian address as opposed to an overseas address. Your bank account status needs to change. So all of those processes have to be, gone through eventually. And the same account tends to morph into the resident Indian status. So that's all easily done, via the banker. In terms of routing, I would say I think we've pretty much covered everything. Clients, of course, will also have to kind of take advice, I would say, from their advisors back home. Are there any complexities in terms of, so while we do talk about, say, preferential taxation, very often in spite of having a double taxation avoidance treaty, because the rates of tax are different in different countries, the investor back home may still be liable, say, to some taxes. So he may decide whether he wants to route the money back, he wants to leave it in India. So all of those will come into play, because there are a lot of countries where tax rates are significantly higher than what we have for, say, capital gains in India, right? And they would need to pay that differential tax back home. So
because you speak about it from the perspective of a Dubai or the the UAE, and you say that, oh, it's 0% there, so it's a big benefit. But the opposite is also true. You could have situations where long-term capital gains is more than 12.5%.
There certainly are many, many countries where it's much higher, in excess of 30-40%.
Wow.
Yeah. So that's something also the investor needs to keep in mind, that where does it make sense for him to hold this money? And especially when investors are planning to move back to India, it's a lot of decisions around where you want to crystallize your capital gains. Is it beneficial to do it when you're still a resident of your current country, or is it better to then change your status and then, create your capital gains? So this is a very, tax is a complex subject. It depends on where you live and, all of that. So
well, the beauty of these investments, of course, is that you can pay tax whenever you do redeem, and there's nobody holding a gun to your head, hopefully, and asking you to redeem. But so we've kind of covered the tax aspect as well. Do you want to talk about the gift city angle here with regard to the tax aspect?
Sure. So there would be, I would say, 4 or 5 key parameters where there are differences between coming into rupee products in India onshore versus investing through gift city. And I would say the big game changer is that capital gains tax, if those funds are registered as what's called a specified fund under a certain income tax regulation, is subject to 0% capital gains tax. So let's take an example of, say, a Dubai investor in this case, right? So he invests in a mutual fund through a fund of fund structure in, say, gift city, and that fund does only one thing: it buys units of an Indian mutual fund. Now, because of the tax breaks or the tax advantage given, when an investor redeems his units in, say, gift city, there'll be no tax on the Indian end because there's no TDS for gift city. And gift city has no tax, and Dubai has no tax.
Right.
So you've used a mutual fund vehicle, you've used the gift city benefit, and the fact that you're from Dubai or Singapore, Hong Kong, these are countries where there's no capital gains tax. In effect, you've had a zero tax capital gains investment.
Wow.
Which is really, huge. So that's on the short-term and long-term capital gains taxation. The other big benefit is that in gift city, there is no tax deducted at source. So for non-resident Indians, one of the big disadvantages is that whatever is the tax payable, which can be as high as 30% when you redeem a debt fund, it's all deducted at source.
Right.
And then if you have to claim it back, you have to go through the whole, tax process of claiming refunds.
Yeah.
Gift city, there is no TDS, which means you're then just subject to whatever is the tax in your own home country. So if it's a rate that's better than what it is in, say, India, you have this huge benefit that your money is not held back at source. Right? So that's a second huge benefit. Thirdly, there is no GST in gift city.
Okay.
Which means that all your management fees that you are paying to managers like us do not attract that 18%, GST, right?
Okay, which is a considerable saving.
Which is a saving. And then there's also the STT, which is a transaction tax every time you buy and sell an equity share, which does not exist in gift city.
So there are several considerable...
So there are several benefits which have been given because the government is obviously trying to promote gift city. They are wooing actively, Indian fund managers who are based in, say, a Mauritius or a Cayman, all these traditional places to come to gift.
So one of the aspects and the reason why perhaps the government is doing this is because it wants that foreign capital to come through, right?
Absolutely.
It wants dollars to come through.
Yes.
And so therefore it's important to talk about currency as well.
Yeah.
We're speaking at a time, Shalini, when the rupee has been facing a spate of terrible weakness. And this is a sign of the times. The external scenario is uncertain.
Sure.
Tariffs and the threat of tariffs exists. And so with that context, the rupee has slid, but it also means that a foreign investor investing in India has lost out to a certain extent. Is that something to bear in mind, considering that with inflation where it is, and of course last year is an aberration, or the current scenario is an aberration, but if it hovers around that 4.5% level, at some point there is going to be rupee depreciation, so you'd have to shave that off of what you're earning, right?
Off your return. So about 3.5% has been the long-term rupee to dollar depreciation, right? And I think most international investors do keep in mind that that is going to be a leakage on the return. And in spite of that, the kind of returns that you see in India is so compelling that that still makes a lot of sense. a lot of people do ask us that why don't you hedge the currency risk, right? And the simple answer to that is that the cost of hedging is so high, and that's a fixed cost. It's not open to interpretation. Is higher than actually the average depreciation of long-term depreciation. So you're taking that hit, which may be much higher than what the actual currency depreciation might be. So if we as active fund managers in India are telling our investors that you should expect 15 to 20% rupee return post fees, for a NRI investor who's looking at this depreciation, he would probably expect something like a 12 to 15% return, right? The other thing to keep in mind, Alex, is that we've already had a very sharp currency move recently, right? So we keep telling our investors who are looking to invest now that a big move is already behind you. So from a perspective of building a new portfolio, looking to taking exposure to India now, it's potentially a very good time because we're not expecting such a sharp.
You want to drive home that point because Shalini, you spoke about 3.5% per year.
Yeah.
But as we know, the currency markets, like the equity markets, do not move in a linear fashion. You're talking about over a period of time, and there are spates of time or periods of time concentrated usually where there is a sharp move, as we've seen in 2025 and so far in 2026. Right?
That's
So it might actually move the other way for a bit, which is a significant positive.
Yeah, that's true. So assuming that a trade deal comes through or we have some kind of these positive signals, it's entirely possible that the currency might even strengthen briefly. But we do know over the long term, it's a slowly depreciating currency. But from the perspective that we've already had that sharp move, as you know, we've depreciated, I think, over 6% last year.
Yeah.
Which
and
means
further,
that, and we're continuing to see that.